Good morning. Good evening.
Good morning, guys.
How's it going? Happy Monday. Is it the first full week of trading, or was last week already full week? No, last week was already full week, right?
I'd call this week probably more the full week.
Yeah.
Because I guess more people are sort of back to the desk. That first week's always still a bit, here, there. So
Yeah.
I think this is probably the main week that most people have actually turned up.
I think so too.
Across the globe.
I think
that way.
Yeah. And what a week to start it, right? Gold new all-time high. This couldn't be crazier. And I dared to look at silver this morning as well, which
don't even get me started.
Oh
right?
my God. I had to remember us talking about these ETF double shorts, or what was it, last week on the stream. You remember that? And I hope, I don't remember exactly who it was who bought those. Was that you, unbiased trader? I don't remember. Ooh, I hope that you are in there for the long, or you're having a long breath. Sorry to see that. I actually really thought very hard about buying those two last week after our stream, but I was kind of like, oh no, it feels like, I'm kind of trying to stop a rocket with a nuclear thruster underneath.
Yeah, exactly that. It's like trying to push against an asteroid with.
Yeah, exactly. That's it.
But I don't think you're going to push the asteroid out. I think you got to either blow it up or come in with some Star Trek type technology now.
It's crazy. We need the Q continuum or something.
Yeah. I think like we were saying last time, don't try and stand in front of the freight train whilst it's still the bull is still running wild in the stadium.
Yeah.
So there will come a time, just like we had the dip with gold and it came off, but we're not there yet. So the same way when we cracked that 4K, it wasn't quite there, but then we did get the signals where it's like, okay, we're firmly there. Silver, more to go, I think.
It looks like it. Yeah. And I'm for sure going to miss the top again there, for sure. But Then on another note, we had this morning, I stumbled about something called the trifecta. You saw me posting on our WhatsApp group, meaning if the first 5 days of January are positive ones on the stock markets, there is an 83% chance that the whole year will be a positive one. And I just briefly looked into this a little bit because, as always, with those old-fashioned sayings about stock markets, it's like you want to really look in the detail. And I noticed like this was certainly true in the past, but if you look at the last 25 years, it's a bit like and it only occurred like on 42 or 43 occurrences, so that's not really statistically significant, but nonetheless, I know that's exactly what some traders out there are looking at, and kind of feels good to give us a positive vibe. Although I would prefer, when it comes to risk on assets, the negative vibe at the moment, so I can start reinvesting again. But that's just on my behalf. Are you already in anything this morning, trading wise?
Not this morning, not so far. I've been house hunting all day, so I haven't had a chance to look at charts. Unfortunately, I've been going to open houses and all that kind of stuff, looking for a new place. So I haven't quite had the chance to. But I will say, very interesting with that, because like we were talking last week, I wasn't sure of sticking with my Q3, Q4 sort of expectation that came up for stocks going into the new year. I think I am going to stick with it.
I was a bit surprised last week that you kind of turned a little bit more bearish. I haven't seen that from you yet.
Yeah, well, I mean, I never like take a firm position. You never marry a position, right?
Oh, of course not. No.
Never get romantic. So, but I couldn't see the same way that when everything was saying it was going to be terrible, I couldn't see anything that would really actually make it terrible. Now, the next thing though, with that, you always need the follow-up, the actual participation to confirm that. And I felt there was a slight lack of engagement with that, almost somewhat similar to how we had a lot of positivity in crypto, as an example, in Bitcoin, and then it didn't really follow through. And then so that's always when you have to obviously be willing to, call yourself, am I wrong? Am I incorrect? Have I missed something here? Or maybe it's true, but there's just not quite the level of confidence to pump that degree of capital to actually go to the next level. I think though, as I've looked at all the companies in the S&P 500, overheads, costs, everything is still it's run off and it's stayed lower. Right now, people are attributing that to, as we talked about, with the inflation type thing, with trade tariffs, the backlog of inventories, and that's why we aren't seeing those extra costs. But it seems they've done a good job of clearing headcount, not overhiring. Like there was a lot of this cutting and getting debt into good order after COVID because they were kind of forced to, and then profits have actually risen and kept rising. And right now, the consumer is actually being pretty reasonable with it. So I was looking for every reason to stick with that and delete my position of S&P, NASDAQ running higher, but I can't properly find one right now.
Yeah. So, I tend to agree with you. I'm also surprised, especially by those first days, because I still, if I quote myself from one of the last streams last year, I said probably first days of January are not going to be so terribly good one because of the window dressing effect towards the year end. But we are continuing where we basically left off in 2025. Plus, we are doing this in an environment which traditionally couldn't be more risk off. What could be more risk off than this? The next step would be like total warfare, throughout the world. And it's like, I always feel like there's something around the corner that's going to spoil the party. And the obvious things can be always something Trump related, of course. But yeah, I don't... I cannot pinpoint it because really, once again, we have to say, especially the US economy is very resilient. In contrast to what we're seeing, for example, especially here in Germany, where we have much, much more difficulties. But it's like one thing the Americans are good at, right? They are like the type of mentality, okay, let's get to work and let's deal with it. And whereas here in Germany, people are more like, complain. And then it takes a while until they realize it's not going to make the problem go away. So I have to see. I'm still not that convinced. I still stick to my hypothesis that this year is going to be more of a sideways year. But if not, well, then I need to start investing maybe on a monthly basis again in risk-on assets, but not in Bitcoin at the moment. So Bitcoin really is up for me October, November to investing in. I'm kind of sick and also about trading cryptocurrency markets a little bit because it's like you have those beautiful strategies that work very well for a time. And then I looked actually into the data, and then I suddenly noticed as soon as I have like 3-4 months of winning trades, my trades executions on most brokerages get worse and worse, which is a sign that they put artificial slippage on it. They don't want me to win, because they stand on the other side of a trade. So I'm really considering at the moment to like fully focus on the so-called legacy markets again.
Or have you looked at just trading crypto through a more traditional brokerage rather than like a crypto broker?
Yes,
obviously,
I have.
There's swaps and some of these other.
That's the thing. It's not even about spreads so much. You can find good solution for that, but they have like crazy swaps where you lose like $30, $50 per Bitcoin in overnight financing. You cannot do that except you want to like crazy intraday scalp, which I'm not doing in crypto. But I have to see like, you have to stick with the big guy out there, Binance. To name it, which is also it always feels like, do I want to put all my money on one horse and then witness something like a second FTX?
I know exactly what you're saying, and because it's not like they haven't had their sort of controversies as well.
Exactly,
but just how it played through, they got by, right? And obviously they didn't necessarily have the sort of cross brokerage stuff with the side head, whatever. So, but they were very similar. Like everyone was playing that same game at the time. So, interesting. I think the other thing with as far as stocks at S&P, NASDAQ, that kind of stuff are continuing to run is that some of the recent data that we've had seeing with the ISMs and the PMIs, that was the other portion that I was saying all through last year, that they've been in the doldrums for one of the longest periods of all history.
Yeah.
Consecutively. And they should start to rise through here. And we are actually seeing that come through. So I think it will be on the back of that extra tangential data that will start to lift confidence in the US economy overall. And then also coming back to what you were saying with the number of risk elements we have on the board right now, it feels very much like, to me, one of those trades, same when you have a currency, it might be euro, dollar, Aussie dollar, take your pick, right? And when it has every reason to continue rising or go up and it just can't, that's a huge bearish signal.
Yeah, absolutely.
Despite everything's great, you sell that thing right away.
It's the thing, sell buy the rumor, sell the news, actually. And remember when the Bitcoin spot ETFs were launched, everybody was so crazy. We had this new all-time high even before the halving, which never happened before. And everybody was super, super duper bullish. And then, it was the perfect example really of selling the news. Of course, later on we went up again, but a lot of people kind of lost their interest after that in Bitcoin. And it's always like this. Once the news is out, once the rumor becomes the news, it's time to go away and take your chips off the table. I'm seeing here, right?
I was just going to, so final thing on that, I think we have basically the opposite of that with stocks and with the overall risk on element right now. Because like even stuff on Friday, that's the other thing we have to talk about today with the DOJ and the Fed, right? And Jerome Powell. No one cares, right? Like
it's crazy.
There's nothing. This was the whole thing for all of last year that everyone was freaking out about. Fed independence and something more in depth being pushed on by Trump. I think this is the sort of peak of what you can get. This is the actual attempt, and we still need the new Fed chairman to be announced. And markets are they're very sanguine. They're very like oh well. It's another day in the life of Trump presidency, so what's going to stop it at this point? Like you said, other than, like a hot war type thing. So
we've become so adjusted to crazy, and to nonsense.
Yeah. It's weird. It's almost like coming out of, it's another one of those like Twilight Zone things, just like when we had COVID and everything was like thrown out of whack. And then everyone just kind of got used to weird, and then it just becomes normal. And then for markets, to be honest, it's quite good. So there we are.
It is. I mean, and this is our job as traders, as investors. We cannot force our wishful thinking to the boys, our wishful thinking on the markets. We have to adapt to reality, even if we don't like it. And it's like last thing I want to say about this. I don't want to bore you guys to death. Also with like anecdotes. There's like this one German, pretty popular finance-related channel on YouTube. I'm not going to say the name now. And they are like always negative. They like everything financial related. It's all scam, cannot be anymore, blah, blah. And they have done this for 10 years. They have like hundreds of thousands of subscribers. And the comments underneath are always, yeah, you're right. But I'm like, I say, like, even if they are right, it doesn't do anything for them, You're still going to be left behind. I don't understand, like, there's like so much between I'm going to be 100% in cash, I'm going to be 100% risk on. This is what you build a portfolio for. So you kind of adapt it, of course, to your risk appetite, can be like still in the game if you're wrong. But it's again, it's like very, very typical German. We have somebody who probably took the great offer the Fiverr set for the 2.5 high stakes account, and at your first profit with your dollar longs. Congratulations.
Nice, very good.
Trade this morning, yeah.
That's super. But yeah, that reminds me of Zero Hedge. as well.
Yeah, exactly. That would
Yeah,
be the equivalent for English-speaking countries, zero hedge. Yeah. Although
yeah.
when I was like 10 years ago, I super liked to read it.
I was about to say they used to be good pre-COVID,
Yeah.
and then they sort of got shut down, and then it got kind of weird. It got a bit too extra. It went away from like, oh, okay, this is actually decent research and
Yeah.
reporting, and it might be a slight negative or pessimistic view, but now it's kind of it's full like doomer, like everything's
Yeah.
done every
Which is
second.
okay. I think kind of, I mean, I see that with myself. The longer I do that, I tend to have a pessimistic view on the markets. I have to
Yeah,
force myself to very often accept the narrative like, okay, I might be pessimistic, but hey, there's so much liquidity, it has to go somewhere. So I'm
yeah,
probably going to be wrong. Stick to the facts, stick to the data, not stick to your opinion.
yeah,
I mean, over and over learned this as a hard lesson again. And but yeah, everybody has to go through that. I
yeah.
think.
'Cause I used to use it as a very good contrarian outlook because it was slightly dimmer, but they did pull up certain bits of data where you're like, oh, that's actually something to think about.
Yeah,
But now I look at it, it's too hyperbolic. I don't get it because it's kind of a niche thing anyway. I don't
it's
know. It's
clickbait.
almost like they're trying to compete in that rage bait attention thing.
Yeah,
I'm not sure what happened.
and maybe a lot of those kind of semi-serious channels out there. I think they
Yeah,
kind of jumped on this Wall Street bets hype train, because they saw like
yeah,
how much attention this gets. If like you say, you go hyperbolic, and um, some social media manager probably said like, oh, if you want to get good SEO stats, you need to do something like this. Yeah, when in reality, there are
very
more than enough
frustrating.
examples for other channels that do on the surface very boring stuff, but if you really concentrate and decipher it, it's like really valuable information.
Yeah, it's quality and actionable versus just noise and having a tantrum over things versus at the end of the day we're here to make money, not
Yeah,
just economists might like it, they can talk rubbish about anything all
yeah,
day, but we're traders, we're here to actually
exactly.
execute. So
Economists make the worst traders in the world.
yeah,
That's why they're called
but
analysts.
yeah, exactly, but that's their job, just to talk, not to
Yeah,
actually
just the talk, of course.
they're there for that I don't know, marketing whatever thing, not to actually execute. So anyway,
Empress asking, will gold come back to fill the gap for 512 to 25, or is it too late? The rally on a no news day looks crazy. It's just, the latter, geopolitics. I tend to agree with that. If we look at gold, it's really driven by geopolitics, in my opinion. So it's kind of the mixture, of like, I want a risk-off asset, but I want still a risk-off asset which kind of behaves as a risk-on asset. This weird spot gold has been in for a couple of years. Like the expression of, it's a bit shaky out there.
yeah,
Nobody's too sure, so they need gold. And then kind of over time now, it has become a self-fulfilling prophecy, in my opinion. So when it comes to gold, I would never bet on gap closing. Like I said many, many times before now, really, I've been sticking to this strategy for a while now, and I don't want to repeat this every week, but I know we have new viewers, of course, every week as well. Once we go down into this area of this 8-week simple moving average, all the bull market support bands down here, well, buy there. Do something like a 1-to-2 or 1-to-3 risk reward ratio, and usually you will earn money with that until the whole thing flips, of course, which can be the case. But then you have limited your risk, at least. It's really no need to jump on the train and get like a severe case of FOMO. It's never a good idea. I get, of course, the feeling of that. When you thought of buying. Maybe down here, but when you were like a bit afraid, and then now you see, well, I was actually right, and it's going up again. You feel like, oh, I should buy now to not miss the train. But you could always have a structure like this, coming, like a double top or something like this, and it goes down again, and then you run into the danger of being stopped out if you have a stop loss at all, or losing your nerves because you just cannot look at the losses anymore, and when you sell or close your position, it goes up again. With I think everybody who started trading has been in this type of situation more than once, and it's very, very typical. So have your strategy in place when you want to buy and when buy. And my strategy is the 8 weeks moving average, bull market support bands. It's playing out wonderfully. Same in NASDAQ, same in the S&P 500. And once that flips, you can play to the downside. It's all about market structure.
Yeah, I agree. I think that's same for me. One of the longest standing things over a decade of trading that repeats the same way. It's just a brilliant momentum, confirmation of momentum in the direction of the trade, right? And you can also hammer down, if you're not running something on the daily, you can also go down to like the 4 hour, the 1 hour plays out very well when you've got like a micro structure on that slightly nearer term time frame, and you still put it on the longer time frame per se, like the hour, 4 hour. That's probably how you want to play that. But as far as the gap from there, it's also going to depend what sort of chart, what broker, say if you're on TradingView, what you're looking at, because some of them will show a gap, some won't.
Yeah.
So the information sort of propelled us did come out technically on Friday.
Yeah.
So it's just
ideally, maybe you want to look at the future chart also, which I'm not doing here.
Yeah.
It's the CFD chart, but I mean, in the future, very soon, from what I've heard, we're going to have futures trading also on the fiber. So I assume you'll be able to trade gold futures out there. I don't want to promise anything simply because I don't know it yet. But well, I see you're going on a date soon, LJ. Did you know about this?
Oh, I guess so. Yeah.
Wow.
I'm coming down to the Gold Coast. There you go.
Nice.
Oh, good. Yeah, sure. We can do that.
Take some pictures. That'd be nice.
We can get a drink by the beach. Long walks on the beach.
Long romantic walks on the beach. That's what we like.
Just give me 1 sec, Dirk. I just got to.
Yeah, sure.
A silly cat. I'm sure you heard it before.
I heard about it before. Yeah. Yeah, Ron is asking by when the futures. I'm not completely sure yet. If you are interested in that, you can go to the homepage of the fibers, and if you click top right on futures there, you will. Let me see, maybe if I can show you that. Here you go. If you click here on futures, you can enter your email address down here, and then you'll be notified with an early, the probable possibility of an early bird access once this product starts. I don't know exactly the date when it starts yet. I'm like you guys, of course, waiting for that, but it cannot be too far in the future. And good morning to South Africa as well, Donald. How are you doing, man? Louis took a gold long at 4,508. Not bad, man. Not bad. Ended another position for 529. 2 trailing stops at 479. You probably mean, because otherwise you would have been stopped out already. No, I'm an idiot. Of course, we are above 79. So, yeah, well in profit. Good tradesman. I saw you doing decently on gold last week as well.
4508. What was that? 4508, and then another position.
29. Trailing stop 79. That's nice. That's
really pretty good.
Very good.
That's real good, Louis. Good stuff, man. Dude, you're well in the clear.
Hold on to buy things, maybe not the other way around.
Yeah, I would say keep holding it. I think I mean, where we are now, I think we'll keep pushing.
89. That's what we did most of the times. Now, once we break a new all-time high, we keep at least pushing for a while.
Yeah. So right now, as far as like the standard div on, we've played catch up, sort of consolidating up here for some time. So you might get a bit of a pullback down to this cluster, like 46, 45, 60, that kind of thing. potentially 45, 40.
I'll switch to your screen. I think you're showing something there right now.
Oh yeah, sorry, my bad. So this is out to the 1 hour. So obviously on that measure we are pushing the 2 standard divs. So you might get a bit of a basically just a pullback over here over the next couple of hours into this same higher cluster that we've sort of formed a new rough trading range just above the prior highs here. Pull back into there, potentially something a touch lower towards the mid of the standard div. But yeah, I think this has got momentum. Anywhere through here, you'd probably find support sort of sideways and then the next leg up.
Is that something you would trade? Like if you see a pullback now to the first higher ATR level or to the standard div? I mean, to the median?
So depending on the momentum, so often I'll typically wait till the midpoint, right? If say we get sideways consolidation into here, and then there's like a base forming, and so if you had it like you kind of come into here like this, and then we're kind of forming a base and start looking like we're going to rise up like that, right? Then I'd take it off there, but you know, prime setup. It's always going to depend on the momentum of the move. Like if we've kind of pushed the charge and now we're kind of got to consolidate it up here for a bit, or there's news coming ahead. Otherwise, I'd wait for a move to the lower portion and then like into where that level is, and then you would go off there.
How do you have a way how you measure the momentum, or is it more like for you like a discretionary thing?
Slightly discretionary. So because part of that is like this momentum is obviously, you know, sort of macro event, right? So part of that is going to be a discretionary element in terms of your judgment on how valid or invalid that is with macro. It's always very, very highly discretionary rather than bringing in some kind of like quant type elements. But then I'll always go to stuff like futures, or if there's like options vol increasing, that kind of thing, and try and bring in some of those quantitative elements to accompany my sort of qualitative discretionary view. And as long as they sort of match and stuff is the narrative per se is making sense, then I'll run with that as like a probabilistic outcome. And ideally I'm looking towards where I combine both of them, which gets me closer towards that 70% plus confidence level.
Yeah,
subjective.
I think options subjective, exactly. Options vol is always a good idea to look at, but I think what most people do not get right immediately about options vol is that if you see the volatility going down, that is usually happening when prices rise. You know, you see volatility spikes when prices fall. So you kind of want to see like a combination of a pullback, maybe to a good zone of confluence, and when you then see volatility is going down, if you like very short term, you want to look at something like maybe the 5-day or weekly volatility. That could be also a sign of confidence that we are inbound to go high. And you sometimes can see that actually also in the way the candlesticks form, when like price is kind of stalling out. And this is one of those subjective things. It's like I could not define it into like words really, like, or what am I exactly look? It's kind of, well, this chart, you know, looks like it's slowly stalling out. You know, I think it's.
Well, that's what like discretionary. That kind of element of discretionary trading is kind of like quant trading, but with more variance, I guess, because you're not a perfect computer, but essentially it's like running kind of like a Markov chain type machine learning type element, which is your human brain.
You have kind of your
human brain has
personal neural path weights trained to look at certain things. No,
yeah, and so it's all pattern recognition. It's kind of like the same way that computers play chess, right? They don't actually analyze every single possible move and do that. You'd have to have the best supercomputer we have in the world, and it would still take them the life of the universe to map out the exact perfect move. But they still go off pattern recognition, just like humans do, and they just do it at a better pace and volume, right? So same way there. As a human, obviously you get distortions coming in depending on your mood that day or how alert you are, how much sleep you've had, and you might miss certain things. And, you know, so that's the only portion with that. But yeah, you spend enough time looking at these things, and you can pull up a random chart and know, okay, that we're about to sink, right? Or this is about to rip, obviously. So, and the other part, like you were saying, with the options stuff, with that, it's about knowing, what type of market you're trading, right? So there's hedgers and speculators. So like, for instance, obviously stocks, most people are going to be net long, and there's going to be like market makers net hedging, but then there's going to be options plays, which are typically protecting downside rather than outrights, and understanding the structure of the underlying, which currencies are going to be a bit different because obviously you got two assets compared to each other, and it's like a dual comparative. So, but yeah, generally speaking, that's how I would run the sort of standard diff model / indicator / input just there.
And I think the standard diff one that you're showing here, it's alone. I think if you put this on your chart as like maybe a trading beginner, it will probably keep you a lot of times from just FOMOing into the markets. Like if you see something like this, I even like 20 years ago, probably I wouldn't have gotten the idea on that large candle to the upside once it touches the upper range of your defined standard deviation to buy then FOMO into the markets. Of course, you can be right to do that, no? But I think the probable thing is, like you say, wait for the pullbacks. Yeah, they are going to give you a bit better. Right? Is that like a standard indicator on TradingView, or is that something?
Yeah, it's just a standard indicator. So it's just this one. So it's literally just standard
Nice.
deviation chain channel. Sorry. So yeah, I mean, a lot of traders, like if you're just starting out, it is one of the best things if you're sort of just starting, because a lot of people look at this and be like, okay, we've had this large burst higher, we've broken highs, and a lot of people try jumping this for us to just go right up like that. But once you put the standard div chain channel, which is on, you go, okay, we probably get some consolidation around this point. We've blown out this area. We need to consolidate the highs after breaking the tops, come back into relative level. Once you start building that support, then you go for the next leg higher. So it's almost like it just gives you that good sort of guardrail of sort of expected price distribution, almost like if you go bowling and you kind of just put the sidewalls up.
Yeah,
it's kind of like cheating like that, right, in a way, and just gives you that easy kind of the great thing is very visual. Bang there, you don't actually have to go and calculate this or anything. It's right in front of you.
But that's what you need, I mean, for myself, I'm when I trade manually, that is, of course, I'm a very visual guy. When I do like quant strategies, which, to be fair, I'm mainly focused, of course, right now on this is like my thing I want to further investigate and implement in 2026. But if I do it in a manual way, this is exactly what I would be looking for. Then I would be looking for zones of confluence, and be it just something like the parallel wild line you have drawn into, to see like, okay, if like in the future time price moves to one of the lower standard deviation levels where it meets the last higher high, which you've marked there with a parallel line, this would be a nice zone of confluence, where I would be willing to take the risk, for example, to go long.
Mm-hmm. And the great thing is, as well, you can sort of like roughly sketch out the time frame of what you expect, because you can see where this goes to. And right here, we're looking at next Tuesday.
Yeah.
So you can put that through and go, there's a potential that we could consolidate from now all the way up till next Tuesday and sort of just trade sideways, bit up, bit down, whatever. But ultimately hit this drawdown sort of level by those tops, find support there, and then drive higher. So it also gives you that sort of time frame. Or if you're looking for the middle trade, right, to the midpoint of the standard div channel here, that'd be by roughly Thursday.
Which is not a bad strategy, in my opinion.
Thursday, yeah, and Thursday during Asia.
Yeah.
And a lot of runs in gold we've had during the Asian session, and right, so that's a good way to sort of map out a scaffold for the future price action as well. At least give yourself an idea and then see how things evolve.
I mean, just like also, because we are talking here about a massively uptrending asset, obviously, with gold, and buying at the mid-standard diff in an uptrending or in any trending markets, up or downtrending markets, I should say. Downtrending, you should sell at the standard diff, then of course, but in an uptrending market, if you have a little bit of a breath, and you have a little bit of leeway with your stop losses. You cannot be too tight, of course, obviously, like this. Then you usually end up having a pretty good timing in picking your trades like this.
Yeah, because if you run something like that up towards 4,700 and you got to stop by that price high, right? Bang, there you go.
What R is that, like 2.8 or something, probably?
2.8, yeah. And that's just up to the round number of, the 4,700. Often then you'll actually go to the actual, again, hit the other end of the standard div chain channel. I keep saying chain. But yeah, so, once it starts running as well, you can allow it to keep running. You've been tagged in there. Say you actually maintain this high and that stop didn't need to be that large at all. Well, you bring it up to here once this is now actually come up to the first standard div or up to the middle point, and then boom, you've now readjusted your risk to about 11 to 1, right? And then once you've readjusted that and this is in profit, it's going to open up you to actually take a trade on something else like euro, dollar, or whatever else, because you've now got the acceptable total risk of what you're running on the account.
Position compounding over different currency pairs.
Exactly.
But I like this very much because it's like I like to look at moving averages, and I think this is a good way to combine with like to look at a method to average the price, but to also project it into the future. Like to have kind of zones, where potential targets also could be. Most people probably would use something like Fibonacci levels for that. I like to use Fibonacci levels, but with Fibonacci levels, the problem is always they highly depend on how you paint them. What do you pick as the last top? What as the last bottom? It can totally change the outcome. So it's again more of an art and not really a science. But maybe it's the math guy, talking within me as well, that always, or the quant, that likes, of course, solid math for position taking. And for me, it's very difficult because with technical analysis, that is, of course, not possible because everybody does it different. But this adds at least an element where you can determine in a solid mathematical way what could be forward-going areas of support and resistance and targets. And I like that very much about that. Plus the fact that it's so simple, everybody can do that.
Exactly. And just like you said, you could put a fib on this, right? From that recent high to the low. Okay, you've got that area of that small peak there, the 73 point whatever here. And then you've got the 161.8.
Yeah. See, and that is also a level of confluence there. Yeah.
Right. And then bang, now you've got a full trade plan structure. You're happy to wait for that until Tuesday or something, or maybe depending on the structure, if the structure presents itself through here, you might take it earlier, as long as you're willing to know that you might have to hold the trade till Tuesday, consolidate a bit further. We come into a new week, and then it's Monday or Tuesday that we actually get the run, right? So as long as you account for the swaps or something you might have to pay, there you go, right? And then you'd probably be looking at like that.
And it feels good, no? Yeah. I mean, like this. I remember when I first started trading, I struggled a lot with staying confident about my trading decision. And like this, you have kind of, not going to call it a framework, but I've come to the decision that this is my stop loss. This is kind of this is my trading plan for gold this week. Yeah. Or if you're like on super low time frames for this day or whatever. And it makes it easier to stick to your guns and not deviate from your view or trading plan later on again because you were not really confident with your decision.
Yeah, or there was a news event that jerked gold right down. You're like, mine's all over. Yeah, you sort of set this up, beforehand, and then run with it. So, and then you can put something else like the
big beluga.
Yeah, Kalman. You can see right here. We're going to be very bullish right now. But yeah, so you can punch around a few other bits and pieces if you're not sure. Stochastic, RSI. Obviously, we've talked about them a million times before. They're a bit lagging. Take them with a grain of salt. They're not useless, right? But they're not just going to print trades for you. Put it that way. They're a little bit too easy to calculate, understand, and reverse engineer. So they've kind of been arbitraged out of the market per se, but still valuable for context. Again, it's one of those things of context rather than directly telling you that this is going to happen in the future. So same with the standard jib chains here. These could expand further. Like if we get a further run, those will start to move even greater, right? Say if Trump comes out and he's like, "We've invaded Greenland today," right? I'm sure gold probably goes straight to 47.20 right away, right? So and then in that case, they'd expand much greater. But that's also the great benefit that they do contract and increase over time. But I will show you the settings I have this on for you guys, because I've always found this to be the best setting, 120 as far as the length. Encapsulates both on the shorter term timeframes as well as the longer term timeframes. It just plays out beautifully across the board. We can go to euro dollar. I guess that was my stuff from last week. We've now pushed outside of that. Aussie dollar, the pound. So pretty much what you're looking at, anytime you kind of push the edges or over the 2 standard div, you buy yourself, right? And then when you're running through the middle, that's when you're very much in trend mode. Obviously, this is probably not actually the best example. I hoped it might be better. This is the first week of trading, so trading was a little bit janky last week. But either way, when you start to push these levels, you get a confluence of, prior like this week low, and you're pushing one of the standard divs, you can expect some kind of pullback. And then just like we've seen here, you're now pushing beyond the 2 standard div back the other way into the confluence of the moving averages. So the yellow is the 200, red is 100. Then bang, you've got a point to sell from. So
and with it, I mean, probably everybody who has been trading for a while can immediately see where should I put my stop loss. In this case, no, it's very obvious. So for me, it would be, somewhere slightly above a moving average in this case, and gives you a lot of profit to the downside then.
Yeah. So depending on what kind of time frame, you might then be seeing this. Some of these highs through here. This is kind of a sketchy kind of range, but you did see the bottom side of this high range, which we've sort of tapped in through there, right? So first week of trading plus New Year plus Christmas, the actual structure of the market is going to be a little bit janky, but you could run something just like that if you're looking at a shorter time frame, and then bang down into there. Or you want to take if you got some kind of longer term view for us to come right off, something like that, right? Back into the prior cluster.
The mega dollar strength.
Yeah. And then again, you can go out, okay, how long would that be? We're looking at, Thursday. That would probably imply some kind of news has to come through to push us further down, and something else happen. You can then start to equate those things, looking at how many pips we would have to drive, and compare that to the ATR and see, is that actually realistic in normal trading, or would it take a catalyst event like news or a Trump or Federal Reserve action to actually push us there? So
That's the thing I would do now, actually, with this. Maybe I should look into that. It's really interesting from a quant perspective. What I would do now, I would like analyze a couple of years of data, hourly data that is for cable, and see like how likely within a certain time frame it is to do like for example X number of pips, or probably I would express it in a percentage move to adjust for different levels of price. And then you can quickly see how likely is it, for example, that we reach within until Thursday the lower band of the standard deviation that LJ has drawn on this, to kind of help you to get an idea. Is this realistic? Of course, like the large moves are always going to be lower than that. But if you have like something, if you see something like, with this amount of time to reach the very low band of the current standard div, not band, the line it is, there's a 0.05% chance this is going to happen. Well, maybe when you adjust like and see, well, the other bands, have a higher likelihood, and adjust to that. This is how I would go about, like, of course, have a positive R on the trade, but still stay within events that are not too outlandish from happening.
Yeah, exactly. So let's delete the fib there and go and look at, this is the 4 hour on gold as an example. So you can see this has encompassed us very, very nicely from, peak to trough, back to peak, right? So this is the thing where you can go out to each incremental time frame and see if we're still in a reasonable. Now this will be, price will be. Hopefully you guys can still see this. It's on the drawings in there. We can. If I had the drawings, it won't take away the. Yeah. Okay. Cool. So you can see on the daily, we're not doing too crazy, right? If you go to the lower time frames, yes, we pushed outside pretty aggressively, but compared to like the blow off top through there that we had on gold, right now we're kind of chilling, right? We're just within the midpoint and the one standard div. So as you can see as well, if you put these on a daily when we had the major top in gold, and you see we're well beyond the 2 standard div, and 3 would be roughly through here. This would be almost at 4. It would be 3 and 3.7 or something, right? From there, you definitely expect this is a 0.whatever% probability per a normal distribution. Chances are we're going to move back into normality, right? Which we did. And then you can see we basically rode the -1 standard div up through here until we pushed above, and we're getting capped on there. And that's also a good sign that very much we've still got the positive momentum up in gold.
However, I wouldn't use that in the case of gold as a contrarian strategy, to be honest. So I wouldn't get the idea, even if we are trading at a upper 3 or 4 standard div, to then start shorting that asset. I think that's very dangerous.
Yeah. That's when you got to drill down into the lower time frames. So yeah, this is that would be the contextual piece, that drill down into lower time frames. And if you go back to obviously when we did have that top, we got you get some lower time frame pattern. We got this double top. You could see the selling pressure coming through, and then you jump into it. So that's when you nail down into that lower time frame and do all your other traditional works. I would say gold is probably more reliable than silver, at least.
Yeah,
because at least per the market cap, if you think of it as a global asset, right? The amount of money that then needs to push in to keep pushing price, right?
Things like this work well on assets, that have a lot of liquidity. Because you can kind of count on it, but price finding is fairer there. You don't have like large orders skewing the prices so much, and on assets that have like insane volatility. So I would never get the idea like to trade this on silver or like some low cap cryptocurrency, for example.
Yeah, don't try it on penny stocks, right?
Yeah, exactly.
You'll get crushed. yeah.
Oh no, it's suddenly at 10x standard div. I want to short it now.
Yeah, it'd be like trading Dogecoin
Yeah.
when it's just literally just vertical. It's like a rocket ship. So but on just like Dirk said, high liquidity or higher at least. I mean, gold's not the highest overall liquidity of assets out there, but it's definitely better than most. We'll say that. But definitely take that into context. So it's like we were saying before about the hedging and speculators, who's in the market, try and gauge that context. Obviously, things like stocks, people are always going to be net long, and then typically downside, options or something. If you're looking, puts and that kind of stuff, it's going to be from a protective hedging nature rather than people actually betting on stocks going down. Right? Everyone wants stocks to go up, but they want to protect themselves in case they go down. But there's a bias to always go to the upside. Yeah.
Beautiful. Can be so simple, no?
Yeah, exactly. So simple. What is the name of the indicator you're using on TradingView? Which one, Empress? So you can see the three up here. So if we're talking about these guys, that's just standard dev chain. So deviation. And that's the main one that I use. There's probably some other ones where you can put some more standard divs. Sometimes it can be good to put a 3 standard div on, but normally you're going to find the majority of stuff is in 2 standard div, of course. So if you really want to go and change it, you can just go change it to 3, and then see where that comes out at. Should be up there, right? The other ones are. Let me just put that back. These guys are moving averages. So the yellow is the 200, red is the 100, and then the blue sort of turquoise is a 50. I've got this gray one here, which is a 10, which is basically very similar, pretty much the same as what Dirk uses for the 8 moving average there. So same. I just like the 10 because I use it a lot more often on shorter time frames as well, which I find the 10 plays slightly better. On the daily 4 hour, like Dirk uses it, the 8 is probably more reliable. And then there's the Kalman trend indicator as well, if you guys want that, which will just give you a good outlook on overall momentum. So when you move away from it, either run your mouse over, you can kind of see green being very much positive upside momentum. Gray, you've gone into more of a neutral area, so you might have consideration for a change in trend. Red, obviously going to be downside, and then you've got these sort of order block type levels of like sort of key crossover points.
Such a nice tool to combine that with a standard deviation as well.
Indeed. Yeah, very much.
Yeah, big beluga this, no? They have really a lot of great
They have a lot of really good stuff.
Remember, a while ago, I was talking about these ELAS loops. This is an indicator also from big beluga, and
whoever they are,
yeah,
props, shout out. You guys
these are just their fee indicators. I don't know what
as well. Yeah,
stuff
they,
is.
Yeah, they do have paid stuff. I haven't looked at any of the paid stuff, but all of their a lot of these more complex indicators, or even just more sophisticated versions of general indicators. I always find the big beluga ones are.
Because they have a nice way of visualizing things, if you hover again with your mouse over that, and so the candles kind of turn what is that green. It's so nice if you combine this with a standard diff, and you see momentum is changing now into the gray area. So I assume that's neutral for that indicator. Plus we are somewhere at the lower bands, the 2 lower bands of a standard diff. For me, it's exactly when I would get the idea, maybe we're in an uptrending asset. It's time now to buy it, maybe, be the one, the contrarian in this case, of course.
Yeah, and so the neutral is often where you sort of want to buy, given your confidence on continuation of whatever direction you're seeing. So you can see through here, we've come into neutral. Obviously, this candle immediately here turned neutral. So obviously, you're long. You go, okay, the uptrend is sort of stalled. You might want to hedge or just cut the trades altogether. Doesn't mean the uptrend is dead, right? It hasn't turned red, right? It's, a lot of indicators would say, okay, we're now bearish.
Yeah.
Clearly not. So you look for a neutral point and you combine it something with the standard deviation channel. You've come down to the bottom lower band through here. You can see that wick from these prior tops. You're within support through here, and then you find like a buy. Oh God, so many drawings turned up.
You're an artist.
I've cleared half of them. I haven't cleared the gold ones yet. So I've started most of the charts fresh already, but just not gold yet. But either way, so you can see there. We're just going to hide them again. But bang on, beautiful buying point, because it's one of those buy when no one else wants to buy.
Yeah.
So long as you are firm, confident, you've done all the background research, everything else in the continuation of the trend. And so obviously, as we've talked about here for gold, seems as though very much that's going to be to the upside this year. I still have about 5.5 on my radar.
Yeah, that's quite realistic.
5.2 to 5.5. Yeah, I don't think it'll be the same percentage gain. I think we'll be just under that.
I mean, look at the market cap we are now on gold.
Yeah, that's the primary thing that keeps me from saying like 6K. So my initial was 5.2. I think we might hit 5.5. I think we'd settle somewhere around the 4.9 to 5.2, sort of going through majority of trade activity.
Depends also on a geopolitical scale how things are developing. Are we going back to more normal things where people are not constantly afraid of new wars breaking out, more of a, I'm not going to say a positive geopolitical landscape, but a more neutral one without all the crazies that we've gotten used to on a daily level, especially coming out of the mouth of Donald Trump. And in that kind of environment, we can, of course, still be in a very nice risk-on environment, but probably we would see gold at least start, I'm not going to say now crashing down or something, but consolidate for a couple of months or something, going sideways more. And because, of course, like jumps to the upside like this are not sustainable. I mean, where are we ending up then? We're ending up at 10,000 by the end of the year. Maybe I'm going to look back by the end of the year and hear myself again saying that it's not realistic. I would probably have said the same in the beginning of 2025. But let's see. It's one of those outlandish bets I wouldn't put my money on. But rather, what you demonstrated, trade the facts here and wait really for things to come together and stars to align. Still a positive sentiment for gold. Then I maybe see we are moving to the lower bands on an hourly or even daily level of a standard deviation for gold. Plus, if you want, you have this, what is it called, Kalman channel or whatever from Big Beluga, which shows you we are going to the grayish area on the bars, so more neutral area. That could be really a good time to buy then.
Yeah. And I think that's exactly it. So understanding the market you're in. Where do I have these? So because I think any of the jumps from here, you have to remember a lot of them are going to be more speculative type positioning, more trading positioning, rather than we had a consistent flow coming up through central banks, governments, that kind of stuff, right? Now, that is still there. It's not like it's gone away. But to get these persistent jumps, that's more coming from the trading, leverage, speculative type side, same like we're seeing in silver right now, rather than raw demand from the actual underlying commodity. So the same thing that last year we saw, we saw demand for silver actually drop off, but we've seen silver go crazy. And then we've seen margin increases from the CME, etc. Now this, dude, look, we're at 50, and end of November, like a month ago, and we're at 84.
I mean, how do you trade something like this? Show me the person who made like a good profit trading this.
Like start of Jan. Literally as we ticked over right here, so $29 basically. Start of last year, and we've gone. What is this?
This is some kind of.
I gotta keep zooming out, dude. I gotta reduce the thing. Like, okay, let's hide this.
Commodities had a meme coin, it would be silver.
Like, this is ridiculous. That's the start of where we were last year. Now let's hide the standard deviation chain as well, channel. So, like we said with silver, guys, be a little bit careful because can't say this is normal. And silver doesn't really go through the same sort of commodity super cycles like like a copper or iron ore, that kind of stuff. It's been outpacing all of them. Palladium, platinum, the whole bit. So obviously silver's got a big role to play in solar, photovoltaic cells, the whole renewable energy thing. And hence it was really big in end of 2021, 2022, 23, when after the whole Russia-Ukraine thing, there was an extended push for renewable energies and electric cars, that kind of stuff. There was excess demand versus supply, but that's come back. And if we, what was it back then? If we go all the way back then, we're looking at this was peak demand. Was 2023 through here. So we're at 19. It's got a daily. I can't even zoom out further. That's the extent of the zoom. Okay, so peak demand for silver was here. So I got to reduce this even more. Oh my god. Okay, that was your peak demand. Interesting.
Reminds me of GameStop a lot. I'll be honest. And I know on Wall Street Bets and other communities, this has been discussed for a very long time, that this eventually could be like the next big thing. Even back then when GameStop was still very popular. So what was it, like 21, 20? And yeah, it's probably the same trap, people are trying to short that now. They get squeezed out. Everybody needs to get out at the same time. Your mom, your sister, your daughter, your auntie gets wind of that and starts buying as well. So kind of the same. It's really, it looks so attractive, but it's a market I don't want to trade. If I want to trade it, I would do it like one of our viewers here, unbiased trader, put a small amount of money into a leverage short ETF, and then either I lose it, or it's like 10x in 1 year.
Yeah. So peak demand was here, not quite here. It was about a year before. So there we go. And this is the chart for you guys. And that's when we actually had a differential.
I think if you're producing solar elements at the moment, you probably puke as well.
Oh yeah, dude. You're trying to now put energy stations in space for AI, and you're just like, never mind.
or even just your solar panels at home. In Germany, everybody likes to put solar panels on the home right now, and maybe you didn't underwrite your contract yet, didn't sign your contract for that yet, and it was like, I don't know, 10,000 euro for that, and suddenly it's 15,000.
Yeah, God, because we have the same sort of rebate stuff. I'm sure probably similar to you guys. Obviously, it's Australia, sun, obvious. It's a no-brainer. but yeah, I don't know. I'm sure these solar companies are definitely hurting. So, but yeah. Anyway, morning. How are we doing, Scott?
Good to see you, Scott. Reminds me, Scott, I still owe you an answer on TradingView on your message, and I hope I have some time later today to get to that and look at the stuff you sent me there.
Yeah, definitely. Just let me catch up on chat because I think there was a couple.
While you do that, guys, we haven't reminded you of that today. Please leave us a like, subscribe to the channel. We are closing in on 100,000 subscribers. Of course, this is our first quarter goal for this year.
Yes.
To break this number, 100,000 subscribers. So any support in that regard, of course, is much, how to say that? It's
appreciated.
Appreciated. Thank you. Sometimes it's like I talk most of the day English. I wonder, why my brain sometimes skips back to German.
Just start speaking German, Dirk.
Yeah, that's right. The problem is if I would do this in German, a stream
Guten Tag, everyone.
Yeah, I would struggle to find sometimes German words because I'm so used to using the English words. So it's like the worst of both worlds for me.
You just be like, meine Lieblingsfarbe ist grün.
Oh, wow. Your favorite color is green.
There you go. That's it. Yeah, well, that's profit, right?
That was very good pronounced as well. How come you know a little bit of German?
I did German while I was at school for a while. I used to be able to speak it very well. Now I can't. Speaking it, like hearing it, when we have Oktoberfest here, and they'll play a lot of actual German songs in German. I can sing along to it. I can understand better that I can actually speak it. Like when I go to speak now, I forget because I just haven't talked to it. But yeah, we used to have.
Because it's a notorious difficult language to learn. Not like, I mean, the pronunciation is pretty much straightforward. This is, in my opinion, better than English or French. Like when you read a word, you know how to pronounce it.
French is terrible.
French is also, but English is also not super phonetic, no? But German is very straightforward. It's really the grammar, the articles. Because as a native German speaker, if you use the wrong article for a word and subsequently everything else becomes wrong in that sentence too, you still understand the meaning perfectly, but it makes you kind of cringe. That's why I always say Germans are grammar Nazis. And
yes.
So, but congratulations. I mean, that is really quite something. I think it's a really hard language to learn.
I did it from grade 5 to grade 7, so not for very long. But then in high school, we did have this thing called German immersion, where instead of doing everything in English, you do all of your subjects in
this
German.
Is how you learn.
I didn't actually do it, but yeah, some of my friends did, and the thing is, they're doing math and they're doing complex math and doing physics, chemistry, or whatever.
Yeah.
In German, but they're kind of learning at the same time. So,
but this is how you immerse yourself in a language, right? When I was a high school exchange student in the USA in Minnesota from 1994 to 1995.
Oh, really?
Then, of course, the very beginnings of the internet, so I had to write letters to my friend, physical letters still, and wait weeks for them to answer me. Phone calls insanely expensive, so I did this 1 month with my family. But the nice thing was, because you are immersed in English the whole day, 24/7, after a couple of weeks, you start dreaming in English, you start thinking in English. When I came back to Germany, I had a very heavy American accent when talking German for a couple of weeks. And the only negative thing is I never got rid of my German accent. I hated that. I thought come on, you're going to get rid of it after 1 year, but never happened for me.
Yeah, I guess it's hard after you're 16 or whatever. It tends to stick, I guess, for most people. So
that's the thing, I think.
Yeah, but I would like to touch up on my German and actually get back into it, get fluent. My partner speaks French, so she wants me to learn French, and that'd also be cool, just because we can speak something that most people don't hear. So you can kind of have almost it's not a secret language, but compared to most people here. So. But yeah, I'll have to touch up on it. I did have this question before I was going to answer. That's what I was waiting for. So one-sided betting rule. So basically what that refers to is, say if you've got an asset that is clearly sort of dropping, right? And maybe you took a long in this hypothetical and you got stopped out, or potentially you moved your stop lower and then you added to the position and then you get stopped on that. And then you keep trying to go long when the thing is clearly getting had and just dropping and dropping and dropping. So that's the one-sided betting rule where you're not really being respective of what's actually going on in the market and observing what's happening, and you've kind of got a specific bias that you want something to happen from the market rather than actually trading the market as you see it. Because obviously that's dangerous. Sometimes, the market dips and you can layer into something and comes back, but oftentimes it doesn't, especially when it's going very aggressive. And you keep often as well, the other portion is stacking positions, or potentially even increasing the lot size as it continues to go down. That's what one-sided betting would be considered. And that's typically frowned upon by anyone in the market, because that is probably the quickest way to lose your shirt, your hat, your pants, your home, your shoes, everything on you very quickly from the market. You will get rinsed from that. So
I think this is where like kind of the golden rule of, do not attach your ego to a trade comes from.
Yeah.
Because it's a sign like, oh, I don't want to be wrong. I don't want to be wrong. I want to force the market to show me that I was right. And but it's also like nothing inherently bad, because in my opinion it's part of growing as a trader. Probably everybody who's profitable nowadays at one point in their career has done this mistake. The problem with it is very often you actually get out at break even with a strategy like this, or even with a little bit of profit. That's why it's so tempting. It's at 8 out of 10 times, I can get out break even. The problem is the 2 times left are going to break your account because we are going to be liquidated.
Yeah, so it's the difference between knowing when to like buy the dip or buy a distressed asset that has been overdone, right? That's a different outlook, different approach than doing something like almost like a martingale type system, where because you lost, you then try and double down and double down and double down to try and recapture the losses that you made from the prior trade, versus buying, say, like a stock that is beaten down, as an example, it's now very cheap, but you look at all the financials and like, okay, it actually should be, even on paper, it's worth double than what it's trading for, just purely by the company assets. That would be an example. So the same way, it's a lot harder, obviously, with currencies because you can't exactly measure that in the same way. But maybe sometimes there's something from NFP or Fed or central bank announcement where, because we've hit some kind of critical junction, a critical level, stops have run, and there's options that come into play, and the thing is just shot higher when it's not that big of a change in the Fed speak or the ECB or something like that. Then you might want to short it from the top, and you might not short it quite at the exact top because it keeps running, but you're not trying to chase the sell. You're taking that at a reasonable level, and then you wait and you size the stop appropriately to calibrate to the ATR, the new volatility that's come in, and maybe you might take one extra position at the top, but again, you size it appropriately. You're not increasing the volume, increasing the lot size the whole way up, trying to play catch up with the losses.
I think martingale is a good example for this, actually, because if you look at martingale from a risk perspective, risk reward perspective, you have to take more and more and more risk to get one in return. You end up after a couple of martingale double ups, you end up like risking $1,000 to earn $10, or $100 to earn $1, and which, of course, if you have been just on a very shallow level researching risk when it comes to trading and risk reward, which absolutely you should do, because that's the central element that you can long-term become successful as a trader, you very quickly see that this doesn't make sense. If I have thanks to Martingale, an average risk reward of earning $1 and risking $50, and I don't have a success rate of 99% or whatever that is, then I'm going to lose money. And the problem with Martingale is always you lose it all at once. It's Martingale is either you succeed in earning one R, or you lose it all after a while, of course.
Yeah. That's the final part to that, and then we'll move on. Exactly that it ends up being a chasing losses strategy. Tends to be either you get there either to break even or like a small profit, or you just completely blow up, right? Which is that's not trading. That's trying to,
it's like pushing
gamify.
The button, right?
Yeah,
the bomb
it's
going
just
to explode, or
gambling.
you earn $100.
Yeah, exactly. We had Saint asking before about the statement from Jerome Powell.
Oh yeah, you wanted to.
We didn't touch on that.
We didn't touch on it. Yeah.
I don't think there's really that much to say other than touching on it, because right now I think the market's trying to fill it out. I think we might get more of an impulse when Trump actually announces who he's putting up for the next Fed chair, alongside this kind of ongoing thing. I think everyone expects that it won't really be anything. It's probably more of a... I don't really even know what the exact end game of this charade is.
I know already one thing. Sorry to interrupt you. I know who is going to be the next Fair Shetman already.
Yeah.
His
Did this get announced? Did I miss this?
No, his first name is going to be Kevin.
Oh, well, because we got the two Kevins. Is that what you say?
Exactly.
Who are the front runners? Yeah. Okay. Yeah. Okay. All right. Yeah. That's fair. But yeah, I don't know where this charade. It's the same when he tried to get the other. What was her name? Thrown out for the dual primary.
Oh man, I've forgotten already. Huh?
Whatever. Yes, nonsense thing. I don't know what the service of this is, because it's not, the Fed is not typically something that speaks to the general public. Obviously, like the general populace of America doesn't. They have no idea what the Fed is or does or why they exist, or almost, if they hear anything, they say it as just the big boogeyman. Kind of like when people hear about like BlackRock and like, oh, BlackRock owns, or Vanguard, they own every asset on the planet or something. And that's not how it works, right? I don't know if that's more of the thing of just trying to get them into this big black dark boogeyman that no one understands, but now it's in their vocabulary, if I can even speak. And then somehow that aids Trump's push against the government in general being overbloated, filled with fraud, or whatever this kind of narrative. I don't really quite know what the angle is that, as far as the public perception, obviously I can see from his own kind of things, but hence then going to as far as the markets thing, I think as we can see right now, the market doesn't really care that much. We've seen gold run up. We saw Aussie dollar, for instance, gap down very marginally, which is normally very much a risk-off type asset in these when these things happen. But then we've just rallied since. So that was the small gap down, right? And then we've rallied since.
Yeah.
So, I don't know if you have words to that. Give me 1 second. I just got to pop up.
Sure. I tend to agree with LJ here, of course. It's something that has never, to my knowledge at least, happened before. It's an unprecedented escalation in what Trump is probably going to call an ongoing battle with the Fed over interest rates. Of course, Trump wants them much, much lower. I remember he requesting something like an interest rate cut of 3% or something like this, which the Fed is not going. What Powell basically said is that, if I read that correctly, I'm trying to quote now, the threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public rather than following the preferences of a president. I mean, that is basic. I think that summarizes it very well. He's doing what he ever does. This is why I also, by the way, respect Jerome Powell very, very much. I think he's one of the best Fed chairmen we had in decades. He sticks to his opinion, and he presents his opinion not in an overly emotional way. I've never seen him showing much emotions anyway, but he is like very down to the facts, and he say we do what our mandate is. We've always done this. I think we have a good track record when it comes to that, so we're going to continue to do that. And the side kind of message here, the underlying meta message, I don't. Thank you for that, Jonatan. Very nice. It's kind of, I don't.
Powell. Yeah.
Jerome.
The Donald Trump from Sweden has joined. Welcome.
Yeah. Let's do it.
I do agree with you, Dirk. That was very impressive how he responded, I think, as well. And like you're saying, very cool, calm, collected. He's always been that way. Mad respect to that guy.
He's exactly what we need at an administrative political level in the USA right now.
Get out of him. Exactly. Too late, Powell. We need to get the rates down. This guy doesn't know. He doesn't know anything. Criminal.
I'm very good at determining interest rate. I have best interest rates in the world.
Yeah, he doesn't know what it is. We
got Donald Randon over here.
Donald Randon.
Yeah. Renovating for $1 billion. It's a scam. I'll tell you, it's a scam. Get the rates down. What if he took the time that he spent on renovating the Federal Reserve and actually studied to understand the economics, financial situation? Then we would have lower rates, better markets.
He's just mad that Jerome didn't get Trump Towers, Trump's real estate, hired to actually do the renovations. That's why he's mad. He's we could have had, it would have been a golden palace, and it would have said Trump's Federal Reserve, Federal Reserve of Trump, right?
But Powell's going to leave. He's going to get replaced, and it might be the case that this is the last proper, independent Fed chair we have. I mean, the Fed chair it's gonna be different. I mean, it's gonna look different in a couple of years, I'm sure.
At least starting in May, man.
Couple of months, I was about to say,
but I mean, it's still a lot of resistance within the Fed. You know what I mean? It's not a one person running everything. They still have the vote in the FOMC and everything. So I still think
takes a couple of $100,000 per committee member to fall in line.
Yeah.
Oh, you're telling me that? Okay.
Nothing.
Well, I didn't know about that.
Say with that.
Chump change. Or we should say Trump change, I guess.
Yeah.
There we go.
All right. What are we doing today? Have you where's the trades at? Have you been trading anything?
Well, we had a very beautiful analysis of gold from LJ with a nice outlook and idea how to approach the market. So I very much enjoyed that already, and I'm sure our audience did as well.
Nice.
Yeah, so gold was probably the big one we went over.
Yeah.
I think going into the majors as far as currencies for this week kind of comes off the back of last week. Obviously, we've got some data this week. Was it? Okay, I don't know if you guys can see the white on my face. My page is not loaded. Yep. No. So I can't see the data right now. It was here, but never mind.
But do you have
see you guys tomorrow, isn't it?
You have a supernova for a screen there, or what is that?
That's just any time it goes white.
It's probably his camera as well is picking up a lot of light.
Yeah, no, my camera is definitely
trading and tanning.
It's not back to normal. For some reason, my camera is.
And look at gold! Wow, insane! All-time highs again. This is first time bringing. Wow. I should have bought down there. I remember last week we talked about the 4.4K level, and I'm like, yeah, I should have bought it. I knew this was happening.
This through here,
yeah.
Right? So we were talking about it there. We had that one tap there, and we're coming up through here. And I was saying I'd prefer to see another tap into here and then buy. And then we did get that, which was actually very nice, with also a slightly higher low through there rather than that low. So that was prime for long right there. So 100%, Jonathan, you should have bought it, but you didn't.
Yeah.
Did you?
It's a goddamn Powell, you know?
Why?
Should have so Powell's
Come on, man.
Euro USD, we got a very nice move on Euro USD as well. Interesting. I'm looking at Euro GBP, probably potentially looking for short there. Swing short, guys. Speaking of price action markets, etc. I'm addicted and I'm obsessed with Claude Code. I have very slept. My fiance might be leaving me because I only care about Claude Code. I'm obsessed, guys. It's crazy. I can't sleep. All I do is like, I have now forbidden myself to. I've had this rule for a long time. Don't bring the phone into the bedroom, right? But now I've started doing that because now I've connected Claude Code to GitHub, so now I can build a project on my phone, and it's just, it's crazy. And the things you can build. We live in a new world, guys. You have no idea.
He's gotten sucked into the full AI vacuum.
Yeah. So what I do is I have Claude Code.
The only thing that I can't stand, you're doing this off your phone and not off a computer.
Oh, well, I am doing it on the computer when I'm at the computer. But then when I'm out, I'm doing it on my phone because obviously I can't stop. So when I'm home, I'm at the computer. Then if I need to like go outside, I bring my phone and I continue. But it's like I have Claude Code open on one screen, and then I have Claude open in the browser on another screen, and I'm basically parallel doing like it's coding on one screen, and then it's researching the best processes and everything on the other screen, and then I'm just feeding the research into the coder. And guys, I'm telling you, it's just insane. It's just insane what I had so many ideas. Like I had so many ideas of software that I wanted to build, but then I thought, okay, so if I can build these, because I built the software that is basically a trading journal, but for your psychology. So it has nothing to do with, tracking your trades. It's all about tracking your psychology when you're trading. So I call it Tilt Guard, and it's now able to follow your psychology and then tell you if it's showing signs of tilt or not. And then I'm very close to creating an EA that is going to be connected via webhook to MetaTrader. That's going to basically block you from trading if you're about to go on tilt. And then I thought about that. I'm like, this is a cool idea, but if I can build it, then anyone can build it, especially if there's someone with a little bit more coding skills, right? So I started thinking bigger, like how can I build something huge? So that's what I'm doing. It's a big project.
Nice.
Like it's gonna be so cool. But it's imagine it like 1 or 2 years. If you want a software, you can just click a button and now you have the software. Like everyone says that there's no one is gonna be buying software anymore because Claude is just gonna code it for you, and then it's gonna run.
I would say if you had a SaaS business right now and you've been doing well, I would sell that thing right away.
Yeah.
Like if you
absolutely,
whatever kind of private equity you can somehow fool them to be like,
I mean, you just had a good example for that, no? It's like, I'm going to build an MT5 bridge, for example. There are services out there where you pay like $30, $50, $100 every month for exactly that. Now you do that, you code that in half an hour with Claude Code. It's like I'm starting to think like, you know, like, oh, this is a cool software. I should build this for myself. You know?
Yeah. You know, I have this awesome idea. I obviously I can't show it right now because it's not protected. It's not login protected.
You would need to kill us then.
So I need to like secure it before I can show it publicly. But so guys, I have no knowledge of coding, nothing. Like I'm technical. I can understand how to navigate an iPhone, you know. So I'm not stupid, right? But I do not know how to code, right? But I basically
you can do Lego. That's fine.
I can do Lego, definitely. Cool. So I asked Claude to like I said to Claude, I want to build a database. So I want to build a database with price action, indicators, everything that we need to know, like pull historic price action data from the forex market and the crypto market, store it in a database, bring financial, the macro numbers and interest rates and all of that, and bring it into a database. And then we're going to have an AI analyze that and find patterns, seasonality patterns, and patterns like, for example, if the Friday candle is closing bearishly for Euro USD, what's the chance of Monday opening bullish? Like simple questions like that. And then the AI is going to go through data and find that for us. And I'm like, I have no idea to build this. So can you please research how to do this? And it gave me the research. I gave the research to Claude Code. And now what I have set up is Claude Code writes the code, sends it to GitHub, and then I connected GitHub to some website. I have no idea what it does. And then I bought a domain and connected that domain to this thing. I don't know what it does, but as soon as I press commit and tell Claude Code to upload it to GitHub, it automatically gets updated to this database, automatically to the URL. And now I just have an interface where it's like, I just click import data. It goes to Ducat's copy and Binance and imports all the historic data. And then I'm going to connect to Anthropic API, and Claude is going to analyze that data, and it starts spitting out seasonality data. And I'm like, what is this? I built it in a weekend. It's insane.
I think MGN's right. You're just doing this to build a catalog of every single flat pack IKEA package there is, and you're gonna have that right there, and you're like,
and then he's going to give it like a weird Swedish sounding name like Bjarne.
Yeah, no, but guys, it's absolutely crazy. I mean, I built Tilt Guard functional app while making dinner for the kids, right? And then I thought, okay, this is stupid. I need to think big, because if I can build this, then imagine what people who actually knows how to do this, what they're building.
Like you texted me the other day, I think like earning from apps, software development, SaaS is dead.
Yeah,
and you're still kind of on money if you have like super sophisticated products. If you have like hundreds of thousands of lines of code, you're going to reach your limit very fast with Claude Code.
And maybe you got customers that don't understand.
Of that.
They can do it for themselves, right? They've already got like a user base that they're just comfortable tapping their credit card type thing. Right?
Exactly. But like the average app, even something like WhatsApp or something like this, is pretty much dead to earn money with that. I agree with that. And it's more about personalized software now. And
I went into Edgewonk and I went. Yeah, go ahead.
I was just going to say, you can spend any time on like GitHub, right? And just even trolling like Google with, Reddit posts linking to GitHub of certain things. And you're like, oh my God, dude. You're like, I just automated my entire house to do everything.
Yeah.
Plus do this, plus my trading, plus my thing. I actually designed a thing on Claude Code, which I was playing with the other day, of stuff that I can text, which goes to a thing to my computer to relay different stuff and like close trades and all. I was just doing this as like an experiment to like play with it. And then hence when you get certain alerts, and to set that up with trade entries or trade exits, etc., without as another tangential way on top of other things. Like there's so many, it's crazy. Like I've just been playing around with it. yeah, sorry to interrupt.
Yeah, but it's so good. I have a friend who has been running a software development company for the last 20 years, and he doesn't employ engineers anymore because he says I can do it better with Claude Code right now because it gets it right on the first or second attempt, and that was very, very different just 10 months ago because before Opus 4.5 came out, and it's insane. And I tend to do the same. I was like very keen always on telling Claude Code or ChatGPT at the end of a coding session, document everything, document. I'm still doing that, obviously, because otherwise you eat up all of your context window just by studying the project in the beginning.
Yeah.
And now this friend of mine said, hey, I have a solution for this. I have an MCP server which can aid you as long-term memory, so you do not always need to document everything. That Claude is automatically going to get the information it needs from the server. It's like, what the hell? I can do now a project with 200,000 lines of code and not just restrict myself to 10 or 20,000 lines.
And what's cool about this is you can actually ask Claude to it's just insane. So I gave it instructions to build to like find how to automate like the downloading of Forex data, and then it told me, okay, you need to go to this site and click click this and download that. And then I said, can't you just do that yourself? And then it's like, oh, I can't do that because I can't activate this access that. Okay, so but can you create a program that does it? And it's like, yeah, sure. So it created a program that does it for Claude Code automatically, and I'm like, wow, it's improving itself. Like that's basically what I'm saying. Like you can ask it to like, okay, can you just become better at this, and then you just create it. And it's like, yeah, sure, I can probably do that, and then it does it. So
yeah,
Dude, sorry guys, I need to quickly let the mailman in. I'll be right back.
Yeah. That's right.
Did he say the mailman?
Yeah, the mailman.
Doesn't he? Mailman, like so. Right. So maybe it has a big package.
Okay, someone in chat correct me. What's the thing from the Shrek? The Muffin Man. The Muffin Man.
To be more precise, it's Amazon and not the mailman. Sorry.
The Muffin Man.
That's important because in Germany they have. I think they had like state-owned mail. Maybe they had it in the past, maybe not now. But it's an important distinction. Yeah,
we have both. So yeah.
Sweden has sold out all the state-controlled post offices to Denmark, and it's absolutely trash now. Trash.
Really?
Yeah. Denmark.
Ours is still majority government one, but it was fully government owned, and then they sold it partly to like private, so it's like but they're very good. I will say they're very good.
If Trump takes Greenland, we should definitely take back the post office.
Does that mean you get like
they'll be too focused on Greenland? We can go in the back door and like, hey guys, bringing back, make the post office great again.
Dude, why does Denmark own your post office? That's so random. That sounds like such a Viking infiltration. Like they're still ruling over your territory.
There was a couple of years ago, maybe 10, 15 years ago, so we thought because we were a very socialistic country, and we are still, but back then most of the most important infrastructure and things like that were run by the state. I think it was like that for most countries, I believe. But then like 10, 15 years ago, we started selling everything out, and we sold the responsibilities of the national post offices to a company in Denmark. Yeah. Did you know that there's only one store that sells alcohol in Sweden?
What, like one company, you mean?
Yeah.
Is it government owned?
Yeah, the state has monopoly on alcohol.
Oh, really? That's kind of cool. Is it cheap then, or?
No, it's super expensive, and it's not available everywhere, and it's closed on certain days, like only open for a few hours on the weekends and things like that.
do they just sell like mead?
Yeah.
You know?
Yeah. Oh, look at Richard.
Does
Richard have a new haircut? Does he have a new haircut? It does. He does have a new haircut.
He does. It's Ken over here. Is Barbie coming in today?
Who's Barbie?
Yeah.
Is that Will?
Barbie is Will. Yeah.
Yo, what's up, guys?
This is Ken.
If I'm Ken, and where's my Barbie? Oh, there's Barbie.
Richard is there as
well. What's up, guys?
It's amazing.
I just made myself choke.
Dude, you full cut it off. Because didn't you get a haircut not that long ago, Rich?
Dude, my hair grows crazy fast.
I think that was the most erotic thing I heard today. I just made myself choke.
Auto-erotic.
Auto-erotic.
Yes.
Oh, God. We're going to get flagged again from this video.
Yeah, at least we're half an hour.
I have a question here. I think...
Thank you, Jonatan. Thank you.
Yeah. I think it's best to change subject. Which technical analysis method do you think is best? I'd say it's a very...
It's definitely mine.
It's definitely
I think it's mine. I definitely think it's mine.
Mr. CMT too.
Yeah.
Well, it's yours, of course. Yeah.
I am not. I have not officially passed CMT2 yet.
You don't get told yet.
No, I hope I will. Let's see if I have gotten an email from them. No,
that's right. You're from Sweden. You got IKEA. You know, these flat packs are very technical. So, dude, all round, you've got all the skills.
Yeah.
Technical analysis.
Build a cabinet for us.
But on a serious note, which technical analysis method do you think is best? I mean, it's an awkward question because there's no best method. But if we have to assume that, if we have to rank them from like the best, I would say, well, first of all, you're not going to be able to do any type of analysis without price action. Well, you can, of course, but if we're thinking like from a beginner technical analyst, you need to have price. So everything you're watching, most likely you're watching specific indicators, except from volume. You're looking at indicators like the RSI, MACD, etc. That's all taking price data and then pushing it through certain mathematical formulas to give you the indicator. So it's all price. So I think if you're new and you're asking this question, start with price action, understand the autonomy of a candlestick, understand supply and demand. Why, not necessarily why, but try to find areas in the chart where you have had historical strong reactions. Because if you find those areas, the supply and demand areas through horizontal levels or trend lines, mostly horizontal levels, you're going to see that support does act as support most of the time. It's not like it would be, it usually breaks, because then it wouldn't be support. So it's just a very logical assumption that a support level usually holds as support until proven otherwise. And I think that's one of the most fundamental logical conclusion in technical analysis that everyone should begin with.
Yeah, indeed. I agree. Fundamental analysis, or technical analysis to the left.
I heard you really listen to me. Like, yeah, I agree. Fundamental analysis, great.
No, sorry, my bad. I'm so used to saying it. Sorry. Yeah, anything like just take large structures to the left as your most basic. If that's your 101, that's probably the single best 101 element. This is on a weekly. If we go down to a daily, right? These are going to be big structural levels, right? So this is of a very long time period, years. But you can see that we've met those levels. Same through here, right? here we had a break. Obviously, this you can see this is pretty impulsive through here. Now this was during COVID, so no surprise. But nonetheless, all these levels to the left are probably your biggest key points.
Yeah,
I had a point that I was gonna add to until you said that, Jonatan, and then I just lost my train of thought. So
sorry about that.
I was just
I did have a point.
I was just thinking when you asked that question to myself, what would I tell myself if I could go like back 25 years into the past? What to focus on at first, at least. And I think I would tell myself now focus on identifying how the market structure is. Just plainly and simple, identify, are we in an uptrend, downtrend, are we in a sideways trend, and then adjust your strategy to that. If we are in a sideways trend, well, okay, you can very well work with something like a simple RSI or other momentum-based indicators. If we are in a downtrend or in an uptrend, I want to have trend following strategies and not rely on momentum-based trading strategies out there. I think that could have saved me potentially, I don't know, because back then I was very young and arrogant, but hopefully saved me from a lot of losses out there because my ego got in the way and I wanted to force my opinion onto the market instead of just simply looking at what is the structure at the moment.
Yeah, I agree. I think price action is just straight up the king of technical analysis because everything builds on from there. Indicators are built from price action. It's all data that's already on the screen. So understanding price action and then kind of like developing from there into the next step, I think is great. And exactly the point that LJ also made, like looking back at previous structures, looking back at historical data and considering reactions around specific areas. And then also, Dirk, what you're saying is also, it's very true. Understanding that there's differences, there's different periods, trending periods, consolidative periods, and understanding that you can't implement a trending trend strategy into a consolidative trending or consolidative strategy. And you have to have them be completely separate. And it's getting ready to react with that information at hand. I think 100%. But I actually don't think that there's one best.
No, of course not. Of course not.
No, of course not. You'd hope not.
They're foundational. Otherwise, like you have a foundational thing, and then you build from that foundation. I think.
And what is best for you is not maybe best for me, because we look at different things and have a different approach, especially when it comes to risk or the way we look at the market, different time frames, different fractals, and so on and so forth. But that's the compelling thing about techno analysis as well. There's like a multitude of ways to get to the same solution. Should I buy or should I sell the market right now?
Yeah, because that's the interesting point. That end of the day, it's buy or sell. Like there's a binary, plug, but there's a million ways to actually get there. So definitely.
Agreed.
Have you actually been trading, Rich or Jonatan? Or are you guys still sidelining for now?
I'm still in the AUD NCD long. I'm trying to figure out if I'm trying to look at setups. Obviously, gold. Interested in gold. Not really sure if I missed that one, but there's a few. There's a few I'm looking at. Euro USD looks interesting. Reclaim that range EQ. Might be looking for longs, but I'm also looking for potential shorts on EG, which I'm liking. I don't have my screen shared, but I can share it.
Because I did bring up ORD NZD before.
I think there's a little bit of lag from your side, LJ. Can it be?
Yeah, I think it's because of the screen, whatever local recording thing.
Okay.
Yeah. Again, yeah.
So this is the AUD NCD trade I am still in. I'm just holding this. I had to close it on my Firebase account, unfortunately, and only have it up on my personal account and another prop firm. The swaps became problematic, honestly, so I just had to close it. CAD CHF, I had a trade open on this one, got stopped out. Didn't have any follow through on that retest. Gold, I am trying to figure out something. Like I'm not really sure what, but I want to do something with this. EU, I like this reaction here. Obviously, I think we're. I mean, I really like this. So I'm thinking maybe we'll go from this region up towards these highs. So probably looking at, I don't know, like if we get a rejection here, then I'm not so sure. So I don't know about that one, but EG is one that I'm watching for a potential move to the downside. So I'm looking at this range on Euro GBP. So we have recently here on the weekly hit an area where historically it's been a very important area. Historically, we had a major reaction end of 2023, and then beginning of that year. And now we're kind of forming the same type of pattern going down to the daily. We do see a potential top formation here. And then if we zoom in even more, I have an area here that I'm interested in that might actually already have been rejected with these wicks. But I am looking at a potential short where I want to get in here, stops above these wicks. And then I'm simply just looking to ride this as far down as possible, potentially down to that level below. But that's about it. I'm also looking to short USD JPY, but it's not letting me. It's just not letting me short it. It's
it's just not letting me. Give me permission. Come on.
Yeah.
Come on. All right, like, Jonatan, do you want to join? Like, we've got a club over here. So it's two people. It's myself and Dirk, and we're kind of waiting to short dollar yen.
Yeah,
if you want to join, it's very expensive fees because there's a lot of swaps that you're going to pay because it's taking a very long time. But you can join. It's just very expensive membership.
Yeah.
But if you're interested, come along.
In addition, I've joined a sub club to our club already, which is called "I've been screwed over by dollar yen in 2025 too many times already."
Yeah. No, but so there's no
dollar yen anonymous. You need help.
Yeah. I have waited for dollar yen to break down, but it's showing some weakness, but then it's immediately showing as much strength again as before, and now it's breaking out. So there is no sign of weakness here from a technical point of view, which I'm a little bit worried on. Others I'm watching is EuroCAD, but this is might be a trade in months, right? But it's something that I'm curious to see if we're going to create a long-term base here. But then if we look at the historic price action on EuroCAD, we zoom out to the monthly, we're trading in an area where historically we should not be seeing, we should be seeing EuroCAD lower. If we look towards the future, there's a higher probability of seeing EuroCAD lower than higher. And thinking, when will that happen? Well, I think it's going to happen once we trade below 1.6 again. So once we trade below that level again, I'm immediately going to short it down to that level. But it's a position trade, pretty much going to be open for probably a few months, which means, can I do it on prop firms? Prop firms don't like people holding positions for a long time, so swaps can be higher. Which is why I decided right now, in this very moment, this second, that with prop firms I probably need to zoom in a little bit.
I think Europe's going to be much stronger than Canada this year, even if we're just base thing of Venezuela happening. Like we talked about the oil situation, like that. There's a large, it's not insignificant amount of money. That oil, if they start reducing that, is a good, what's Canada's GDP?
$3. I have no idea, but from a price action perspective,
do you know what it is, Dirk, off the top of your head?
$350 US dollars.
$350. I mean, that's not a lot.
GDP.
No, I was just kidding. Sorry. Again, nobody got my joke because I'm German. You guys assume I cannot.
Very high.
But I'm trying very hard sometimes.
Say 350. Yeah, 350.
Well, at least you're trying, Dirk, and I respect that.
Yeah, it's okay. I'll keep on trying. I tried for 48 years now. I'll keep on in good spirit.
Never give up. Never give up.
Yeah, that's the thing about German humor. It's no laughing matter.
Yeah, still, see, Richard understands me.
Nice one, Rich.
But
no, I thought you were trying to say 5 trillion, Dirk. That's why I took you serious, because I know it's pretty close to Australia. Yeah, it's 2.2 trillion.
It is actually, joke aside, it's very close to Australia.
Australia, yeah. So when you got like the 124 bill that they've exchanged with the US as far as energy type stuff, majority of that is oil. If you delete the massive, like that's not a small portion of your entire GDP that you've just deleted. And then potentially, hence, then now America is pumping out the most oil of any country on the planet, and now they actually have a further positioning that they can take from. Further weakens Russia's position, gives more leverage to the Russia-Ukraine thing, more pressure on Putin. Potentially, they can even go to China and be like, "Look, we'll sell some of this to you as well, and cheaper than Russia." You know, it's that pressure on, which then potentially becomes better for Europe. And I think the net loser definitely is Canada, and that's not a small percentage of the GDP, with a large potential benefit to Europe coming through there. So, as far as EuroCAD, I would probably net want to be long, because that's one of those things that isn't going to take like a year to set up. As far as the oil situation, the mineral situation, that would take a year, 12 months, 18 months. As far as like precious minerals, commodities, that kind of stuff. Oil, though, is a different situation. So that would be my only concern.
I think it's one of those crosses, where it's difficult to really find an edge, in my opinion. At least like longer term, if you look at something like 3, 6, or 12 months cross, I really would more concentrate, if I look at a time frame like this, in terms also, of course, not to buy the spot trade or the outright trade, but to potentially invest into stocks of that country. There are others that I would prefer, most of them actually being US based, because of, in partially at least the things you just said.
Yeah.
Oh, William.
Yeah. Welcome back.
Hello, everybody. How are we doing?
Why does it look like you are doing a mugshot?
You in jail?
Now? Yeah, exactly.
I know. It feels like it, doesn't it? They've got no imagination with the background wall. Do they not know that I'm going to be streaming? Like, come on.
From a prison cell.
You would imagine, they have decent Wi-Fi right now in jail. So.
Well, so you're going to be gone for how many months?
5.
Dude,
right. So what did you do to deserve the 5 months in whatever type of jail that is?
He won too much money in prop trading.
Well, I'm looking at so I've got this cat cable here, but it doesn't seem to work in the building. So I'm speaking to the building manager, and they're like, they got to sort all the Wi-Fi out for me. Like I had perfect Wi-Fi earlier, but I think it's just dropped out completely, which is really annoying.
Right, it doesn't even look like you have lights. It looks like you have like
Will,
candles,
are you
like,
okay though? You can blink twice.
Yeah.
If you need
Do
help.
you need assistance? Do you need rescue?
I don't think he listens to us though. Like he sees.
Is that better?
Did he just leave to the left of the screen and came back from the right?
That's actually much better. When that's
like
actually much better. Light seems to, yeah.
Who'd have thought lights makes camera better?
Yeah, like who would have thought that a little bit lighting makes it a little bit more brighter, you know?
Genius.
That's what I said.
Should I put like a sign around my neck? I'm just seeing office saying, I think William has been taken hostage. Shall I like write a sign that says...
They gave me a cable.
Not a sign. You need to come next time with like an orange jumpsuit, right? And just be like, yeah, guys. I'm in trading jail right now.
At least I get coffee in prison.
Nice.
Hey, that's fair.
Can I just answer this, like one person, before I have to leave you guys, answer that question here? Dirk, a few months back, you said you were backtesting a new strategy on gold with 0.8 hour with 80% win rate. Why do you look for a new strategy after becoming a consistently profitable trader? Yeah, I did say that. So that is actually true. But the strategy turned out not to be profitable in reality. So there's always a difference between backtesting something, even if you have like very rigorous methods in backtesting. You do Monte Carlo simulations, you do walk forward tests, and so on and so forth. You name it, and that still doesn't give you the guarantee that your strategy is going to be profitable in reality. And this was one of those strategies. So I tried this on a demo account for 3 or 4 months, 4 months actually. And it turned out not to show the same results that it should have shown according to the walk forward simulation on untested data, that is. So I scrapped it. It's not profitable. No need to put this into production then. And this is something that is very, very common, not only as a quant trader, but with every trading strategy. You backtest something, you think you found an edge, you test it, hopefully on a demo account or on an evaluation account in a prop firm, and you see it's not working out. And at one point you can compare like the results I have from the strategy. Do they actually still fit into what is expected from the strategy on a statistical level? So maybe I was just unlucky and I started trading the strategy live during a drawdown period. And you can, the more data you have, the more you can fit it like in comparison to, is this what is expected? And if you come after 4 months of trading live a strategy like this or on a demo account to the conclusion the strategy behaves differently from what should have done, then you need to scrap it because you are up for illusion. You never can adjust your strategy to reality, and you have to completely rehaul your approach to the strategy. And this is very common. This happens, honestly speaking, with 19 out of 20 strategies that I develop and test. And
of course,
not only the ones that pass already the walk forward simulation. I'm talking about the ones that are live, that have passed every possible statistical evaluation method I have in my holster of statistical analysis, and still 19 out of 20 fail. It's normal, so, and it's humbling, honestly speaking.
I was going to say with this as well, with the becoming consistently profitable trader portion, Dirk, for your background, part of that is that, I mean, you've been trading for ages with extensive experience, across the board, right? So you're not necessarily, you're looking for new profitable strategies, approaches. It's not just you're getting there. This is the continuing evaluation of your trading, as every trader should. Certain strategies or approaches reach alpha decay. They might have worked in a certain regime where they're excellent. You go into a new regime, they don't work so well. Maybe you traded through, I don't know, Barack Obama, worked great, less chaos. Come into Trump's first administration, a bunch of tweets that throws the whole strategy out. You come into, Joe Biden, okay, that was good, but then we had, obviously before that COVID, and then the back end of that regime shift is another thing. So it's not one strategy.
Regime shift, very good. I totally agree with you. That's the reality. So strategies should generalize very well over different regimes, volatility regimes. And my answer to this question, so why am I still looking for not a new strategy, new strategies? There's not one single strategy, it's always a portfolio of strategies. And when you are profitable, is this strategy hopping? No, it's not. This is simply to the fact, first of all, that you want a portfolio to cover regimes. If you have like one strategy performing very well in one regime, maybe one is underperforming. So you want to balance that out. So you have I'm not going to say a smooth equity curve, are always going to be ups and downs in this, but what comes close to a rather smooth equity curve. Let me put it like this. Second of it, is no strategy is going to work forever. So you always have something like strategy decay. And this is becoming more prominent with the rise of AI tools now, because everybody can be a quant without having to invest and having so much knowledge like you used to have just 5 years ago. It was a whole different picture. Now I can do things on my home computer that hedge funds with hundreds of millions of budget were only able to do like 10 years ago. So there's a decay because everybody's chasing the same thing. So I'm forced to constantly reinvent myself as a trader and look for new strategies, because I'm always under threat that my current portfolio of strategies is going to decay. And this is, it's the brutal truth. This is what was happening. If you watched the beginning of a stream, I said that I'm considering retiring from crypto trading simply because of that fact. First of all, brokers are always screwing you over and putting artificial slippage onto your trade. And the second is strategies are just decaying. There's not enough alpha left to justify continuing the strategies I have right now. So what do? I have to go back to the drawing board. I have to kind of reinvent myself and do that with the help of AI tools, obviously, to kind of go faster through the process of hypothesis to actual strategy, the testing process and fine-tuning process in between. But as always in trading, and as always in strategies for trading, it's a race against zero.
Yeah.
It's the brutal truth, and there's nothing to sugarcoat this. What works now has no guarantee in working a year from now anymore.
So you should always be looking to improve. Even when you've gotten onto something that works, keep working in the background on other stuff. Keep experimenting, tinkering, finding the next thing that might have some kind of promise. Because one day the other thing might not work. Maybe you're Steph Curry, you're shooting is again and again and again, and then all the teams figure out that you're doing that, you get shut down. Now what do? What's your next edge? What's your next play? Right? If they fully shut that down, then you're not going to be on the field, right? So you got to figure something out. Have a bit more of a dynamic thing. You can take any kind of sport, basketball, F1, whatever. These are always good examples. You got to change it up. Rules change. Different people come in with a different edge, or they're able to shut you down in some way. You got to evolve. Same with business or anything else, right? So
such a great example.
Yeah,
F1,
F1. F1's probably one of the prime examples that you can analyze very clearly. It has to keep changing, has to keep evolving. Even though you've got onto something and it might be working for 6 months, great. It might not work the next 6 months or the next 3 years or the next 6 years. So even a bunch of the this also goes for the people you guys see on TikTok, social media, whatever, whether it's all the big players. A lot of these guys' stuff does actually work for the current regime. If you go and actually code this, you back test it against the prior years before 2020, terrible.
Yeah.
Right? It's worked for now. It's a regime type thing, and it was terrible. You would have lost everything before that. So the same way that you might have a certain approach that will be working now, and that doesn't mean it's wrong. It's working now, but the thing is you will probably have to shift. Just like hedge funds, other funds shift all the time. Right? So always keep that in mind, basically.
All right, guys. Already 12:45 here where I live. I need to make a move. Thank you again for
I will have to as well.
Having me for 2+ hours. Going to hand over to Richard and William, live from wherever the jail is.
This man is so in jail. So
it really looks like
it's sentencing. He's like waiting for his lawyer to come in.
I think he's like live streaming and being interrogated at the same time right now.
Look at this guy.
I didn't get my phone call. I said I get one phone call, but apparently I don't get it in Hong Kong.
I don't know for you guys, but is his screen frozen?
It's frozen.
For me.
It is.
Yeah. This is so good. Will,
you can't make this up. You can't write the story. This is just something that just happens.
Wait, do we have any lawyers, any solicitors in chat? They want to represent Will.
It's going to be international representation.
Yeah, international law. Anyone?
He's currently being held by Interpol.
It's still British jurisdiction per the law, at least. So if you're in a Western country, it should be pretty by the by. You should be able to figure it out. But Will need some help. So applications below. Try to get them out.
Go to the embassy.
Yeah, go to the embassy.
Good.
Now look at him.
We are going to leave it now to the live stream from Shawshank, and take care, guys. Bye.
Cheers, Dirk.
See you, Dirk.
Oh, mate.
God.
Will
now it's working.
Smorgasbord of.
I was literally about to say it seems to have sort of put itself out a little bit now. Can you guys hear me okay now at least?
Yeah, we can. Yeah.
We've been hearing you the whole time. It's just
it was just your screen was frozen.
Oh, really?
And it just looked like you were so depressed, like waiting. You're like looking down like this, like just waiting for your like lawyer to come. Right?
When they walk in and they put like a glass of water down in front of you, acting as if it's a nice thing to do. I'm not talking from personal experience. I'm talking from watching a show or something. The good cop walks in and puts a nice glass of water down in front of you and says, "Don't worry, man. We'll sort this out as soon as possible. It's probably a misunderstanding of sorts." And then bad cop rocks up, and then all hell breaks loose. But that was that moment where he puts the glass down and Will's like, what is this? What is this routine?
Yeah.
Better Call Saul. Yeah, that's it.
Yep.
That's what we need.
Yeah, do the five of us have like international affairs by any chance?
Saul, one of your streamers is caught up in a jail cell in Hong Kong. Saul rocks up and says, "Well, all I can do is just scalp you out of that situation, mate. That's all I can do for you."
Yeah, it's I haven't watched the Better Call Saul show itself, but been watching Breaking Bad with my partner because she hasn't seen it. So it's like it just put it on the radar, on the mind for me with this. So, yeah. But yeah, let us know.
I watched that new 28 Days.
You need us to call your partner, call your girlfriend. Yeah, just let her know where you are, so she doesn't get worried. She's the one that
put me here.
I was about to say, who do you think put you in jail?
Yeah, I'm in prison because of her. Yeah, she told me to say something. Turns out she did not give me the right translation.
Oh, great.
Dude, she couldn't wait to get you out of Britain.
Yeah, I will say, okay, Mason, here you are, is the 4-hour Euro-Dollar standard div channel. I did bring it up before. I don't know if you saw it, but it's obviously going to be pretty much the same thing. But yeah, there you go. So we basically tapped into the mid area just by this lower structure through here. Okay, let's just delete. How do we delete all drawings through here? Yep.
How many is it going to be?
270. There's a couple there. There's a couple. It was about 5. That's fine. Anyway, so yeah, these tops are here. So basically, this high structure over here. We basically hit the top two there. That's also the point of this 2 standard div, and just by the 50 moving average on the 4 hour. So there you go. Right now, I would say I would not be calling any firm direction on euro dollar or any of the sort of dollar majors in general. Dollar yen has still got that persistent push to the upside, but euro dollar, very cloudy, very unclear. Same with pound dollar. It's pretty odd overall. So I wouldn't go crazy. There's probably better assets you can look at right now. Even Aussie dollar has more conviction, like to the upside. That'll be much better. So I'd probably avoid euro dollar. It's in this weird neutral, confused type area right now. I don't know what you guys think, Rich and Will, but that's sort of what I see. It's a bit, there's better assets.
Yeah, it did look good in euro for buys, but it has really been struggling the last, let's say, almost 2 hours now to establish anything. Bit of a pullback, and then maybe a potential to try and push a little bit higher, but also at the same time, it really doesn't fill you with confidence, does it?
Yeah, like the buys from down here, like reach support, that made sense, right?
Yes, it did.
But to where we are now, it's pretty mixed, and especially when we hit the underside of the higher trading range through there. Right.
Yeah. Not very clear at the moment.
Yeah. Sorry, Will. I didn't mean to interrupt you.
Yeah, no, that's fine. I was just saying I haven't really had a chance to look at EU-GU pairs yet. To be fair, I had a look at gold earlier on. That looked okay. But other than that, I've done a bit of gold analysis. That is it. That is it at the moment. But this is my first time to be. Yeah, it's my first time, to be fair, properly this year analyzing the charts.
Yeah.
So exciting stuff.
Do you have a working keyboard, or is this like you got to tell someone else to type in and they use the mouse?
So again.
Do you have a working keyboard and mouse, or do you need to tell someone else to like operate it for you?
I don't get it. What do you? Yeah.
It's tough, man. It's tough out here. Dark days for William Davies. Hong Kong.
Bro, do you know the worst thing is, like, the Wi-Fi keeps coming in when you guys are talking, the Wi-Fi will be perfect. As I'm about to speak, just out of nowhere, it'll just drop. The Wi-Fi will just drop, and I won't hear a thing you guys saying.
Yeah, I just missed everything that Will just said because his Wi-Fi just dropped out as he started talking.
I was about to say, yeah, I didn't hear a single thing Will said.
I kind of feel like you're trolling me.
No, dude, even chat's like, where are you?
Yeah, Will is in the Matrix.
To be fair, I'm thinking about moving my setup over onto the couch where it's a little bit. I've got like paintings behind me, but if not, I'm gonna put something up here because.
Dude, that's a luxurious cell. This sounds like one of those cells in Sweden, where they give you like a full home, like that kind of thing. Did you move in with Jonatan? Is this like his,
I'm in Hong Kong, guys.
I'm actually in his basement right now. I did go to IKEA. I did go to IKEA, and I was like,
So is when he was talking about the AI stuff, really, you meant like I'm getting Will to put into like an Excel sheet all the spreadsheets together, and this is my artificial intelligence.
Inmate. I have an AI, an inmate in my house.
Yeah, exactly. I am his AI.
All right, guys. So I will say, anything you guys want us to run through, let us know. Also, smash the like button, smash the sub button. We need to get to 100K this year very soon. We're on the 10-year anniversary of the fires.
This month, right? If you want Will Davis out of Hong Kong prison, then we've got to get to 100K.
Yeah, we need 100K to get Will out of jail.
Yeah, nobody's gonna subscribe.
It's like a GoFundMe, but for like subscribers.
Yeah, that's a bad idea. Everyone will unsubscribe and like dislike just to keep you in jail.
He looks happy there. He's living his best life.
Yeah, look at him. He's frozen.
Yeah. He's so happy.
Yeah. Oh my god! Someone needs to screen cap this. Like, look at him right now. Like, what is this? Wait, I gotta check. Does it? Yeah, it does. It looks exactly the same on the stream.
It goes on the YouTube. He's just like,
oh my gosh.
With a
all right, guys, but in all seriousness, yeah, throw us anything. We're starting 2026 with some heat, a bit of fun, a bit of Will in jail. Maybe we'll rescue him throughout the year. We
if
can
he's
figure out something.
Even the outfit suits the situation. Yeah, guys, it's some teething issues on Will's side, unfortunately. However, it should be fixed. He's already, already mentioned that it's a problem. So he's spoken to his landlord. Landlord will fix it for him as soon as possible.
If he tries to blink, it won't capture it. He'll just be
no, it won't.
frozen in time. Like,
yeah, it'll just have me like looks like I'm sleeping or something.
Yeah. Unbiased trader.
Oh man. Even the outfits.
Anyway.
Anyway, LJ, you were heading out.
Hey?
You were heading out.
Oh no, I can hang around for a little bit longer today.
Oh, that's lovely. Thank you. Yeah, that's awesome. Let's
especially whilst Will tries to get himself. He's just gone. Exactly that.
You know what
That's
I'm thinking is the Hong Kong government is like, no, Will is streaming from here. We must stop him.
Mate, you got to figure out how to sort that VPN and everything to get around.
Yeah.
Come on. It's an actual thing. Dude, he's talking, but there's no image.
It's just... Nah. Okay.
So you guys can't see it. You can hear me, though, can't you?
We can see
you now as well.
Yeah.
Oh, okay.
The thing is, we can hear you clearly, like, the whole way through. It's your camera. The camera is just like... I don't know.
That's really weird, man.
Yeah.
My landlord just texted me saying, "Can you send me a picture of the Ethernet port?" I was like, "What the hell's that gonna do? How is that gonna help?"
It's probably because of the local uploading thing.
Yeah.
There's a stream as well. Yeah, that's probably it.
Yeah.
A little bit under tension.
Yeah. Anyway,
I mean, it's probably everyone's there like binge watching Netflix at this time of night.
You've got those privileges. Wow, that's crazy, dude.
Jail these days. Rehabilitation more than anything else, it would seem.
Dude, it's the new cigarettes.
Nice. But yeah, I was going to say, so, Rich.
Yes, sir.
Well, your trades today. I know, Rich, you're very systematic. You got your thing. You often take a few earlier in the day. Did we find anything?
Nope. We had 0 trades this morning on NAS. Unfortunately, we had a little bit of a consolidative section all the way over here, and then we just had breakout, and we just did not get a good enough pullback for me to enter to try and buy lower. Because I had this previous day low that I thought was in contention. And if I were to enter on this candle over here, this top section just felt more like it was going to try and pull back again. And then I had to go and, cut my hair and all of that kind of like stuff. So from around this area, I wasn't even at the screen. So No trades for me, but it's fine. I'll wait for the New York session to open up, and then I will start looking for potential trades with New York. I did, however, get a fantastic trade on Friday. I entered somewhere on this candle for a 1 to 1.5 trade on Friday. Just perfect.
Nice, that's good. Right to the top.
Yeah, almost. It was almost to the top. We had this little area over here that I was more interested in initially. That I thought there was potential to come and react off of, and we had just wicked into it and started pushing lower. And I thought, yeah, that was great. I made the right call by going a 1 to 1.5 R trade, where normally I would go a 1 to 2. And maybe initially it would have missed it, and then I would have thought, oh yeah, it's at an area of resistance, it's starting to push back, and then obviously we had, that's poker night, so you want to finish stuff early and then go about your business. But yeah, this was a very nice trade that I had. Very happy with that one.
Would, in that case, like, say you did have it the 1 to 2 and started pulling back like that, would you keep holding it, or would you sort of, as it pulled back, just take whatever profit is on the table?
I mean, if it were to start pulling back from this point, and if I really start seeing, first and foremost, I would need to see it. So I'm just going to move that out of the way. Let's do this. Let's remove that, and let's hide this one. So if we just had this as a high point prior to me taking the trade, and that was the low swing, and I got in bang average exactly where I wanted to get in, and I aimed for either just to the high of that one or just slightly higher with that previous area of interest, and it just missed my TP. Maybe it spread, or maybe it was just too late entry or whatever, but it missed it. And I'm a set and forget trader. I set TPs, set stop losses, and it did start pulling back. I would really have to fight against the urge to try and close it. But if I thought about it logically, I would consider that, okay, this might be very much similar to this kind of pullback over here, where we're still making a new high in relation to the previous one. We just kind of like need to find the new low. So this might be a pullback to find a new low and then maybe react off of it. Now, instead of it pulling back and kind of like slowing and then starting to get a little bit more bullish bias, let's say hypothetically it started pulling back, it's tempted to push up and lose its momentum and then start pulling back down again, then I would have considered closing the trade as we start printing new bearish candles. But because we didn't, obviously hindsight, because we didn't, I probably would not have closed it, and I would have thought of it a little bit more logically than, okay, we have a high, we have a higher high, we have a low, let's create a higher low. And then based on that higher low, I can then decide. Didn't happen. Price was already, exactly where I wanted it to be for my 1 to 1.5. Sometimes you just kind of like have to take what it is that's on offer and not overthink it, and not try and stay in a trade much longer than what either your strategy says or what your greed is going to try and prevent you from doing. So if your greed is telling you you can get more, you can get more, you can get more, sure, I could have.
Yeah, I guess it's one of those like first trading weeks of the year type thing. So you always take things with a bit, grain of salt.
I'm going to say, when was the first trading week?
It's not going to be clean and perfect. Right? Sorry, what was that, Will?
Huh? I was going to say, when was the first trading week for you? Were you going to like trade right the way throughout the year, or were you going to trade was last week the first week? Because so many traders that I know, like last week was their first trading week, whereas like I think like a lot of traders now, I think this like today onwards is going to be like the first proper trading week of the year.
I mean, I started trading from last week Monday. I don't think I really stopped, to be that honest. I stopped only for that week from Christmas to New Year's.
Yeah, last week is trading. The week before, through Christmas, New Year, there was also, we're active. Like some of the years we've had, either Christmas, New Year, that kind of stuff is on like a weekend, or it falls in the middle of the week, that kind of stuff. I think though, coming into the new year of every single year, obviously most major participants at large funds holding the bulk of capital often don't come back in that very first week, right? So
yeah,
I always tend to consider the second week globally, on average, most people are sort of roughly back at their desk. It still won't be the full ball, but maybe you go from like 40% in the first week to 80%, and then the next remaining 20% of the final 2 weeks of like stragglers. So I think you also start to get some of that data, that kind of stuff. I always consider the second full trading week of the new year. That's like the first week.
Yeah. I think this week for me is like that sort of sweet spot week where I'll start getting back into the momentum of trading again. I think it didn't help either that all of last week was just taken up by moving. So obviously I was moving from obviously UK to Hong Kong. So that was it took up like a massive amount of stress and planning. So I didn't want to be trying to trade from a laptop in the airport, from my phone, and just trading and traveling. Like it's not so bad on a smaller account that you don't really care too much about. But on your main portfolio, like myself, I'm not doing that. I couldn't think of anything worse.
I hope you made an episode out of that.
Of him moving.
That would have been good, wouldn't it?
You should have. That would have been prime. Like
lost opportunity.
Yeah, exactly.
Yeah, I mean, that would have been pretty good. No, I didn't. No, I didn't.
No.
Man, you've got yourself a content creator.
Yeah, you've got the real chaos of actually moving.
Had I have thought.
You're not just traveling somewhere.
I could have got my partner to be like my photographer as well. She could have been like my camera woman.
Yes.
It is a shame, but like in hindsight, it would have been really cool if you did.
Yeah, it would have.
Yeah, that would have been really cool. Yeah,
food for thought next time. There you go.
Maybe I'll do it when I move home. There you go.
Yeah, but that's going home. You're not taking anything anywhere. That's like just going back, right? Not quite the same.
I suppose, yeah.
You can't start the series in the middle. You need to start the series at the beginning.
Fair.
Don't bother. Nobody's going to watch it, mate.
Fair, I have had a lot of people say to me that.
Wow, Rich. Wow.
I said, don't bother. No one's going to want to watch it. And then I followed that up by saying I'm joking.
I think people would watch. Okay, it'd be.
Dude, I would.
Hey guys, Will, I'm leaving Wales. Now I'm in Hong Kong. Now I'm in jail. How'd this happen? Right?
Now I'm in prison.
Prime content.
Watch me trade my way. Yeah, this is gonna be like funded freedom.
This is my way out of
funded freedom. Literal freedom, dude. He needs to get out of jail.
Literally funded breakout. Episode 1. Watch me trade my way out of prison.
Okay, guys.
He's got to trade his way to get
and 3 cigarettes. I need to trade my way out of prison.
Yeah, he's got to trade his way to get the bond.
Apparently they don't have GBP USD in HK prison, so I'm gonna have to trade 3 dumplings for 1 shiv.
Okay, guys, I ended the day on an up. I had toothpaste, a toothbrush, and a nail clipper. So we'll see what tomorrow brings. Follow me for updates. Don't forget, follow me on Instagram.
Yeah, honestly, in hindsight, this could have been like an all-time funded freedom episode for sure. If put the right way.
I think I am potentially going to be doing a funded freedom in Hong Kong. I think we are thinking about it.
So you guys, if you guys haven't been following with Funded Freedom, definitely check it out. Go to on YouTube, either just search Funded Freedom or go to the Trade Delicious YouTube. Find the episodes. It's a good bit of fun. Definitely keep up with it.
In fact, there's actually a new episode. Yeah, there's new episodes coming out over the next couple. I think it's the next week or 2.
Yeah.
But tell me, LJ,
So that's going to be really exciting.
Something like that? Doing a funded freedom version, I don't know, Australia west to east?
Yeah, I mean, the idea was, we'll see where it's going now. I think I got to update myself with everything and what's going on. So I might have to talk to Will with where things are. But yeah, there might be something in the works. So there we are.
All right, we'll leave it
so right. We're going to do something bigger as well.
All right.
Yeah, let's not spoil the potential.
McConaughey.
Let's not give too much away now.
Dude, do you know what I want to see? I want to see LJ in his 6'4" form try and make his way across Australia in like a short little hippie bus. One of those where you cannot stand.
Yeah, one of those like really tiny ones as well.
Very short headroomed ones. And you have to literally try to have gas, food, everything. You've got lodging, but if you don't have gas, you ain't going nowhere. So
yeah, okay. Well, I was thinking you'd be like, okay, you got to do that and then go and like ride an emu for like 10 kilometers and like do this or that.
Yeah. Go and box a kangaroo.
Bro, I'll tell you what, like
as a challenge, if you box a kangaroo, you get an extra like 1,000, which adds to your gas bill to get across.
You unlock
100%.
So you got to go up and challenge a kangaroo.
Can you imagine? Like achievement unlocked at the bottom of the screen, box a kangaroo. You don't have to win or anything. Like no one's expecting you to beat those things. They're monsters.
Yeah, go and punch a kangaroo.
Yeah, you got to box it
over a fence. Bash.
Yeah, you either win and they kind of get disoriented and just like scared and they're like, I don't know what to do, and I guess you win.
Yeah.
Or you get your like bowels like disemboweled.
You know, you get your
end up in hospital. So it's one or the other.
You just get kicked into like the other part of Australia.
Yeah.
But yeah, something like that would be pretty freaking awesome if you.
It would be quite entertaining.
Very entertaining.
LJ just jumps out of a hippie van, runs down, punches a kangaroo, runs back.
All right, guys, I got the challenge.
Got the challenge. Congratulations! Oh, he's chasing me! There's a kangaroo. They're bouncing after him.
Yeah, you got to go through each town and play like rock paper scissors, or like toss a coin for like $50 to get win or lose. You're forced. Anytime that you see a person, you have to either challenge them to rock paper scissors or flip a coin. Win or lose $50. And so even if I'm up in the market, someone else could just come and take it off me. No, I get to the next place. Dude, there's so many things you can do with this. Really fun. Yeah, just any random person out back that you find, you're forced to play it with them.
Yeah.
Yeah.
LJ beats the markets but loses to locals.
Yeah, it could be very fun, honestly.
But yeah, do keep us updated on the potential of it, LJ. If it happens, then kind of like just nod people in that direction. And still, like, it's highly entertaining. People should go and watch the Funded Freedom videos as well. They're all very, very good.
Definitely. Let us.
To be fair,
you guys in chat, let us know.
I think
I was just going to say, let us know if you've watched it, and let us know any ideas that you guys have potentially.
Yeah, 100%. Yeah, 100%
in the chat for sure.
I know that I'm sure it's next week. There's another season coming out, which is going to be awesome. The next season is incredible. I can assure you that.
The level up. There we go.
Love this comment, man. Hong Kong will be taken by Trump because of William Davis.
Nice.
Dude, like what's I said this morning. I'm not getting into it. But what's Trump doing, man? What a man! What a guy, dude! Like he's just.
He's pressing the gas. That's for sure.
I mean,
I think
that's
big ups to if we want some more analysis on the market. So big ups to Jerome Powell, I must say, as far as standing up and being like, hey guys, so pretty much we're being attacked and this is ridiculous. Get out of here, Trump! Right? That was pretty.
I watched his video. I was like, oh, bro, that's savage.
You can read the full story. and watch the video as well. It is quite ridiculous.
Yeah, no, true. Yeah. I literally watched it probably like an hour ago or an hour before coming on stream. It was I saw Jerome Powell and I thought, what's he on about? And I watched it. I was like, oh damn, that's savage, man.
I think he responded the exact best way he could. He laid out very clear, very calm, very chill, and the
very
exact
Jerome Powell
antithesis to Trump, which is exactly what you needed to do, right? He just played by his exact thing he's done for 2 decades now, because he was there with during the GFC, he was the right-hand man of the Democrats at the time with Barack Obama, all that kind of stuff, and advising them on. He's been through both political parties a million times, all that kind of stuff. I must say, I very much respect the guy. He's very, very smart, well put together, everything. Used to work in financial markets. He's not just like an economist, which was part of why Trump actually originally picked him, because he wasn't just an economist. He was actually, a trader and all that kind of stuff, per se. So I'll be sad to see him go, to be honest. I think he's one of the best
at first I thought it was like
the country has ever had since the Fed was invented, right?
I think he at first I thought it was bullshit. Like, I thought he was just joking about leaving, but fair.
I mean, his tender is up.
Right, I didn't think
his tender's up. So the only way he can stay is if Trump puts him back in. So it's not up to him.
Which we all know is not going to happen.
Yeah, because now he's not reducing rates and doing what Trump wants.
Yeah, what Trump wants. Yeah,
yeah, you're about to say, if you don't do what Trump wants, then look out.
Yeah, I don't know, mate. Like, I'm not a fundamental trader or anything like that, more technical in any way. But you do sometimes watch his tweets or his rants or whatnot, and you genuinely get the idea that this guy might be crazy.
No.
Trump, you mean?
Yes. Like,
oh yeah, of course.
Like genuinely,
that's the problem, though. It's so hard to delve between like the hyperbolic, and even when he talks in person, you can tell there's not a chance he would talk to any other normal person the same way he does, right? Like, and not only that because when you watch him, it's obvious, but because he's been a public figure on camera for like 3 decades, whatever prior, that he's never spoken like this. So there's that, and that's what makes it so like ridiculous and trying to pass between.
Yeah, this person is larger than life. Like he's so far away from what you would conceive to be a normal reaction or normal discussion, a normal tweet or anything like that. He tweets something that's just like, I don't know how to even begin to dissect this. Like, where did this come from? How do you view the world that this is the outcome of said, thought pattern? Like,
no, 100%. Yeah, no, 100%.
How?
Like, I'm with you on this one, Rich. I'm not a fundamentalist. LJ, I know you are, but bro, like, even if you're not a fundamentalist, how can you not have your eyes glued to the fundamental markets right now, or the global economy right now? It's just
it's the equivalent of like you're not fundamental with certain stuff, but like that AI is a thing. Right? It's like
exactly.
It's there. You don't have to know anything about AI or the chips or the whatever company or AI company is the best.
You're aware that it exists and it's doing something.
And it's doing stuff. Yeah, exactly. Right. So it's definitely you can't escape it. And that's the thing with Trump as well, where he's made his entire thing and his brand and whatever with that erraticness, which he's played more into that, where it becomes more and more confusing. And it even seems the people around him in his own team are not 100% sure sometimes, where you've seen them go on a public event and they've spoken and then have to like retract those statements because Trump was actually
I was going to say you watched,
and they thought he was joking. or the inverse. He thought he was joking, and he's actually. They thought he was being serious, and he's actually joking, etc. Right? And dude, as far as himself doing this as a tool to gain to where he's gone, you got to give some respect, even though whether you think it's good or bad, you have to give some level of respect as far as it's effective. Hopefully somehow it ends up being effective for the best outcome. I don't necessarily think
I don't even want to say the right reason.
Yeah, I don't think he's like a necessarily fully malicious whatever. I don't think he has the best ideas, but I don't think he's like bad.
He's not nasty with it. Like, I don't think. You know.
Look, there's one thing about him.
It's like a really weird line where you kind of can justify some, and he does some really good things all the time, and that's a problem. And then he does some really whack stuff, and you're like, what the hell? And that's where it gets confusing. And the same with markets.
Yeah, he's like the definition of country bipolar.
Very much so.
It comes.
That's the funny thing, is that he does something, and that's the thing. He does it. He just does it.
Well, I mean, that's originally that's what I expected about Trump.
Yeah, they would usually wait for Congress or the Senate to like approve something. So Trump has an idea and he says, you know what, I'm not going to wait for this bureaucracy, this paper pushing, like, there it goes. It just, I want it to happen and I want it to happen now, there it goes. So he's very much an action.
Well, that's what I mean. I'd be looking at Trump and I'd be like, dude, like this guy, man, he's got some castañas on him, he's going to do all this and all that. Next minute I'd wake up, look at my phone, I thought, fuck, he's done it. Like, damn, this man's done it. But then a couple of weeks ago, like, he's still bloody doing it. Oh, now he's really doing it. It's like, oh my God.
And sorry guys, I just want to quickly answer this. Why are you analyzing US tech when we can't even trade it on the fivers? I've got news for you, my friend. You can. It's called NAS 100. It's NAS 100. That is the symbol on the fivers. You can trade US tech. So
I was going to say, you can definitely trade US tech as far as I'm aware.
Yeah, it's just named differently. It's named NAS 100 on the fivers, but on TradingView it is just US Tech 100 Index. But it's NAS 100, exactly the same.
Yeah, no, exactly. I think that confused me at first when I was starting in my journey of trading, was like sort of symbols. And I was like, I had a trade copy at the time because I was like getting there with profitability. So I was like, okay, I want to start, build a portfolio up as you do. So I started building up accounts, and it was like, why are they not trading on my account? So I spoke to support and I was like, bro, like I've got an account. Here it is. Here's my master. Here's my slaves. What's going on? It was like, oh, check your symbol. I was like, what? What the hell is a symbol? And I was like, oh, yeah, NAS, US Tech. It's fair.
So,
well, then you'd have like XAU USD .ff, or
there's like a extra suffix at the end of it, just like, oh, okay.
Yeah, exactly. And I was like, oh, okay, fair. So that would be really frustrating. So once you get your head around it, it's super simple. But once you start understanding that they all have, like, there's like one of two or three like sort of possibilities. It could be like US Tech or NAS 100 or whatever, like US or NAS. It's going to be something
or NQ
like that.
100
NQ.
or
NQ. Yeah. So NAS, US Tech, or NQ.
Yeah. So
US 100
on the high stakes program, Tribu is asking as well. Yes, this is a high stakes account. It's a 5K high stakes account with the fivers. If you click on View and then you go to Symbols, if you're using MetaTrader 5 and you just click on Symbols, you can go to Indices, and there's all the indices that is available on the high stakes program right now on TradingView. And it is NAS 100, which is the NASDAQ 100 index. You have S&P 500, which is the S&P 500. You have the UK 100, which is the FTSE, FTSE. And you have the Japanese Nikkei, which is the Japanese Nikkei 225, so Japan 225. You have the US 30, which is the Dow Jones, and then you have the NASDAQ, which is the Frankfurt Stock Index. So it is there. All you need to do, if you are looking to trade a specific pair, the only one that I don't have up here at the moment is JPN. So I'm just going to close that. I'm going to go to the navigator and just show you. So, Market Watch. My apologies. We'll go to Market Watch. There's all of the Market Watch ones that I have up. If I go back to the symbols, and the only one that I don't have up of them is the Japan Nikkei. All I have to do is just double click it. And once you've double clicked it, and if you just come to the left here, you'll see that, okay, if I can close it first. There it is. And then you can just right click and say chart window, and then you can start trading. So if you were looking to trade NAS on a high stakes account, just, or US Tech, look for NAS 100.
And easy. When you guys go into that, like Rich was showing, you can see the swaps as well. If you guys hold stuff overnight, yeah, that's the other important thing. If you guys are wondering.
NAS, the information, you will probably not see it all that well now. This is a 4K screen, but the information here at the bottom is what it will show you. It will show you what is the spread, it's floating, what's the stop out level, it's 10, what is the margin currency, it's dollar in this case, it's CFD leveraged. You go all the way down, you will see what is your swap long, what is your swap shorts. You'll get to see on specific days what are the swap rates, Mondays through to Fridays. Fridays has a 3x swap rate. The rest of the week is a 1x. You'll see the sessions that you're allowed to trade with it. What is your market buy notional values? It's all of the information is here. You can see all of it.
Yeah,
very nice.
That's the important thing to remember between that and FX. For instance, with the swaps, slightly different days. FX is still Wednesday. So
Wednesday's triple.
Yeah, for the triple. Whereas indices will be Friday, right? So if you hold it over the weekend, so don't forget that.
Should we asking, is it new? Sorry, I thought it was unavailable. No, it's not new. I think we've had this for quite a long time. I think it's just the idea that people assumed that US Tech was going to be the same symbol across all brokers. So some brokers have it as NAS, some brokers have it as US Tech, and so on and so forth. So maybe when you went to go and have a look, you didn't see US Tech and you thought, it's not there. But it's been there for a while.
Yeah, so typically these things are traded via basically a CFD, right? So hence different brokers will have different names of just how they catalog the CFD, etc. Often, you know, depending on their client base, like who, how people search things, that kind of stuff. So but it's the same. It's the same thing.
John and Dugu asking, Richard, where can I get the software? So this that's on the screen right now is TradingView. So you can literally just go to tradingview.com and you can go and find TradingView. It's free to use. You don't have to have a subscription. If you do want a subscription, there's a monthly fee that you need to pay, and there's different levels to it. And the only changes, or the only thing that changes between the different subscription prices, is just how many charts you can have up, what data types is available to you. Do you want tick charting and all of it? It's like a little bit, but you can get away with a simple. But if you're talking about MetaTrader, if you are getting an account with the Fivers, on the hub screen where you buy your account, your evaluation account, they have a download link for MetaTrader 5. You can also go to MQL 5 straight up, and you can go and download MetaTrader 5 from there as well. Very easy.
Yeah. So Wednesday triple swaps basically counts for the weekend, right? So each night you pay a swap. So swaps are basically, say when you've got, let's say, two currencies as an example. Say you take euro dollar, or say the euro and the US dollar, and you're trading euro dollar, right? Say you're long, you will get charged on the differential of the interest rate from the dollar, so from the Fed, and the interest rate from the ECB, and whatever that exchange rate is to hold that currency. Because essentially when you're buying or selling, so if you buy the euro dollar, you're buying euros and you're selling dollars. So if the dollar swap rate is higher than the euro swap rate, you'll get charged money, right? If it's inverse, you'll get positive swaps. Now, not all brokers, not all providers will actually give you the exact rate from the central bank. That is the important thing to remember, right? It's based on what offerings they can get, what liquidity they get from their prime of prime brokers, what rate they can borrow certain currencies that they basically offer it to you when you trade the asset. But hence, that's why we're highlighting to actually look at what the swaps are. So you're not left in the wind and you're like, okay, why is my trade now got a swap differential of minus $200 just because I held it overnight? It's basically because of that. So it's the interest rate differential. So over an entire year, say if there's a 2% interest rate differential between, I don't know, the US and Europe, so the Fed and the ECB, you will get charged that divided by 365 days, right? And that will be an individual day's worth of interest. However, that is then multiplied by whatever your leverage is on the position you are taking. So if you're taking a 10x leverage position, you've got 100K account, you've got 1 mil, so 10 lots, it's going to be 10x whatever the day's interest would be, right? So that's something to be aware of. If you're holding like swing trades over multiple days, you will get charged that interest, which is just a normal currency thing across the world. That's how, I don't know, how money works, I guess. But yeah. But you can always look that up on the symbol. It will tell you exactly what you're going to be charged or potentially debited, right? Like given profit for or not. So
on the triple one, it's literally 3 times more than you would have done on a normal day of holding it. For FX, it's Wednesdays. For indices, as you saw, it's Fridays. So you can hold, if you entered a trade on Monday, you can hold it all the way to Friday morning, no problems. But if you want to hold it over the weekend, you're gonna pay 3 times your normal rate. So just take that into consideration. And then Dubakur, all these people new to trading or what? Yes, there is a lot of people that come to the Fiverr's live stream not knowing anything about trading, and we're happy to have.
Yeah, you already know this, Dubakur. Come on, like people come in all the time. There's always new people turning up. Come on, man, you know this. You might be a veteran with us. We love you. But there's always new people turning up.
There's a lot of people that rock up that don't know anything, and we're very happy to have them, and we're more than happy to at least share some knowledge that we do have, so that we can be a good factor in the trading sphere, because that's what we aim for. We aim to be the good guys, you know.
Yeah, exactly. There's so many people that, like you said, you know, like yourselves, Dubakur, that are veterans in the space, or very much people like myself, Rich, and LJ, and all the other guys who stream with us. You know, it's just a matter of coming on and being social, chilling, and hanging out as a community. You know, a lot of you guys are here to do that. But then, of course, like Rich just explained, there are a lot of people here to join as newbies who are just looking for a healthy space to learn. So the one thing we do ask is that you welcome absolutely everybody with open arms, whether they're a veteran, experienced, or whether they're complete newbies who just want to learn from the best and the most transparent.
Dude, unbiased trader, we all are. Yeah, that's it.
That's why I'm in prison.
That's why he's in prison. Exactly. Tax evasion.
Yeah. I tried to escape the UK, but they caught me and put me back in prison.
Yeah, he's about to get extradited back to the UK, but it's going to take 6 months. Isn't that like white collar crime? You know, the typical fraud, tax evasion.
Yeah, dude, there's a documentary the UK doing some like old. Dude, the UK is doing some old like colony type stuff where they send people to Australia, but now it's to Hong Kong apparently. So there you go.
I'm being sent to Hong Kong. They've actually said to my partner, "No, you keep him. We don't want him anymore."
But yeah, so hence, like, obviously we try to give a bunch of stuff to some of you guys that have just come in. You're just trying to learn. Everyone intermediate, and then some of the advanced stuff. So some of the stuff like often talk about with Dirk, or sometimes when Jonatan comes on, and particularly with Dirk, we talk about some options stuff, a bit more quantitative things, some more in-depth macro fundamental stuff, but try and also break it down into the most like simplest, easy to digest for you guys, even if you're intermediate or just starting out, that you can understand when we're talking about more high level stuff. But we talk it right here.
This is a good comment too.
So there you go.
Yeah, exactly. This coming from Sire saying sometimes you need a refresher, although you may already know it it also helps the newbies as well. Yeah. So yeah, absolutely. Like, you already know the stuff that we're talking about, and some of you, this is probably like super basic. Like, obviously, this is so just on the nose stuff. But at the same time, it may be a point of like, actually, even though I've been trading 14 years, I've actually forgotten about that, because that's something I haven't thought about probably in about 10 years. So it's a matter of just like repeating and refreshing. And it also helps with other people who are out there learning and who are beginning their journey.
Exactly. That's how you revise for an exam or something, right? You don't just do it once.
Yeah, exactly.
You revise the exam, you learn again. And then, so obviously, any of you guys that do have more complex questions, you can ask. If you've got intermediate questions, you can ask. If you've got a basic question, you can ask, all that kind of stuff. So don't be afraid. Wherever you're starting, that's kind of what we're trying to do here. So whatever point or level that you guys are at, then you can offer, and we can help you out. And there's no, just like science, there's no bad questions or anything like that. So wherever you are, throw it out there. What are you guys laughing at? Did I miss something?
CC's comment. This one.
Can I just say, she's having food without me. She's actually she's having food without me. She's left me to do all the dishes and currently eating out. Wow.
Mate, you're not doing any dishes. You're in the pen, mate. You're getting your food delivered to you.
I'm in prison. Like, do you not tell? I've been caught.
Yeah, but when you're in prison, there's daily duties that you have. So one of them
there is indeed.
So in your case,
he's got to go like print like license plates or whatever,
Yeah. How? Where was this now? I just saw this question now. The Daily Milang saying, how does this apply when trading gold, given it's gold versus USD? Also has a swap rate. Same thing. It follows the same swap rates as
the exact same.
So it's also tripled on Wednesdays for gold versus USD.
Where's this?
6 minutes ago.
I'll bring it up now.
Two down. There we go.
Fair. Supply when trading gold, given it's gold versus USD. So gold. This is always, I will say, from my thing, one of the things I most hate, because yes, gold will go up per the US dollar because it is priced in US. However, primarily the driver typically is not actually the dollar, especially right now. It hasn't been for a long time. It has an element such that, yes, it is priced in USD, almost the same way that you look at a certain stock. You can argue that stocks are priced in dollars. They keep pricing dollars every single year, or printing dollars, I should say. Therefore, all stocks should go up. It's not quite like that. Like, yes, that does play an element. But it's only part of the story, right? Yeah. So the majority story is going to be the gold element itself, always. So
I got a good question.
Take that as what was that, Will? Yeah.
I was going to say, I got a good question here, talking about gold as well. Asking, do you think the gold right now is more of a fundamental or a technical pair to be trading?
I reckon.
Like, obviously for me,
No question.
Yeah. I was going to say, as someone who understands the market, I'd probably say fundamental, but you could relate that to everything is based through fundamental. The markets don't move because we trade them. The markets move based on 100 different factors, most of what all being fundamental. However, as a technical trader myself, I'm always going to trade technical analysis, not so much the fundamental. But who does? But did you just move me to the bottom?
No, I moved you in the middle.
Get.
I put me at the bottom. I moved you in the middle, and I put Richard.
How dare you? How rude! I've just been exiled to the bottom.
Dude, I was being kind. I put you in the middle.
But yeah, as a technical trader, I will always trade the technical analysis, even if I feel like gold's being more of a fundamental play right now. But LJ, what's your thoughts as someone who is a very hybrid trader, like fundamental or technical?
Right now, so for gold, it's 100% fundamental, right? This is all gold's not just going up because people randomly decided to like a yellow piece of metal that comes out of the ground, which is very scarce and weird, and you got to dig some dirt. Like it's very particular. Very specific reasons, and I'm sure any guys that haven't been living under a rock know that everything that's been going on, whether from Trump's inauguration to the trade war, all the way going back to Ukraine, Russia situation. We had COVID. We've had QE1, QE2, QE3. Money printing is now the way to go. All of this sort of stacks up to more and more printing of debt to continue the current financial system, right? That is that we've gotten so it's like a very stacked tower which keeps waving, which is the only way that they prop up the next portion is build these other stacks of cash through QE, which builds these next towers, which allows the tower to go ultimately even higher. And then the new top starts waving again, and then they got put new supports all the way up. And that's kind of what it is, right? Everyone knows this. This has been the thing for a long time. This is the same reason why we've had, anytime we do have a kind of wobble or a so-called crash or something else, there's a very much a buy the dip mentality in the stock market, companies, debt financing, all this. We've had zombie companies existing for ages because right now we can't let them die. No one has pensions. Everyone's pension is related to the stock market. So every country pretty much in the world is betting on stock market go up means we can pay for pensions for the old people, right? And everyone's gone to this, whether you have in America 401ks, in Australia we have superannuation, in the UK I don't know what you have. What is your retirement fund in the UK? Will?
Question Will.
ISO? Yeah, you guys probably have something as well, Rich. Basically, everyone has joined the train of investing in the stock market as a version for a pension. No government is expecting to pay out, pensions, redemptions, all that kind of stuff. It's going to come from stocks. So every single country in the world has that predicament, and kind of everyone's gone in the same way. Some did it earlier. They're going to fare better. Some did it slightly later. And especially the ones that did it a little bit later are going to have every emphasis to put more into it to make sure that they meet the mark of the ones that did it earlier. So that's kind of where we are. And it's a debasement of currency. That's just how we are. That's capitalism. The whole inflation type thing. I'm sure you guys have experienced it yourself. You see inflation is at like 2.5%, 4%, even during COVID, like what were some of the peaks in the UK, like 11%. And you're like, hang on a minute. You go and buy something and it's up 50% or 40%. You go buy some cheese and you're like, I paid $2 for this. Now it's £4, right? Like that's double. That's not 11%, right? So you guys can all clearly see this. So hence as far as gold is like, the only protector against that. We're in this weird, not quite de-dollarization, but people having questions about the US debt situation. Europe can't take over. China can't take over. There's no other best option. US is still the best. Hence, the US still gets inflows. But aside from that, if there is a change, you want to be very much invested for gold, because then you can shuffle that around and come into whoever's the next leader. So that's kind of where we are. You have comments, Rich?
Yeah, I'm just seeing just seeing my here. So my I don't know if you guys can hear me okay, but my my Wi-Fi's breaking up a little bit. But yeah, you do have the UK workplace pension, which is like NI contributions, so like national insurance contributions. So you do have something similar to the 401k, or you do have the cash ISA options where you can invest in like the stocks and shares, and they do the investing for you. But I don't know. Oh no, what's it doing?
Yeah, South Africa is very much the same. So we have two variants pretty much. We have a pension, which is something that you have like a state pension, or you have a company pension where a company pays into, and that fund for you. And then you have also what is known as a retirement annuity, which is a privatized pension basically. So it's something that you go and buy from a insurance company as an example, and then they will also do their version of investment, but it's all still coupled to either a specific company's growth or a multitude of companies' growth or stock market or whatnot. So it's all exactly the same. It's the same idea that also like in South Africa, the state pension is absolutely empty. It's just because of mismanagement and just like corruption overall and so on and so forth. So it's not even just to do with the fact that there's these continuous, we have this machine that's old and is really not good for us, but we can't let it stop going. We need to have this machine carry on running, because if we don't, the whole world collapses. The world is collapsing in that sense, but we want to kind of like have it slowed and a bit more controlled collapse, so that we can kind of bring something different into its place steadily, so that when it does fully collapse, that there's something that can say, hey, look, here's the alternative. So you kind of like need that machine to carry on running up until that day comes. And when that is, we don't know.
Yeah, we don't know. It's definitely coming sooner. It's like the things that Elon has said, like, don't bother saving for retirement. Everything will be accounted for.
Yeah,
I don't know how much I'd
that's becoming
go on that, but I would definitely still acquire certain hard assets. This is where I don't like real estate, but in that matter, if you control real estate, you will control real estate, etc. And this is when those things actually go through the roof.
I think you'd be stupid not to invest in bricks and mortar. Like coming from
once things go parabolic with that, which gets weird, stocks you can issue more stock. You can do whatever. It's ephemeral. You can issue more currency. We swap regular currency for crypto, backed whatever things like governments will do, like government backed, whatever stuff.
But I am hearing more and more often now that people are saying, like people of power, like bigger people, like large fish are saying, don't bother saving. Don't bother saving your money. Don't bother saving up. Don't bother putting it in this, that, and the other. And a lot of people like yourself who like, I hate bricks and mortar. I think bricks and mortar are anchors. They tie you down to a certain location.
In the current thing, yes, it is. It's terrible. You look up so much capital. It's dead. It's dead capital. You can't expand on anything. But if the future expansion essentially is going to go like this and then go to death, technically, you'd be better off buying like a V10 Lambo with something else is probably not going to be created because of laws and all this kind of weird stuff, or real estate in certain prime positions rather than even stocks. And this is where it gets really weird for me, even being in markets and doing this every day and trying to think about what I make trading versus what I put away for like the long term into stocks. You've got two aspects where either the stocks kind of become irrelevant or they go to a bazillion. And then you can do what? Because then if we have to have some redundancy that everyone can go and do stuff anyway, you can go to a nice restaurant, you can do this and that and whatever. How much value is that? Maybe you get, even if you've made, say, 10 mil, is that now worth like 10 cents on the dollar? It gets into this weird thing of even owning proper wealth is not actually worth wealth anymore because it's been reduced by, and so hence hard assets like that, they're actually real, actually become cataclysmically worth more. And the other stuff is just like, okay.
And I mean, if all that fails, at least you have a home.
Yeah, so I think, I mean, we've talked about this a couple of times now, which it's going to seem redundant, but same thing with a couple of times I've talked about this with Dirk in like the bond market when we're talking about how people are pricing out like the 10-year, the 20-year, 30-year bonds. And it's not just for the US, it's for all countries. Because people are looking at this, and if you have half a brain, you're like, I have no idea. You can't have no, like it's the extrapolation of potentials is ridiculous. So
is this sustainable? I don't know. Is this good? I don't know. Is this bad? I don't know.
So for any guys where you are, I was just going to say, lock down the things you like doing. Think about what you actually would like to spend your life doing. Try lock down some of that. If you can make some extra money, there's probably another like 5 years to do that. But start to lock down those core things and circulate your life with that, whether it's your house, whatever. Maybe you just like painting. Find a nice place, a nice house, buy that house, which gives you a nice vista where you can paint things. That kind of weird, random, obscure things, I think will become very rare and very valuable. But not to get too abstract, but it's weird because it's abstract, but it is very current at the same time.
Yeah, I was about to say, it's a very real thing that everybody's going through right now.
I think I'll get to the point where personality will start earning money. Personality will pay, because we're getting to the point where we're so robotic in what we rely on, how we make stuff. So many people coming up with digital art now, digital AI, digital this, digital that. Everything's becoming a point where we're reliant on computers. I think it'll get to the point where someone has a personality and puts that personality. It'll be like old-fashioned art again. It doesn't matter how good, it's the fact that a real human is created. I think that'll be worth something.
Definitely. I mean, people, like, we're social creatures, so that will always be worth something, obviously. I think.
Yeah, exactly.
Even with that, though, it will get watered down because a lot of the time a lot of the people that would have that element but have been drawn into the 9 to 5 vacuum per se, and they can't do that, will now be unleashed. And I think there's a lot of good people out there with that will be unleashed, right? And then it's really hard. So just don't do this. Don't do what unbiased trade, dude. Brother, don't tell me you actually took. Don't tell me you actually took those trades.
Ooh.
We told you. We told you. We told you not. We told you not to, bro. Don't tell me you did. Please don't tell me. Unbiased trader. We love you. Please don't tell me you did that. Or if you did, it was on like a small portion of capital that you didn't get hurt as far as like 21% of your
21%.
Net worth. Yeah, please.
Are we talking about 21% of personal capital, or are we talking 21% of a evaluation account, which is...
I mean, it'd have to be personal capital, obviously. And we were talking about 2x long, NYSE, net short, whatever stuff. This was like a technical thing, yeah. So it would have to be personal capital. But please tell me you didn't get punished on that, brother. Please.
Yeah.
Please.
That's
we
why
said don't do it yet. Don't do it yet. All right.
Yeah. That's why we preface. Don't take the trades that we do or the analysis that we do. It's it's for entertainment purposes, first and foremost, and secondly, it's educational. So it's like always take it with a grain of salt and then go and test it. Don't just blindly follow it. That's a recipe for disaster. Will looks pleasantly surprised.
Yeah, it does. Yeah, no, but we were talking about, we were joking about, because it brought up a short liquidation of those 2x or 3x leveraged silver longs. And that has been part of the expansive run in silver that we've seen, just like here, so through here. So that's what we're saying, like, don't do that. Yes, even though we had that peak and it's like we didn't get to the prior tops and we had this drop, don't short here. It's basically what me and Dirk were saying last week. Normally there's another pick up, another top, another blow off portion before you actually drop. So don't get fooled to think that it's doing a gold type situation and it's just going to drop off from here and we go back down to like 60, right? So please tell me, unbiased trader, you didn't. Please tell me.
He says it's on SIPP, but 1.2% of capital, which is 21% of 1.2%. So no harm so far.
Oh, okay, that's fair. Yeah, that's right. Then that means you got potentially room to actually add to the short trades through here. So eventually it would take form, but dude, I was worried you went in with like full background capital with like
I was going to say my Wi-Fi was just
capital or something, and you just deleted
out.
that like
21%,
and then my whole system just
rebooted.
Yeah.
Can you guys hear me? Okay?
Yeah, we can now. Yeah.
Okay. Oh, that's fine. I was just saying, like, my whole system just crashed out, and then it refreshed the page. And then it opened up to Unbiased Trader saying that he lost 21% of due to a silver short after ignoring you guys. I was like, oh no, what have I just joined back on? But then I saw it was only 1.2%, so I was like, okay. I was like, I mean, it's not that bad.
You could probably add, once we get another blow off top through here, Unbiased Trader, like that would be fair. Like we were saying last week, with something like this is so distorted that yes, you will get a drop down, but typically it's not on the first attempt. There's always a second attempt that didn't quite make it. Normally you want at least a double top or some kind of over push to actually get there, right? So if you got up towards 90 type area, towards $100 on silver, now you could consider adding something. I know you just said no adding, my friend, but up there that would actually make sense.
Stop listening to LJ. Stop listening to LJ.
No,
you got you in this mess in the first place.
No, we said don't do it. Right? We specifically said don't. It was like, nah, man.
Okay, listen to LJ now. If you had only listened to him, you would not be in this mess.
Yeah, me and Dirk on
only listen to LJ at certain times.
Wait, dude, you took it? You took it? No, don't. Not yet. Not yet.
Don't take it.
So, but if that's the actual ratio, then you potentially actually could. So, 1.2% of capital, 21% in terms of the trade of 1.2%. No harm. Okay.
Cyprian is asking a good question here.
Not financial advice.
Yeah, it's more of a statement. It's not really a question. He says, I trade Euro USD for my setup. I didn't get a single setup within 2 weeks. Is that okay to use more pairs? Yes. If you have the short answer is this: yes. If you have a strategy that works on multiple pairs and you've done a bit of backtesting and you go and see whether or not the pair or the asset is running similarly to the one that you were normally trading, then yes, you can go and trade more than one. You can trade as many pairs as you want. I have a 2.5K account with 5 years. Yeah, you're not limited by the amount of pairs that you're trading at all. So you can trade, if you trade Euro USD, You can go and trade NZD USD. You can go and trade, Euro CAD. Like you can trade whatever you want to, so long as that asset is on the Fiverr's platform, and you can trade all of them. So you don't have to trade only one. You can trade as many as you want. But once again, with that is make sure that whatever strategy it is that you're following is replicatable on these other assets.
I would also say, if we're talking within the 2 weeks, if we're talking within the past 2 weeks, do not take the past 2 weeks as typical trading ranges or trading activity. Right? So before Christmas, going through Christmas, into New Year, the week after New Year, so you kind of have this 4.5, 5-ish week plus minus period, which is not reliable as far as the price action, the charting, the candlesticks that you guys are seeing, right? Because no one's at their desk. Everyone's on holiday. Everyone's gone away. We have a mash of data that is either, especially this year, has been lagging, or we didn't get altogether because of the government shutdown. We had a differential in the actual payroll number. We had a different date as far as the Fed. It's been a very distorted year. So do not take the price action through this period as normal. So this sort of box that I have, this is just to the 23rd. Arguably, it'll actually take it probably a bit before that. This is abnormal. So it's a bit irregular. So if you have a certain trading approach or strategy or something, and it hasn't applied to this through this period, do not go out and go like, okay, my thing's not working or something. This is a very, very abnormal period. You don't have people at their desks, at hedge funds, at mutual funds, at institutions, at banks, the whole bit, where the bulk of the capital is coming from. So you'll get distortions. It's very low volume, low liquidity, all that kind of stuff. So wait, probably this week it should get better, but wait for at least this week and then take that data from beyond there. Don't take the data of the past couple of weeks if you've been trying to trade as like a representation of typical activity. In a way.
And also to add on to that as well, we had the government lockdown from the US as well. So we had an extended period where the news coming out of the US itself was stunted or non-existent. So the reliance on these news events for forward projection, as an example, maybe on an asset, was very, very, very impacted. And you were just not getting the volumes that you normally would have had that governmental shutdown not been in place. So once again, also abnormal when in relation to where we normally trade. So if you compare it to normal trading experiences, it's abnormal. So, but it is normal through the larger picture to have days like this or have weeks like this, because it's a recurring thing whenever there is holiday seasons, like during the Christmas season and such. So it's a normal thing. But if you're basing all of your information just on what you saw the last month and a half, you're not getting an objective view of how the market actually moves, because it's a very, as LJ explained, as a very opposite, not opposite, but like very diluted and very watered down version of what the market is actually like.
Yeah, because typically when you get those periods, it's like a 1 or 2 day thing, with like a bank holiday, or you go this and then it's like 4th of July or something else. Christmas is always one of those periods where it's very extended, and it depends whether you get the Christmas Eve, Christmas Day plus New Year's ending up on the weekend or during the week. So this year, obviously, we had it both during the week. The past couple of years, we've had it on the weekend, roughly, or partially into the weekend. So yeah, very, very different this year. which shifts around people's time frames of just taking holidays like normal people, working in a bank or a hedge fund or an institution, that kind of stuff. So
yeah,
take it with a grain of salt.
Very much so. Unbiased trader, man, you have like the most interesting questions that just pop up every now and then. What do you guys think of Chicago wheat?
I saw that. And I was like, I looked at what do you guys think of Chicago wheat, and I was like, I don't know. I've never looked at Chicago wheat.
Unbiased traders just trying to give us some graft. It should be down since Ukraine. I will say that.
Yeah.
Because Ukraine has a large. Okay, this doesn't quite go back before that, but Ukraine actually has like, as far as carbohydrates and like wheat and stuff, it's like 22% of the entire world's.
Yeah, they're a very heavy.
I was going to say Ukraine is massive for arable farming.
Yeah. So this, I mean, as you can see on, I don't know, maybe we can get a different. Let's go Capstone or something. See if that. No. Oh yeah, that's better. Okay, see.
So I'm sure it's like 90% of Ukraine's export is arable. Like, for example, wheat.
Like, dude, I gotta keep zooming out. Holy hell! But yeah, so that is 20. So yeah, it's 22% of the entire world's calories. That's what the stat was that I have in my brain from back then. So, which is in dude, that's insane for one country. You have 22% of the world's calories.
It's a lot, but I mean, it was heavily impacted by the exports itself was heavily impacted by the invasion from Russia. So
yeah, it's all yeah.
Yeah, I wouldn't. This wheat, like commodities, in my opinion, is way more fundamentally moves way more fundamentally than it does technically. Like I think
100%,
it's like
of course, 100%.
If you see 100 SMA smooth moving average or simple moving average getting crossed, I wouldn't like jump on that as the gospel and say, oh yeah, it means that we're most probably going to start rising from here. You know.
Yeah, it's much more like a like we were talking about when Dirk was on, knowing a asset between the proportion of speculators and hedges, right? So things like stocks or commodities, even commodities are going to have a general tilt to the upside because people want to sell stuff. Stocks definitely to the upside. Commodities slightly less so because there's a lot of players trying to hedge stuff and you go through cycles, that kind of thing. FX is it's kind of mutual. It's very back and forth. But yeah, so commodities, when you get this stuff, you have an absolute rip and then you have an absolute crash. That's how it tends to go. So you get these super cycles. Obviously, this was not really an actual super cycle. This was because of invasion. But yeah, go figure. Anyway, Dubicor's just trying to troll. So either way, but yes, wheat has crashed. So there you go. There's your wheat chart, Dubicor.
I wonder why.
Yeah. There was a question now. I think it's an interesting one.
Next, you'd be asking what's orange juice looking like?
What's orange juice like?
Do we want to look at frozen dude? Orange. I think orange juice and coffee have all tanked.
Yeah,
they've finally come off from their portion.
FX is also asking, risking 1% to gain 8% and passing the first phase is considered one-sided betting. This is at FTMO. Is it considered as such at the Fivers? So he's not sure. He's not sure about whether or not the Fivers considers one-sided betting the same way that FTMO considers it.
If you're ever if you're ever confused about something, just speak to the support team. It'll be in the terms and conditions. It'll be rules, and if it's not, speak to the support team. That's the best thing you can do.
That shouldn't. I would say typically, okay, if you got a generally like measured trade, so if you're going 1% risk and you got an 8% profit, we would assume you're not trying to like, okay, because there's two ways. Okay, let's look at euro dollar as an example right now. So you could have, so these two levels that are measured out, which I guess we've tapped from 1 to 1 right now on this. So there's two options. You could go long right here on that support, and you could have gone like full margin of the account and risk like 1% here. Let's get it to 1 to 8. There you go. Right? Now, if you went full margin on that thing with, what is this? This is actually, funnily enough, not too bad. This is a 9.6% stop as far as people going full margin, because they often go like, I don't know, 3 points or 4 points. But yes, in general, that will be very poorly favored upon. Even though, yes, it is 1%. If there's a news event or something, you get stopped out, like down here, another 10 points or whatever, 2.5%. A lot of people don't just go 1% to 8. They go 2 or 3 or whatever to 6, 9%, right? It's not that kind of ratio. It's not 1 to 8. Right?
So you can ask the chat, not the chat, the support, and they will give you a very nice answer. I just did that quickly. Would you mind if I quickly just read it, just so that we can get?
For it. Yeah.
Okay.
Yeah, of course.
So, one-sided trading refers to a strategy where a trader consistently takes positions in only one direction, either always buying, going long, or always selling, going short, without considering the overall market conditions or conducting proper analysis. For example, a trader might continuously enter a long position on a currency pair, believing it will keep rising indefinitely, regardless of the contrary market signals or indicators. At the fivers, this practice is prohibited because it shows a lack of proper risk management and market analysis, which are essential for successful traders. Consistently making one-sided bets can lead to significant losses and violates our trading rules designed to ensure fair and responsible trading. And I also think that it has to do with if you risk not 1%, but let's say 80% of your entire account on a singular one-directional trade. So you keep entering and keep entering with like up to 80% of your account. So you can enter 1% trades and keep it for an 8R. That's not a problem. So I think maybe the FTMO has a different way of considering what is considered one-sided bets.
Yeah.
Well, I think I went over this with because we had basically the same question with Dirk before. So we're trying to say with this, where it's like you keep doing this kind of martingale thing like this, right? Where I keep, like you guys are seeing right here, I'm stacking positions, and
goes against you.
Even though the price is still going up, you keep trying to short it again, and then you keep adding to it, and you keep shorting, and you're like, I'm going to short again and again, right? And then you keep getting stopped out, or you even go like this. Okay, this was the original one, and you go like that. I'm going to like increase that one, and this was the second one, and you increase that, and then you add it again, and then you increase the next one, and you increase the next one, and then now you've got like the whole account on risk for essentially one trade, which is clearly going in your wrong direction. Like it's clearly against you. You're getting absolutely slaughtered here, but you keep adding to it because you don't have an actual trade. You have a bias. You want this to happen, not observing if you go down.
I was going to say, it's not even a technical bias, it's an emotional bias more times than not.
Yeah. So if you look at this on the shorter term time frame, this is going to look kind of weird because we're stacking up on the daily, but it's just gone up, and you keep trying to short and short and short and short and short. Right now, you're not trading. It's clearly gone against you. You've clearly had this breakthrough here above that time frame. That's where you should have, scrapped the first trade. It's like this first trade, instead of moving the stop loss up to here, you should have had a stop loss there, and then you scrap it, and potentially even you go long. Right? You're like, okay, I'm incorrect. I now go long, and then you look at some of these like prior highs over here, right? And then you go, instead, I'm going to go long for up there, right? Now that would be a reasonable trade, but if you scrap the short that you had to go down there and then swap long, that's fine. But if you keep shorting,
you're allowed to stop in reverse.
What we were saying as well, it's like martingale. You're just trying to stack positions, hoping that this would come down. And you're like, and then you stack more up here, and you're like, oh, it came down a bit, and you just need it to come back down to here, and you'll be good. But if it doesn't, you're cooked, and it didn't, and it kept running, and now the whole thing is burnt. So obviously,
that's why it's called one-sided betting as well. It's not just trading at that point. It is betting. It's gambling. You don't actually have a position per se. You may not even have a bias. You may have had a bias, and then it hits what would have been your stop loss, but you go and extend it like LJ's just exampled. But then you go and extend it, and then you put another one, and then you extend it, and then you put another one. And that's just betting on an emotional bias that you had prior in hope, not even anticipation, but in hope that it's going to go down. Therefore, you're no longer trading. It's no longer an edge. You're just gambling. You're betting. Hence the one-sided betting.
Yeah, so Roland did say, or he did reply by saying he asked Jonatan, and Jonatan did say it's fine. It doesn't count as one-sided betting. The question or how it was asked, risking 1% to gain 8% in one phase is considered one-sided betting by FTMO. It's not one-sided betting. One-sided betting, very much to do with the fact that you keep going against the trend and you keep adding in, and you get to a point where it's outside of the realm of analysis. You're just kind of like hoping that it goes in your direction. Yeah. So
most people will look at one side. So, like for example, LJ just gave that example now on his trading view. Most people will look at one-sided betting and be like, okay, yeah, fair. That is one-sided betting. I can see why. The more times than not, it's obvious what one-sided betting is. Just taking one position in a single direction, and you take 3 or 4 in a row. That's not necessarily one-sided betting. Usually one-sided betting gets flagged when it's obviously one-sided betting, like what LJ has just exampled.
Yeah, I mean, it's like going to a roulette table, right? It's like going to
exactly that. Yeah, 100%.
You see, it's being black, 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 and so you keep being red, and then it's black.
And you're like, at some point, it's going to be red. It's going to be red, and you just start stacking in your orders, going, it's definitely going to be red at some point.
But each spin is independent. It's completely irrelevant of the past numbers. It doesn't matter. So that's something you have to recognize. So this would be an example of one-sided betting. So just like you said, you messaged Jonatan, and that's not it. So an example would be, say we go to gold, and let's idle this garbage.
Well, yeah, there you go. You're trying to sell all-time highs.
So you did this.
And then just
it's going to bring up the garbage again. So just bear with me, guys, with that. But you take that trade and you hold it all the way up here. Let's go 8-1 even, a bit further. Let's go to basically 4,800. I want to bring this a touch higher, but that's basically 8-1, 8.4. That would not be one-side betting. That's just a good trade. You got a good entry, right? On these candles here, we had the wick, the
based on the good analysis.
Yeah, on good analysis, you bought on the thing, and now you're holding it. and you hold it all the way up to here, that's not one-sided betting. That's just a good trade. So that's completely different.
That's just trading. That's just an analysis.
Yeah. That's just a good trade. Simple as that.
Even if it goes opposite. So let's just say, for example, you wanted to sell. So if you go and put a sell at the high that has just been broken, LJ, if you put a sell there and it hits your stop loss, and you're anticipating for it to sell and you were selling the highs, that is not one-sided betting either. That's just a bad trade. Like it doesn't have to be a winning trade all the time. You know, you're not going to get one-sided betting if you lose a trade or win a trade. Like they're not going to look at you and think, okay, he's won this trade or he's lost this trade, so it's one-sided betting. You know, like we've just, or like LJ's just put up as an example there, it is a matter of, it is in your face, obviously one-sided betting. It isn't necessarily of just you've taken the wrong trade, now it's gone against you. So if you look at this now and go, oh my God, this looks like it's going to potentially hit my stop loss, and then it does hit your stop loss, that's fine. That's just standard trading. That's okay. Whereas if you go and then, like LJ put up initially, is then start stacking, that's not okay. Because then that's starting to be like, okay, you're now losing your analysis. You're now losing your initial sort of thought process to that bias.
Yeah, so if you keep doing this as it goes up and you keep short selling this as it keeps going up and you're like, stopped out. Or even if you, like we were saying before, you keep increasing the stops, then that's one-sided betting where we're clearly bullish, aggressively bullish, and you keep trying to sell. That's what's not good.
Yeah, and it's also understanding how much risk you're adding to it. If you're risking a large amount, 1% is not considered a large amount in general. But if you're risking 6%, 8%,
multiples of large,
multiples of 1% at a time.
If you're going like 1%,
that's good. If you open like 6 positions or 5 positions at 1% risk, then it's like, damn, you've got like 5-6% on the line here. That's, you know, the risk management team is just going to step in and be like, dude, what the hell is going on here? Like, come on, what are you doing?
Yeah, there's going to be
there's idiocy. Yeah, that is going to be a big flag in the system.
Good question here. Eric Molina asking, hey guys, quick question. What do I do after completing phase 1 evaluation with the 5-risk funded account? Well, first of all, it depends on which account you have. If you have a hyper growth account, congratulations, you are now funded. If it is a high stakes account, you have one more phase to go through. So high stakes is a 2-phase account. If you've passed the first phase, all you need to do is just wait for an email saying that your credentials or your account has been activated. You can go into your hub and you can go and look at a little purple key. Click on that key and it will give you the credentials for your new account. If it is a bootcamp account, you've passed first phase. Once again, congratulations. You've got 2 more phases that you need to go through. So you're going to just kind of like do exactly what you did on the first one, but just wait for your credentials in your hub, and then you will get all of that information there.
Yeah, exactly.
There you go. Perfect. I'll be back.
I saw a comment earlier from a guy from Bye, LJ.
Yeah, you just quickly need to go and do something.
Yeah, that's absolutely fine. That was perfect timing, actually. My Wi-Fi's just come back completely, so I can see and hear you guys, which is quite nice. One of the guys saying as well, I can't remember, it was quite some time ago, but I didn't want to ignore him because he mentioned that he is currently here. Cabin FX saying, hey, I am from Brazil, living here. So welcome to my country, William. I just wanted to bring that up. So thank you for the comment. I didn't want you welcoming me and then, being ignored. So thank you very much for the welcome. Now that I'm back a bit more and I can talk to you guys, hello. I'm sorry that's been a bit sort of on and off with the Wi-Fi. It's I've spoken to my landlord during the stream. And he said that he is going to sort it out ASAP. I've really nailed down on him as well. I've said sort the F out because this is not okay. I need this. I work on my Wi-Fi and I work on my laptop with Wi-Fi, so this needs to be sorted yesterday. This can't happen tomorrow. So he said, I'm so sorry. We'll get this sorted. So hopefully, guys, tomorrow will be will be a new day and I'll have good Wi-Fi. But yeah, I'm in Hong Kong, guys. You know, it's super cool. I have landed in the land of Hong Kong. I'm super excited. A couple of you guys have actually asked me to vlog it as well. I'm not going to. Oh, I've lost.
It's crazy when you like immediately notice that you're busy going down, because as you're talking, things just start turning in the background. You're like, oh, yeah, okay, I'm gone. Don't worry, mate.
How far did I get?
I've got you covered.
But like I was saying, you know, some of you guys are asking me to vlog it. I'm not going to vlog it like a, hey guys, what's up? Welcome to my channel, all that garbage. But maybe I'll do like a day in the life sort of thing. So if you guys follow me on Instagram, you will see a lot of my stories. I landed last Wednesday. So Thursday, just sort of getting everything packed and sorted. And then Saturday, Sunday was like touristy stuff. So I probably won't be doing much touristy stuff during the week because obviously I'll be working. But
touristy,
yeah, you'll be working. You'll be working in the jail. Hey guys, day in the life. I'm folding some clothes right now, and now I gotta prepare lunch for the other inmates.
Welcome, guys. Just printing some number plates.
Yeah, print some.
No, they're not inmates, guys. They're not inmates. They're part of the community. They're here willingly.
We're all friends. We all just like the same outfits. We don't mean to clash. No, I will be getting some posters.
For now, I will see you guys tomorrow. So, adios. Peace out. Cheers,
LJ,
guys.
mate, thank you very much for staying on with us. We appreciate you, mate.
Adios, LJ. See you later, brother.
Hopefully the jail food isn't too bad for you all. See you tomorrow. Ciao.
Cheers, LJ. Will, I was just having a little gander at gold. We had all-time highs all the way, today. So the whole of today has just been printing new all-time highs. We had a bit of a pullback when we reached this 4,601 zone. This was during Tokyo session. We started pulling back ever so slightly. Very slowed upward momentum, and then suddenly we started pushing new all-time highs yet again. So gold is definitely something to look out for at this point in time. Please don't sell and then add to your sell thinking it's going to carry on going down, because that's going to be one-sided betting when it's clearly very bullish right now.
Yeah. Yeah, absolutely. There's a nice break of that high as well.
Yeah. I did want to say earlier when LJ was talking about the one-sided
I was shocked, man. I didn't realize we were going to get high so soon.
I mean, who really knew? But like we can see it now. If you were trading gold for the whole year, a lot of people would have looked at you funny if you tried to sell gold, because it was so clearly.
Yeah, true.
So if you were only buying gold throughout the whole year, I don't think anybody, even a prop firm, would have looked at you funny and thought, oh, this is one-sided betting. No.
I think someone would have actually looked at you funny if you sold it.
Exactly. So you were going against the trend, very clearly bullish. So it's the one-sided betting really comes into play when it's clearly obvious that you are very much against
exactly.
Price
it's got to be in your face,
and you're clearly just adding on to it. So your risk management really goes out the window when you're trying to do that.
Yeah.
So if even then, you are also allowed to hedge. You're allowed to hedge in the same account.
Yeah, exactly.
So if I have a 20k high stakes, I'm allowed to put in a buy order, and then if it goes up a little bit and it looks like it's going to start going down, I'm allowed to put in a sell order as well, so long as it's within 100%. The same account. You're not allowed, however, to do that across two accounts.
Hedge.
Yeah, that's platform hedging, and platform hedging is that's not allowed.
No.
So you can't buy gold on your 5k and then sell gold at the same time on your 100k. That's going to get flagged.
Yeah.
You wanted to say
what? Don't. I don't know what I was going to say to you then. 100%. Yeah, don't do that. It's okay hedging. It's not big thing. A lot of people stay away, like, oh, I'm going to stay away from hedging. There's absolutely nothing wrong with hedging whatsoever, as long as you're not cross-platform hedging.
You know? Sometimes so even if you take a trade is the right thing to do.
Yeah, 100%. So I was in a couple of weeks ago as well. Oh, no, sorry, a couple of months ago this was. I was in a US... No, I wasn't. It was a Euro JPY. I was in a Euro JPY long, and it was a swing long as well. I took a Euro JPY sell within that long. So that's technically hedging a trade. But I was in a long-term swing buy and an intraday short. Now, a lot of people would have been too afraid to take that trade. That is hedging, but that is okay. You can do that.
Yeah, 100%. Very good example, mate. Thomas saying, a friend of mine received a notification about one-sided betting, but just buying gold last year. Now, I'm going to play devil's advocate, and I'm going to say, okay, what exactly was his trades? How did his trades look? Was he entering buys on pullbacks? Was, you know, where was these trades? It's easy to say he received a notification, but not give context. Please give context, and then we can have a look at it exactly. But like we explained,
you can appeal them. I'm pretty sure. Like you can speak to the fivers and say, "Look, this is my reasoning. This is what happened." You know, like they'll investigate it. They're not just going to go, "Nope, bugger off. Off you go. You failed." You know, they're not like that. They're not that cutthroat. They will investigate it. They'll investigate it long before they actually ban you. You know, so. It's, you know, I struggle to give sympathy to the traders who go with a good firm, blow rules, and then say the firm's a scam because I got banned or I got told this, that, and the other because of this, that, and the other. You know, I lost my 100K high stakes account because I somehow broke these rules. It's like, well, if you really looked into what you've done and then you look into the rules, it's clearly there. That's what's happened. You know, so I struggle to give sympathy, and the reason I struggle to give sympathy is because I've been you guys. You know, I've been the person who's failed an account, looked at it and go, "Oh, I hate you guys! How dare you fail me? I have not failed the account." And then I've checked the rules and I've thought, well, if I cared enough to actually read from A to Z, maybe I wouldn't have actually blown those rules, or maybe I wouldn't have actually blown the account.
Chihuahua, sorry, you said please read your chat. You've asked the same question a few times. We know that. We're sorry. But there's really nothing we can do about that. He said, hey, please bring a free add-on on the Fivers for swing traders. Swap fees are eating up profits too much, especially in Bitcoin. Unfortunately, myself and Will, we have zero control over that.
I'm actually getting a call now. So, what's good, man? Oh, I know you're super busy, mate. No, I know you've got a lot of big plans and you're super busy, but we really need those swap free. Yeah, on Bitcoin, especially on Bitcoin. He's going to see what he can do. He said he has got large plans for the Fivers, but that is now top of his priority list, Chihuahua.
Dude, you're such a troll.
Yeah, no, I know. Well, I mean, everyone trolls us. Why can't we troll now and then?
Fair. Unfortunately, Chihuahua,
it's only in good banter, bro. You know that. No, yeah, unfortunately, we don't have the capabilities of doing that. However, you know, we will put them forward. If you guys have requests for the Fivers that they don't already have or have announced that they're working on, feel free to ask us, and we will definitely put it towards them. You know, we'll definitely put it towards the management team, the development team, and say, look, guys, this is really popular at the moment. All these guys are really shouting for this. Can we do it? They may say no. They may say yes. They may say maybe. Who knows? Like I said, we don't have that ability to implement that, but we can definitely put it forward on your guys' behalf.
Yeah. The thing is, I think that if it's even possible, because the thing is,
fair. Yeah, it may not even be possible. Like.
Yeah, like. It's not the brokerage that decides the swap rate.
Mm-hmm.
So it's not within, let's say hypothetically, the Fiverr's control to say, hey, listen, we're going to remove swaps completely from this asset. Not necessarily.
Yeah,
Maybe,
that's
but
like,
not necessarily. So
that's like, for example, let's say you rent a house, and let's say you pay.
sorry, Will. Just give me a second. Just take me off screen quickly, please.
Oh, okay. Yeah, sweet. Yeah, no problem. So let's say, for example, oh God, I pray my Wi-Fi don't blow up now. Let's say, for example, you rent a house. Let's say it's an annual rent that you pay. I don't know why it'd be an annual rent, but let's say it's an annual rent. That's like you going up to your landlord and saying, please don't put my rent up due to inflation, because I don't want it to be. I want my rent static as it is. In fact, some mortgages actually do have that. They have a standard percentage freeze. But hypothetically, let's give this example because it's the best example I can give right now. So let's say you're renting a plot, you're renting some land, you're renting a house or whatever that may be, and then every single year it goes up with inflation. So it goes up with the rate of inflation each year. That's not in control of the landlord. Otherwise, the landlord's going to lose money because inflation goes up, but the rent stays the same. They're actually going to take less money. So they must put rent up with the rate of inflation. So it may not be in the landlord's. You may not like it. The landlord may not like it, but he has to do it, or he or she has to do it due to the fact that that's what the government does. That's what the government is doing. The banks are doing. So no different. The fivers may not be in control. They may just be the landlords of the swaps. It's just like inflation.
Another way to look at it is this: the fivers finds other ways in which to bring real value to all of the people that uses its platform. So yes, crypto, Bitcoin, unfortunately, can sometimes have crazy swaps. It can also sometimes have crazy spreads, but all of the other factors that they add is trying to mitigate most of that. So it is one of those things. Unfortunately, not everybody is going to get exactly what it is that they want from a specific prop firm. But I think that when it comes to the fivers, they generally try their utmost to always be a force of good when it comes to
like a flagship when it comes to the correct trading conditions. Because I don't want to say good trading conditions, because everyone wants good trading conditions, and someone may say good trading conditions are zero spreads on crypto. So good is relative to the trader. So therefore, the fivers really try and pride themselves in being the flagship of the correct trading conditions, and that may be high spreads or high commissions or high swaps on crypto, but they'll be the most competitive, or they'll be the best out there, or their trading conditions will make up for the idea that they have to put spreads on things, they have to put commissions on things. So they will be the best out there. They're very competitive, and they'll make sure that they accommodate for all traders to give the best trading possibilities and outcomes. Because I've seen. Go on.
Yeah. No. You wanted to
continue. I was going to say, I've seen so many props and so many brokers out there, and they'll just very much like landlords. Landlords will see the rate of inflation, let's call it 2%, and they'll put it up like 3% or 4%, and they'll be like, it's inflation. Well, it's not. Inflation is 2%. You've doubled it. So a lot of landlords are out there. A lot of prop firms and brokers are out there where the rate of inflation, their swaps, their spreads may be like 2 pips, but they'll put up 4 pips just to gain more. But it is what it is. These things happen, and we just gotta make sure that we're trying to find the best prop firm and the best broker out there to deal with our.
Oh no, there goes Will again. There was a very interesting question here from Prarita. Asking, I have always traded CFD prop firms and going to start futures with the fivers, start their futures platform where I can learn the E or the mini and micro terms, or can practice the futures. Do you have any suggestions? So, futures trading is something that I don't have a lot of knowledge on, to be dead honest with you. I've only ever traded stocks and CFDs. However, what I do think, or I believe, is going to happen is one of the reasons why the Fivers is bringing in the forex, the futures trading along with that is going to be some sort of futures trading modules, or at least futures trading information that will probably be available on their website. So that's where I would go. So when we have the futures trading platform released, I'm pretty sure that there's going to be a whole segment around that.
Yeah.
The Fivers is not going to just release something and then say, here you are, here's futures, have at it. They will
enjoy, go.
They will do the same thing as what they've done with the CFDs. Yeah. They will do the same thing with crypto, all of that. They will give you the information that you need in order to trade it profitably. So you can do that.
As well, it's a bit like a live masterclass, or like, no, I'm not going to call it a masterclass because I'm not a master of it. Like I'm very much like you. CFDs is where CFD forex trading, indice trading, commodity trading is where I have had my heart set, and it's where my home has been when it comes to trading. However, when we release the Fivers futures, very much like you said, I'm sure there'll be modules and educational videos and documents out there to learn. What I'm tempted to do as well, what I may do is part of our section, I may document my journey to learning futures. Because like I said, I don't know how to trade futures. I know how to trade CFDs, and I'm very good at it, and I'm a very profitable trader. However, futures would be, I know that I'm coming through a trading background, so I may have a head start on some of you beginner traders out there, but some people who are looking at going from CFDs to futures, this may be an opportunity for you to watch me do it live as well. So I may do like a documentation on my live stream, on this live stream on our section of me like making like a sort of move over to futures, and I'll do like both CFDs and futures. But if you want that, if you want me to do something like that, if you want me to document my journey on the live stream, very much like I have done passing phase 1, phase 2, and live trading my $100,000 account all on stream. If you want me to do something similar with futures, then just chuck it in chat over that way. Chuck it in chat. Chuck it in chat, and I'll do that way. Okay. Then drop it in chat, guys. But make sure that you subscribe to the channel so you do stick around as well, because if you want to watch us more, make sure you click that bell notification as well. Stick around and make sure you smash that like button. Apparently we had 170 likes. I've been too scared to open the YouTube to check because my Wi-Fi has been good so far. Yeah, could you check?
I'll do it as quick as you blink.
Depends how fast my Wi-Fi is. That may not be that fast.
We have 178 likes.
178 likes, guys.
And 122
likes to go. Absolutely smash that like button. Let's see if we can get to 200 likes in 15 minutes. 200 likes in 15 minutes, super doable. Let's absolutely smash it out of the park, guys. And make sure you do subscribe if you are new here. We are super close to 100,000 subscribers now. That's mega, bro. That's
in our 10-year anniversary, basically. This is the 10th
year we are as well.
Of the Fivers. The Fivers is 10 years old this year. It would be amazing if we could get 100,000 people in the year where we are 10 years old. That's first and foremost. Because imagine the giveaway that is going to happen. It would be the largest
giveaway, the deals, everything. Just
100K, and in its 10th year, dude, that would be like 2 weeks of just giveaways and 2 weeks of just amazing prizes, and
it would be pretty mega.
Cannot do that without you guys. So if you guys can share what you see here to people that like,
I kind of hoping that
so many new people in chat. Just get a bunch of people, just share it to them. Like Will always says, what's that saying of yours, mate? Are you gonna rap it?
I got many.
You rap, mate. Yeah.
Share share it with your mother, your brother, your sister, your uncle, your next door neighbor, your cat, your dog, your nephew, whoever wants to come watch this stream. Make sure that you share it with them, because even if they don't want to watch, zip tie them like I am right now, duct tape them to their chair, what do you call it? Toothpick their eyelids open, sellotape their eyelids open, and make sure they watch this stream. And then the only thing that I want you to do, or the only control they're going to have, is to be able to like this video. I'm joking, guys. Please don't do that to people you see.
Your loved ones. Please don't.
Please don't tie up your loved ones. I mean, unless they want tied up, then that's a whole different story.
Yeah. But in all seriousness, myself, the streamers and everybody that's part of the Fivers, we are very appreciative of everybody that rocks up every single day, watches the stream, interacts, the banter, the questioning, just the community as a whole. We really are appreciative of you guys. We would really love if you guys can help us get to that 100K subscriber point. It would be amazing, especially if it happens in the same year that the Fivers is celebrating its 10th birthday.
That would be mega. That would be mega. Like 2016 we started, 2026 this year. It is the 10-year anniversary of the Fivers, and 100,000 subscribers would be absolutely mega. That would be so cool. But yeah, like Rich said, just to emphasize it, we are super grateful. Guys, I've literally streamed all over the world with you guys watching me. I've streamed Italy. You watched me streaming in Venice. You watched me streaming in Loire Valley in France. I'm currently sitting in Hong Kong. I'm streaming. My base camp is in the UK. That's 4 different countries all around the world. So I'm able to do this. I'm able to share my experience with you guys, and you're able to watch me, and you enjoy watching a stream. The banter, the camaraderie, the community, the good vibes. Not only that, guys, but the trolling. As long as it's good, light-hearted trolling, we love it. We do love a banter. Pooley comes in, he loves to troll us. You guys come in. We had Unbiased Trader earlier trolling us. It's just great fun, great vibes. As long as you're not doing it maliciously, as long as you're not, in fact, our hosts, our co-hosts were trolling me that I'm in a prison. Like I said, guys, I need to get some photos up, or I need to get some posters temporarily put up here. And I will do that probably this weekend when I get a chance. So yeah, guys, I will decorate this and make it a little bit more homely. I'm not in prison, guys. Do not worry, I am safe.
Don't listen to a single word Will is telling you guys right now. He's lying. He's in prison in Hong Kong. He's held captive.
Send Interpol.
The only way that he can be released is if somebody, likes this video up to 200 likes. Then maybe he can get out of his little prison cell. But up until then,
they've told me if I get 200 likes on this video, I get day released tomorrow. But they've said I only get released from prison if we get to 100,000 subscribers. So make sure you smash that like button, guys, and make sure you subscribe to the channel.
I just made myself laugh with my own stupid joke, mate.
Dude, they're the best ones.
If we get 200 likes tonight, Will gets to eat.
Oh, no, do you know the worst thing? This is the picture I get from... I'll show you this, guys. This is the picture that I get from my partner while I'm streaming. She goes, what time do you finish? I was like, probably not till 10. And she was like, 10 p.m. I was like, yeah, well, 10 a.m.'s already happened. And she sends me this. She goes, okay, I'm going to go get some food.
All by herself.
So she goes to get noodles. Yeah, she goes to get noodles without me. I was like, wow. She goes, it's okay. I brought you. I'm bringing you home some sushi. I was like, okay. I'll let her off. Yeah. I was like, oh man. I was like, wow. Got a food without me then.
I think we should get to the chart a little bit, mate. Gold is rallying, making all-time highs yet again. It's pushing higher and higher. I always say tread carefully around new highs specifically. Mm-hmm. If there is no price action to the left of it for you to go and kind of aim for. So it's uncharted territories, basically. So whatever happens here can happen suddenly. So if I'm trying to, let's say hypothetically, buy, and my stop loss is somewhere down here, and I'm looking for a 1-to-1, just as a very, very stupid example, this isn't an actual trade, this is just for illustration, and price starts pushing higher, pulls a little bit back, push higher, and then all of a sudden does this. That can happen if you are at all-time highs. There can be sudden pullbacks. And if you don't believe me, go onto the daily chart and you just have a look at what happened here. This whole section here. This was all-time highs for quite a while, and the pullback was sudden. And I can guarantee you there were people trying to buy at this point, trying to get it higher, and it just started going lower. So always be careful when you are at all-time highs, I would say. Just trade carefully, try and be a little cautious about all-time highs. But as it stands right now, gold does look quite bullish as well. We had the recent all-time highs of this morning, like a fair few hours ago, that just got broken now. And we've had a singular attempt to try and push price lower, which failed, and now it looks as though it wants to continue pushing up. So for those of you who do not know, this is my definition of a base. So
I was literally about to say, so I'm gonna brave it really quickly. If I start freezing, tell me, because I'm not going to be able to see because I haven't bought my second monitor yet. But do tell me if it starts freezing. I'm going to bring my screen up for you guys. Can you see this okay?
I can see this. It looks good.
Fantastic. Yeah, so we were here looking at... Say again?
Are you going to go through gold?
I was just going to have a quick look at gold. I was just going to do my little breakdown of GU, EU, and gold real quick, if you want me to. Just because I haven't been able to... I haven't been able to jump on the chart recently. It's really annoying me because today I wasn't able to really dive into the charts with you guys, and it really annoyed me because I was looking forward to it today. I was super excited, but for some reason the Wi-Fi seems to be fine now. Again, touch wood. But I was excited for it. So let's jump into GBP quick. Now, GU, again, if you look at the Dixie, it's been super bearish over the past, well, over today. Let's keep it for today. But since we are Monday today, aren't we?
Yes, it is a new week.
Yeah. Okay. Good. Yeah. So in fact, I need to.
We know you went back in time. It's still Monday, mate.
Yeah. No, I know. I need to remember trying to do the Hong Kong to UK conversion. It's still a bit fresh in my mind. Huh?
What is the time there by you currently?
Right now?
Yes.
8 minutes to 10 p.m. at night. But I've got my UTC time down here, so it's 1:52. And I'm like, 1:52? And I was like, wait, hang on, is this Monday? Is this... So yeah, I just got confused for a second. So yeah, no, I know. I just don't want to because I kind of like having it at UK time because my trader brain is programmed to UK time.
Okay.
So
all right.
I keep it. Yeah. But today, so the US, like the Dixie, has been very bearish. So we're gonna have a lot of strength against the dollar right now. So GU and EU has been bullish. Now EU has been a little bit nicer. So as you guys know, I love my consolidation zones. And marking out these consolidation zones, or which I'm going to touch on in a minute on gold, which Rich was on about his bases. I got excited when I saw his bases. I was like, yes, because I saw that earlier on gold. And as you can see, we started to flatline a little bit into a consolidation. We came up and broke these highs. We broke through this consolidation, pulled back, and then we just started wicking around and messing about a little bit there. After this big bullish move up, I'm going to mark this up as a potential for New York. I'm not going to trade it. But if we can break and close above here, that would be super nice. Maybe a bit of a pullback and a continuation. However, on the immediate, let's place what would have happened if. So let's go for let's go 1 to 2R. Should we go for 1 to 2 or should we go for 1 to 1?
So this is on euro, right? Yes.
This is on euro. Yeah, this is on euro. Okay, I quite like that. So we've got a nice little area. Because I know a lot of you were wanting to buy euro earlier on, and then a couple were saying, what about selling it? So I'm going to look at a potential buy on euro based on a weak Dixie at the moment, as well as the fact that we are technically priced to the bull side, to the upside. Now, as a confluence, what would help is if we could break above this previous high, not the one that I'm marking out now. That's what we've currently broken above. If we can break and close above where we just wicked, then this will be a really nice high probable trade. Same goes on GBP USD. GU for me isn't as nice. We're just sort of, we've not given ourselves anything to work with here. You know, none of this has been opportunist price action. So I would have completely left cable alone. We've had no area where I would have wanted to, maybe this high here on the hourly, but then no. GU I've not been too happy with. You know, if we could really break higher now, and I mean like nice big bull move to the upside, if I get something a little bit like this, to break and close above this consolidation, then I think we'd have a consolidation zone worth looking at. So something along the lines of this would be super nice then. But euro looks really good for me at the moment if we can break and close above this high. Now gold was, wow. I couldn't believe my eyes when I hit, or couldn't believe my phone when I heard it ping, saying that gold has hit new all-time highs already in 2026. Now, I thought we were going to pull back a lot deeper. If I go up onto the 4 hour, there we go. Was it here I marked out? No, it's down here. I thought we were going to head down to about here first. We weren't too far away. I think Rich had this area marked out. I had this area. I think me and Rich had this middle area here.
On gold.
But I want. Say again.
On gold.
Yes, this is on gold. But I wanted to see this area down here. I thought we could pull down a little bit deeper before new all-time highs. Boy, was I wrong. Like, I was really wrong. And we ended up moving to all-time highs already. I couldn't believe it. I was like, wow, okay, fair. Now we had this consolidation. I kind of want to see, like, we've had a really strong break above this. If you're an intraday, or if you're a larger swing trader, then with my strategy or a similar strategy to me, I would have been placing a buy probably around here. I think this is where I would have been looking at and going for a 1 to 2. This is where I would have been. Oh God, come back. Due to the fact that we were so bullish on this leg up here, breaking and closing these previous highs at 4.6. Yeah, I think we can reach 4.7 pretty soon. I reckon 4.7 is the next target. Then I want to see a bit of a drop. I want to see a bit of a drop.
So the rule of round numbers.
Yeah, I think, or at least a half. But we've passed the half number. Maybe 650. Where would 650 be? Just
about $34 from where we are now. 34.
Yeah, so maybe 650 we'll have a bit. But I like the idea of the psychological numbers right now. But who knows? Dude, who knows? I'm scared of all-time highs. I don't like trading it. I don't like trading something that I can't see anything to the left of me.
So there was a very interesting question here from Sean BH7 saying, how's it, Richard? Do you think the threat of Fed's independence could switch up the dollar's path this week and be a theme going forward? So when it comes to the Fed with the dollar, they have so much sway in what happens to the dollar and how the world views the dollar. There being a change up now is definitely going to cause some sort of movement in the dollar, Whether it's going to continue the way that things are going currently, or whether or not it's going to switch things up, still begs to be seen. So we still have to wait until that actually starts, happening. But what we can see is, leading up into Fed Chair Powell's eventual, let's not call it resignation, but like eventual stepping down
stepping down,
based on his tender coming to an end. We're already seeing quite a bit of uncertainty in the dollar. Now, is that because of Fed Chair Powell's eventual stepping down from that position, or is it to do a lot more with everything else that is geopolitically going on with the dollar, or with the United States? I think it's a little bit more towards the latter, but I will not put it past the new Fed chair having some sort of impact on what the dollar is going to do. I don't think it's going to be in the next week, because I think he's still going to be in the position till when? What is that, until April?
Yeah, I think it's the end of the financial year, which is April,
somewhere around there. I can't remember the exact date. LJ and Dirk would definitely know exactly when, but I don't think it's going to be in the next week that we're going to see some sort of like really strong, crazy action based on that information. I would venture to guess that we would rather see more reactions based on geopolitical unrest due to the situation Greenland, the situation with Venezuela. I would rather bank more on that causing more of a reaction.
100%. Venezuela, like there's a whole lot going on with Cuba. Not Cuba, with Mexico. It's like Mexico, Cuba, Venezuela, Greenland. I think there's going to be a whole lot of eyes around that right now. So I don't know. I think we'll just have to wait and see.
Yeah, I remember one thing about the Fed. Yes, they are independent, but the people that are the chairs of the Fed have always been vouched for the current president. When they were whomever was the Fed chair at the time and whomever was the president was always vouching for who would be the next person. And then Congress and the Senate and whatnot, they would all have their say. So it's independent, but it's influenced by what the government wants and what the president has to say and so on. So full independence, no. Partial independence, yes. They will always be the influence. And remember this as well. Trump is somebody that generally gets what he wants. So the person that he has in mind...
And if he doesn't, he'll stamp his feet until he does.
Yes. You can call it a tantrum or whatever. He generally gets what he wants. So the likelihood of his next candidate for the Fed chair being his number one pick is like almost certain, in my opinion. And I do think that will eventually start having a reaction, just not now. Not with all of the other stuff that's currently on the table. I think that's kind of like a back burner.
Yeah. 100%, man. Also, seeing the fivers, subscribe now. Once we hit 100k, we will have some. We will have some massive community giveaways planned. Absolutely, but more. What's the word I'm looking for? More interestingly, more motivatingly, just seeing the likes. We've got 190 likes. Do you know what that means? We are 10 likes away from 200 likes on this video. So, guys, please smash that like button. We've only got 10 more likes. Please absolutely smash that like button. Let's bring us way over 200 likes. That would be absolutely fantastic if you guys could do that. But Asan saying, are you in a trade? No. Currently, as of now, no, I'm not in a trade. I'm in the process now. Like I said, today is my first day back in work after moving. So I am currently, as you can see, it's very naked, very plain. Everything's all very fresh still, teething issues. So I am going to be setting up my 100k account back up today after having the Christmas off. So tomorrow I'll be trading my 100k account back, and then I will be sort of sorting all that out. So as of today, not in a trade. As of tomorrow, if I see a nice opportunity, I will be. And I can hear my sushi delivery has just come through the door.
I also heard it. I literally just heard that. Just heard
you
it.
hear like the door open.
Yeah. For those of you who don't know, it's one of Will's favorite things to eat is sushi.
I do love a bit of sushi, man. Alvin saying, I do now believe that William Davis is indeed in prison in Hong Kong because he did not know what day it was today.
Yep, that's generally how it goes.
I know. I've lost track of days. Like when I'm trading, I'm trying to stay in like UK time brain, but obviously it's completely black outside. And then people are like, "Oh, it's 2 p.m. or New York sessions coming soon." I'm like, "What do you want about? It's dark outside." So I'm still trying to work out that time zone difference. So,
there's definitely.
I'm slowly getting my head on it.
You get used to that, mate. It's gonna take
time.
Yeah,
I'm giving myself a couple of weeks to try and like really focus around it. My sleeping pattern, like me and my partner, we don't sleep the greatest anyway. So our sleeping pattern was a little bit malleable, so we could play with it a little bit more. Like we could stay tired for a little bit longer. We're used to it. So our jet lag was sorted out pretty quickly. So that I'm pretty good with that. There's no jet lag. I'm fine. I'm going out for runs in the morning now. So it's actually given me a lot more time to do all my exercise before live stream. So I don't need to worry about the gym after like in the evening, which is quite nice. I just really want to sort this out. I want to get some cool posters up here and do some wacky stuff. So hopefully you guys won't think I'm in prison. Maybe I'll get like a poster of a window with Hong Kong style in the back.
That's gonna break the illusion, mate. That's gonna break the illusion. Chihuahua asking, when will the Fiverr's futures launch? Any idea? Unfortunately, you are just as in the dark as we are, mate. We are also just very much waiting. Yeah, we are very much waiting for it, but it will be soon. But soon is a relative term, so all I can say is just be patient, mate. I think that there's a reason.
I could say it's coming out tomorrow, but that to me is only in like 2 hours time, whereas for like my parents back home it could be in like 12 hours time. Well, technically
it's relative.
it'd be 10 hours time.
It's relative. But what I can say is this: know that when it comes out, when it's released officially, it's going to be legitimately the best futures platform you can use. There's a reason why the Fiverr's is taking a little bit of time to release it. They're making sure that the platform works properly. They're making sure that they're getting the absolute best information, the best everything for the futures trading. It's a good thing that it's taking a bit of time. So all we need to have is just a little bit of patience and leave them to cook, because they're cooking right now. So that's all that I would say. Sam Shah is saying, I see they finally caught Count Olaf and extradited him to Hong Kong. The nieces and nephews are all safe for now.
Oh man, yeah, all my nieces and nephews are safe. I've been extradited to Hong Kong.
And he's in prison right now.
And I'm in prison for not getting them a Christmas present. I mean, you can thank the beautiful CC for getting them a present, but I did give them a Christmas present. So
the fact that CC was the one that got it for them actually kind of makes her the same.
I mean, my name was on it too, I'll have you know.
It's the equivalent of my wife buying a gift for a baby shower and my name getting put on there. It's got nothing to do with me. I wasn't there when the present was bought. I'm not going to take responsibility for that. What if the kid hates it? What if the parents hates it? No, it was the wife. Not me. No. You want to blame someone? Blame the wife.
I didn't do it. Not me. Definitely I didn't do it.
Yeah. Sean BH saying Trump is scheduled to interview a top guy from BlackRock as potential Fed chair. between the Iran news and Trump now having Powell investigated, we will see a 800 pip move before Tokyo Open. That is a bold claim, my friend. Bold claim.
Damn.
I'm assuming you are referring to gold. All right. So we're going
I'm assuming so, yeah.
Yeah. Now the thing is, I've noticed, Sean, that you haven't mentioned whether or not it's going to be an 800 pip long or an 800 pip short.
Yeah, if you're gonna put big bold claims like that, at least pick a direction. Like, which way are we gonna go?
Yeah. So if we're gonna have 800 pips, tell me now. You're buying. Oh, I have something in my eye now. Yes, it is my finger.
Beat me to it.
I knew you were gonna say something.
Ren testing futures at the moment, so hopefully ready once the Fivers launches. Dude, that's super cool, man. Yeah, awesome stuff. I'm a bit slower.
Mate. Be prepared.
Not as prepared as you are. I'm kind of looking forward to starting my futures journey with the Fivers, I think that's going to be super cool.
I am too. So I'm also going to... Let's say I'm going to educate myself on how to operate a different style of trading, because futures is a little bit different. There's different things that you look at and different calculations and so on. So I would like to educate myself on that first before I just jump in onto it. But I think that is a good idea. I want to stay with the Fivers with regards to funding and stuff like that. So I know they do it the best when it comes to CFDs. I know they do it the best when it comes to the general trading conditions and their rules. May as well just stick with what you know is best. And I'm not going to go anywhere else.
Yeah, 100%. But yeah, no, like I've got some awesome updates to give you guys over the next, I want to say 3 months, 3 to 4 months. I've got some massive updates for you guys that I'm really looking forward to sharing regarding my trading and my trading journey. But I'm not going to give too much away just yet. All I can say is just keep your ear to the floor when it comes to the Fivers. There is some massive stuff arising. So it's going to be good fun, man. I think 2026 for the Fivers and for everyone part of the Fivers, including myself, Rich, and everyone else, all the other hosts, including the community and all you guys in chat. It's going to be an exciting year. 2026 is going to be a really, really fun year. But you've got to be part of it. You've got to be part of it, guys. You know, you got to subscribe to that channel, become part of the community, go over to the Fivers website, get yourself an account, get yourself in the community, get yourself in the Discord, because, you know, if you're not in it, you ain't going to win it. So.
Agreed. Very much agreed.
Also, where are we with our light count, by the way? Rich, can you check the light count?
Give me uno momento. We are currently sitting at 158 people watching with 196 likes. Come on, guys. 4 likes.
Come on, guys.
4. Just 4.
4
that
more
would
likes.
Be amazing. Really appreciate it.
4 more likes, guys. Come on, let's go. Although I'm going to have to drop out literally any minute. I'll leave it till 1/4 past, but I'm going to have to drop out. Otherwise, my sushi is going to...
What? Get cold? I was
going to say go cold, but it's sushi. It's
sushi. Mate, feel free to...
I'm hungry, okay? In other words, I'm hungry, and I want to go eat.
What? It's like, what, 11 o'clock at night there by you? 10 o'clock?
Yeah, nearly 10:15.
Okay, by all means, mate, if you need to drop out, you drop out. I'll stay and hold the fort down while we wait for Victor to arrive. So, dude, you go do you.
I'll give you a couple. Speak of the devil, he shows up.
You know what? Speaking about the
Victor,
nice things into it, nice things will pitch up, and Victor is a nice.
Speaking of the devil, William said.
Speaking of the devil.
How's everyone doing?
Anyway, guys, I've got to shoot off. I'm going to love you all and leave you. I shall see you all tomorrow. I'm not going to say I'll see you all mañana because it won't be. So I'll see you all in the afternoon. But thank you very much, guys. Please make sure you give a like to the video and do subscribe, guys. Road to 100K is super, super close. We're 5,300 away. So please make sure that you smash the like button, subscribe to the channel, and I shall see you all tomorrow. Thank you very much, guys. See you later.
Awesome, Will. Thank you very much, mate. Have yourself a good day. Well, good evening. A good night. You should have all of the good things. Victor, how are you, my friend?
Will, can you hear me?
Will is gone.
Can you hear me?
I can hear you perfectly.
Okay. I was just checking. Yes, Will from the East. Richard, how are you doing today? It's a beautiful day, filled with challenges, so to speak, but beautiful nonetheless.
Yeah, today was a challenging day, my friend, for all of us. Started with absolute technical difficulties. I have a stream in the morning that I schedule every Sunday. Went and tested it. Everything was working perfectly. Went to start the stream this morning and nothing worked. Camera didn't work. Microphone didn't work. It took me 20 minutes to get everything up and running. Eventually got it up and running. Then Will had issues with his same equipment as well. The whole of today has just been one challenge after the other. But as you said, it's a lovely day. Even if there are challenges, it makes those good times worth it, because the challenges, they challenge you a little bit. It's a little bit uncomfortable.
They sharpen us. I mean, it's like a knife. It needs sharpening from time to time. Otherwise, it goes blunt.
Yeah. Like I used to say, I'm not an artistic person. This is not my work. This is my wife's work. She's a very artsy person. And I always said, life needs all of the colors. You can't just be painting in black and white. And if black and white is just all of the good things that happen in your life, if black and white is all of the bad things in your life and color is the good things, as an example, if you're only painting in one of those shades, you will stop appreciating it. And at some point, you need to experience the other side of it. Just, perspective-wise, can adjust a little bit and realize, life isn't really not that bad. So you need to experience everything, all of the colors, paint with all of the colors that is available to you, not just the ones that you like.
Sure, and also to appreciate when.
Wow, it's just like somebody listening to you and going, "Okay, anyway."
Very convincing, Richard. No, but I truly you said, what I heard, or what I translated it to be, is you need to have the negative in order to appreciate the positive, and this is something like that. These challenges, the hardship is actually good, I think, for appreciation, gratitude, because you start to appreciate the good things in your life even better, right? You can count your blessings. There's no that yin yang thing. There wouldn't be a good if there isn't a bad, and that's with everything. It's kind of so philosophical, but we're here for trading. Richard, colorful as you are. It's bank holiday today, I know, but yes, as colorful it is, for sure. But would you say hardship is the color of life?
I honestly think that a painter paints with all colors available to them and make the best of what is available to them. If hardship is something that you are used to, or it's something that you experience a lot, those days where you have not got hardship, you would get a different perspective. And I think that it's a good thing to experience good and bad in life. And I think that balance is ultimately the thing that everybody should try and strive for. So yes, I do think that hardships is a good thing in life, but everything in moderation, I would say, as well. So one should not just experience hardship and only hardship, because that's just cruel. And also people should not just only experience elation, because at some point elation becomes expected and boring. So that's why we seek challenges. I think the human race in general seeks challenges, we make up problems for ourselves to try and solve, and that's what our brain wants. So, yeah, I think hardships is a good thing overall, in general.
Yeah, sure. I can totally agree with that. Who wouldn't be able to? Would that mean that if you had, as a parent, which I'm not stating you are, you're not, but would that mean that would you recreate or artificially create hardship in order to sharpen the survival of your offsprings instead of pampering them all the time, making them you know robbing them from the opportunity to become independent, sustained individuals?
Very interesting question. So I have a friend who he and his wife had a child a while ago, and then now they've, in the last year they've had another child, and the way that they're raising their children is, in my opinion, very good. I'm not a father. I do not have children, so I can just answer that for you straight up. I do not have kids. Also, do not intend on having children. But that's neither here nor there. I think that, per your question, artificially creating hardship, I think, is cruelty.
You think so?
Yes, I think so, because it's artificial. If you are naturally going through hardship, I think that should be sufficient. That should be enough. But if you purposefully go and create a negative circumstances and then kind of like seeing how your children reacts when they're going through it, I think it might be a little bit cruel, because you yourself may not necessarily have gone through artificial hardship. You may have gone through actual hardship or circumstantial hardship based on your surroundings and your circumstances back in the day. Why do you want to treat your children like that when you yourself didn't go through that?
Yeah, I do understand that. It makes a lot of sense. Yeah, it sounds like cruelty, but what if you as a parent, you're so financially well off that you basically eliminate your child of having that opportunity of some hardship to reach anything in life, and everything comes in a silver platter? Aren't you creating the perfect you know uh situation for a lot of suffering later on, because not having the skills to overcome challenges because they never had to?
Okay, so this is a very, very interesting topic of conversation. Hypothetically, this is all hypothetical. If I was stupid rich, let's talk like I'm on the top of Forbes 100, kind of like rich, that list rich, okay? And I had children, and my children want for nothing. They would have everything at beck and call. If they needed the best of everything, it would always be there. What you're cultivating is a certain person that is, their ideals
Baby.
are based. Yeah, maybe.
A grown-up baby.
Yeah, just entitlement, ego, that kind of like thing. However, at the opposite, if I were in that scenario, if I was that stupid rich level and I had children, I would teach them what it is that I was taught. I would teach them how I was taught. The same idea. I would not necessarily have them shunted out into the world and say, go and fend for yourself. You must experience poverty before you can truly, experience the loveliness that is not poverty. No, I won't do that. I would most probably try and teach them certain values and certain morals that they can then use to build something for themselves. But I would be there to assist, because I think that that's what a parent's role is. A parent's role is to be a teacher, and I think a parent's role is to be there as a support point. So if children grew up with a very entitled mindset, I would probably do the thing of trying to create balance and kind of take away things from them. So, sorry, you're not going to get a position in my company because I'm the head of the company and you're just automatically going to get one. You're going to start yourself in the mailroom and you're going to work your way up just like every other person. So I would treat them the same way as any other person, and there won't be favoritism or nepotism in that case. Just as an example to that, because I understand what you're saying. People that do grow up in vast wealth sometimes do have that entitlement side, or at least, don't worry, daddy will provide me with what I need.
Yes, to that point, for example, if let's say to you, giving your kid a luxury car as the first car, just because you can, and it doesn't cost, it doesn't matter to you financially, what would that make that person later in life? How would that affect him or her? To appreciate how much work normally to get a car or a vehicle cost, and how would they appreciate and conserve and take care of that car, if it didn't made any effort for them to get it. Wouldn't it be better for them, for example, instead of just giving them a luxury car, make sure that they are given the values to work towards, and of course you will support, and you will make sure that they are in a safe car, but not necessarily just given with a golden spoon, and that's I think you're doing, not you specifically, but I mean someone who's, we know these things, but that person, that parent would be doing more harm later in life than actually helping the kid growing up and appreciating hard work ethics. In order, if you are, if you want to reach somewhere in life, you need to work hard for it, and that value, if you just give them a luxury car, is robbed. The opportunity to learn that value is uh, robbed them of it.
Yeah. Maybe me saying it's cruel to create artificial hardship maybe was an incorrect statement. I would rather venture to say that creating artificial hardship baselessly is cruel.
But if it's okay. No, of course.
Yeah, if it's with the idea of teaching and instilling certain morals and certain values, that makes a lot of sense.
Yes, it's not suffering. So if for no good, put them,
go and drop them in a work camp and say, work your way out of here.
Yeah. That's not that extreme, but I mean, common sense, thinking about values and how to best raise a person, and how to give them the best opportunity, not rob them from hardship and challenges that you and I, or most of us, used in order to form into the grown up person, and being able to understand that you have to have a good work ethics, a strong work ethic, and in order to reach anything in life, and it doesn't matter what.
Yeah, I also just think that if the hardest working people, or if hard work was always paid what it was due, the hardest working people would be the richest people. And it's not always like that, unfortunately.
At all, it's not like that.
Yeah, unfortunately, life does play a large role, or there's a lot of portions in life that plays a large role in that, rather than just hard work. But when it comes to the moral side of it, the value side of it, the importance of hard work, it's not just physically working hard, it's putting in effort, it's discipline, it's realizing that you don't get something for free, and that there has to be some sort of either sacrifice or some sort of willingness from the participant side to be in there. Like, to give you an example, if you look at the royal family in Britain, so the two princes, Harry and William, yes, they were born into royalty. Yes, they were born pretty much with a silver spoon in the mouth, if ever there was. However, they still were forced to go and serve in the military. They were still held to the same stringent rules and regulations that the military has for anybody. They weren't given preferential treatment. Yes, you can argue that they were all in high ranking, like officer levels and whatnot. They held certain levels and so on and so forth. But the same thing, they also had to get as fit. They were not given preferential treatment at all. And you can consider that like there's a very lovely word for it that is escaping me now. But it's like almost like a coming to age thing, where in order for you to be considered either an adult or considered part of the royal family, that kind of like thing, you need to pay your dues. And your due is you need to go to these war-torn countries and you need to serve in the military. So that is the idea of an artificial hardship, because
exactly
that is part of our culture in this family, and that's how you learn certain things. In this case, it's duty, it is hard work, it is suffering, and blah, blah, blah. You learn about all of these concepts, you get to see it firsthand, and then maybe there's an appreciation that is built out of it. So to that,
yes. No, go ahead.
No. My sentence is complete. Full stop.
Oh, okay. No, I was going to say you basically, in order to as a parent, the children always have the unconditional love, but in order to ride the wave that the former generation started, you got to earn your right to be there. That's something completely different than the unconditional love parents always have and always will have for their children.
There's a certain duty.
So, yes, I think so. I think it's that's the last thing you wanna have is the knowledge that you're having something because of someone else's efforts, not of your own. Right? You want to have it because of your own merits, your own hard work, and you can own it because it's you gained it. What's that? Oh, that's NASDAQ.
This is
that's
New York Open.
The Open. Yes, I just noticed. All right, so the it is a minute ago. What
is that?
It did hit.
That's the chart, Victor.
What the hell is that? That's an unidentified object flying right there on our
what
charts.
What is this thing doing, moving like this? Victor, it's the market, my friend. It usually moves like this during New York Open. Why am I only seeing this now? Because you have technical difficulties during the day, Victor.
It's bank holidays, right? I saw that
JPY.
earlier in the but also it's a holiday on certain parts of the world, right? Not a bank holiday everywhere, but some in Latin America it is. It's the day of the three kings. The three
kings.
Yep. In some parts of the world. All right, so the
quickly search that. If you
would you like me to put my let me see. Where's my
put your
screen
up if you want to? I'm very interested in what is this Day of the Three Kings?
Yes, it is. In the meantime, I will be looking at EU as we are here. I'm not pretending to be one, but it is today the certain parts of the world the holiday of the three wise men, or sometimes three kings, also called. All right, so let's take a look at. Actually, let me put back that order block right there. Let's start from.
According to this,
I beg your pardon.
It according to what I'm seeing here, it was the 6th.
Oh, it was. Then my information is completely wrong. I stand corrected.
The Epiphany
the
Day.
Month. Okay, so I got the holidays a little bit mixed up. I did see it was by some reason I thought it was the Three King. I think you're completely correct. It was a single-digit number in January.
Well, I don't know this thing that was the Three King Day, the Epiphany Day. I did not know this, so I was taught something today. Even though the date that you had was a week ago.
Yes, well, thank you for being so kind to my mistake. The On the higher time frames on the monthly, we can see a order block, can't we? We can see order blocks everywhere. No, but we can see a quasi right here. There is a fresh, it's not fresh, but a head, left shoulder, neckline breaks it, forms the second or the first right shoulder, and presumably expands the pattern, and presumably is coming back for a second right shoulder. So we should be signs on lower time frame, weekly and daily, for a possible reversal from these levels. Which levels? This monthly order block and the one above that. And let's go back, or not back. Let's go, recent time price action. Uh, right here, what do we see? There is a initial reaction and then a more marked reaction to the previously described area, and it creates a fresh order block, right? So this is the era, this is the moment, maybe not this month, but this is the moment, this first retest of that fresh order block, that could be the sign market should and will show us whether or not it wants to make this move, which is logical. It's to be expected based on the monthly price action sequences. On the weekly, there is no break of structure, so at least not yet. That could come into the future, but so far there isn't. What we do have is there was a borderline. I didn't mark it as an order block, but it was a almost engulfing here on the weekly, and because it hasn't, that makes things a little bit in limbo, so to speak. We don't know if the weekly definitively wants to move away from the resupply area on the monthly, so we'll have to wait for more price action on the weekly. However, on the daily, we are seeing the market moving quite technical. There was a nice quasi here, right there. That's the left shoulder head neckline expansion of the pattern, and it goes to the only order block left on the pattern and reacts twice from it, but both of them respecting the entry order block on the daily, moving down all the way to where before it has a reaction, before it goes to the bullish entry order block, so the opposite pattern, and moves and reacts from it. Today, first day of this reaction. What am I talking about? This candle. This is the daily, so it is today's candle. And let me indicate what the pattern is. The pattern is basically, this is the quasi, right? That is the quasi, the bullish quasi, smaller one within the bearish bigger one that I just indicated. And that's the reaction we're seeing here today. It's one of the entry order blocks long. As you can see how beautiful the market works, fractal and all, but also on both sides. It's showing, both market participants, longs and shorts collectively are creating these reversal patterns at the same time. That's a beauty in itself. And you can see how the market reacts on these order blocks, and likely, if it breaks the first one, will also have a possible reaction on the second order block. And who knows, maybe that is what it needs to actually push much higher. We'll be watching that, but to get conclusive information, it is waiting for today's candle to close and price action on the lower time frame. Let's do that on the H4. We had a beautiful reaction of, you can see this. See, look at that. Why did the market top at that specific point? Anyone in the chat, show us your skills. Why do you think that today's high was where it was? Let us know in the chat if you think you know the answer. In the meantime, while you're thinking what the answer could be, consider the like button. Subscribe to the channel. We've already smashed 200 likes, and we want more. We are hungry. We're ever, always hungry for more likes. So please feed us some. And let me do check the charts again. So what is the reason in quasi and OB land for this the high of today to be at the place it is? Well, if you are on the lower time frames, you wouldn't be able to see it perhaps, or maybe you would. I don't know. But well, there are lines here, already telling us, there was something there. But what was there? Let us know in the chat if you don't mind. Um, Let me check the chat. How far you guys are on your price action reading skills. All right, so I'm gonna give you while we're waiting for more answers. Look at that. What is that level? That is the monthly, right? Let me double check. What's today's high? Today high is that's 1.16985. You can see it on the left upper corner of the screen. At the OHLC, it's the open, the high, the low, and the close of each candle we hover above. So from today on the daily time frame, the high is 1.1698.5. If you go to the monthly, what do you see? What is the lower border of that order block? The order block that I was just talking about, 1.1698.1. So basically, price pushed 4 pipettes before setting in today's high, at least at this current point, and that's where the market reverses from. It's not magic; it's just order block at work. Very very clear, very technical. You can see how the market has been, pushing forward very nicely. That's not the tool that I was looking for. Pushing forward with impulses, creating a first reaction here on that blue line. Let me double check what that blue line was. I'm not too sure here. I think it was the weekly, if I'm not mistaken. Uh, Maybe it was some other. Let me double check this. Not sure here, but oh, it is the open of that is the actually order block. Let me double check. So basically, what I just said, the lower border of that order block is a little bit lower. It's at 96, so it's not 4 pips. It's 2.5 pips, which is on a monthly scale is still, very surgical precision. So the blue line is actually the order block, the lower border of the order block. Somehow my monthly order block got moved by me. I'm the only operator of this PC, so it must be me. If you go to lower time frames, you will see this is the lower border of that monthly time frame, and it had a actually. I said 2.5 was surgical, but this is the high of today, right? So it was 2.5. That's as far as price was able to reject from it. But look at the surgical precision of the first attempt to get there. Let me go to the 1 minute just to highlight how precise these levels are. Look at that. What is that? What is that? Also, I mean that's what do you call that, Rich?
Picturesque.
Wizardry. Wizardry.
You were
thought you said that.
Sorcerer.
Sorcerer, yeah. You can see. Let's measure the difference, the reaction we had. That was 2 pipettes, tenths of a pip.
That's
the first reaction. That's basically spread, yes. And you can see price action as we came back for the second retest. We pressed through it, and the low of the candle was exactly at that level. I mean, does that not scream? There is a level here. There is something here on the charts. You won't be able to see it on the on the intraday charts, but if you look at the higher time frame, and people ask, why am I starting with the monthly time frames all the time if we're trading intraday? Well, these are the moment because the market reacts off of them. And that's money to be gained by knowing where they are. And not only money to be gained, I mean, if you're on a long position, what the hell are you doing, putting your TP above that level? You shouldn't. You should have your TP in front of it. You should front running that reaction and getting out before it has that reaction, because you never know, that might be the only time it comes there, because it's such a higher time frame. It may bounce from that and never come back, and you'll be hanging with your lovely profits that are no longer looking so lovely. So
Yes.
that is the H4 order block. That reacted on the monthly order block right there. Very technical, very beautifully. And you can see here how the monthly, not the monthly, what am I saying? The H4 is coming back to a flipped structure, right? Coming back. Well, we'll have to wait for the. It's too early to say that it bounced there. There's still 3 hours, so it can totally go through it without reacting it. But having it here makes a lot of sense. Having a reaction from current level makes a lot of sense because we did have a broken structure, bullish structure that it was already flipped, but it's flipped again. So that's a double flip. Sounds like an acrobatic move from the Olympics. But
It does.
let's go back. It does, right? It's like a mortal double flip, like a. So let's see what else can we see on the higher time frames. Not higher time frames, but am I moving these structures? All right, so you can also see something quite nicely. We had a 4 hour order block that didn't exactly created a buy signal when we had there. It was the end of Friday, the end of the day. But you can see how these levels are being used. Not that line, but how these levels are being used. Look at that. That is the entry order block on the quasi. The daily, I mean, but it has an H4 in it. Now the structure is too big to be traded as a quasi. However, that just means that my rules as I decided them to be, arbitrarily, but deliberate and data driven. But the
I was
fact
about to
is,
say
the structure is.
data-driven.
I beg your pardon?
No, I was just agreeing with you that it's data driven.
Yeah, it's data driven. It's arbitrary in the sense that I decided it to be there. I could have decided to have the rules to be a little bit different, but it's based on the data, and I decided how to frame the data and what exactly I wanted to capture from the information I got from the data. So it's not completely, it's not randomly. It's a deliberate level there, and everything, the order block decision, where it stops and begins, as well as how I trade it. Those are you know arbitrary, not arbitrary, that sounds like random, but with intent, decided based on data. And you can see how these structures, this is an H4 from how many days before. That's a long time.
It's
uh,
it's like a month.
yeah, that's 32 days. That's calendar days, so a little bit more than a month. And you can see how the market, if you go to lower time frame, let's say to the hourly, the market respects these levels and reacts off of them nicely. It's not perfect in the sense that sometimes it does squeeze, but you can see how while it was squeezed, you would say, this order block, the daily, no, I'm sorry, not the daily, H4, you could say, well, it wasn't that strong. Why was it squeezed? Well, maybe at that time at the day was a high volume moment of time of the day. So market is more able to squeeze and mold these levels, these areas, and go out of the lines. But if you see how it pops back and see where the move is reversed for the big move that there. I'm making scribbles, I know, but hold on, be patient.
There's method to the madness.
All right, so let me mark it now. This is what I wanted to show. That's the swing point. That's not what I wanted. I keep fumbling around with my chart, but
There's
it's
some gremlins or something in your computer at the
there.
moment that is making it difficult.
All right. Maybe it was the mojitos of yesterday. Who knows?
Ooh,
The
okay. Now we know why you were late.
just no, just one, just one. We had a squeeze, right? A squeeze we had right here, and we had and you could think, quite reasonable. Think, well, the order block isn't as strong as it as you would expect or imagine. However, that doesn't mean that the structure is gone or broken, or that will not have any reaction, because as you can see, look at how the market comes back to that order block on the 4 hour, right? This is the 1 hour, but it comes back and basically at the end of it reacts to the lower border of that, and off we go. How many pips? All the way to a monthly structure to stop it. That's about 72 pips out of from of that H4 order block. So I don't know. That's, to me, that's a thing of beauty. I like seeing that, and that's the confirmation why I should keep doing my trading based of these concepts being quasis and order blocks, because the market keeps confirming how effective they can be. Right. So, do we have a trade? That's the question on our mind, right? Do we have a trade? We do have a fresh order block that was created off of that reaction. There is one thing I have to say though: the reaction was the first, based on the first candle on the rollover from weekend rollover, should I could say, and that those structures are particularly not very effective. So the order block, the outside bar that created this order block, is at the end of a session, Friday into Monday or Sunday, making this a structure that I will not be able to use. But it's still there, and price will have its reaction. Just simply, I don't trade it. So that leaves me with no structure to be trading. And even if it was a valid, it's the low of the day. We're already completely. I don't expect price to be going there today. So there isn't really anything for me to trade for today. Only that reaction we had on. I think actually a scalp off of that level, that precision surgical level, and I took a long from around here, and then a short. Actually, I had three scalps, today. But so that is EU not offering me a signal to enter, but beautiful technical price action that I think everyone can appreciate, if you know what I mean. So Richard, you're trading NAS. NAS is making leaps bullishly. Are you in a trade, or are you looking to get into a trade?
No, I am in a trade on one of my accounts, not in the stream account. I couldn't get the trade in on both. I only got it on the one. It is currently... Oh, I got in at 25,706.61. Going for a 1 to 1.5 right now, even though I don't have a take profit on my trade currently, so I'm only trading with a stop loss at the moment. Let me just confirm.
Was that same entry as Martin is discussing here?
Not entirely. Martin has a different way that he approaches NASDAQ. He gets in on the hourly. I see he's put his trade on the Discord, and I had a look at it. He got in a lot lower on NASDAQ, but his trade has already taken profit. No, mine was not on that massive movement, but on an attempt at a retrace and then a continuation up higher. So I think Martin's, I can give you the exact entry point on Martin's. His entry point was 25.8 or 25,581. So 25,581.62. So his was all the way down here.
Let me put your in on the stream. Go ahead. Oh, that's a nice one.
25,725. So that's it. Something like this, and his stop loss was at 505. No, 515. 505. 505. Somewhere over here. Something like that. So this is Martin's trade. Very, very good trade in my opinion. Looking very good. He front run this attempt at taking the low down here of the previous day, so Friday's low, tried to take. I wanted it to dip a little bit deeper. I wanted to at least come and take the low out completely before it started pushing up, but it didn't, unfortunately. But still a very nice trade in terms of what he had tried to do there. What I can see is that there is a small little area over here that was definitely reacted off of a little bit better than the one that I had initially wanted to react off of. So last establishment to try and break price lower from these lows over here. This is Thursday's lows. We had the local high over here that got broken by this initial movement over here. We had a singular reaction on Friday morning during Tokyo, and then we had this double wick, this strong wick lower from the news that pushed price to a new high. And then coming into today, we just wicked down here, which was the low of the day, and then we started having this slow upward tick. There was a local high that eventually got taken. Theoretically, I was supposed to be in on this candle over here. Supposed to be in on that one, but not on a Monday. Mondays, I wait for New York to open up first. It was a little bit too close to New York in the first place to kind of take the trade. But this is Martin's trade. Very good. He already took profit on that one. Mine, I waited for the New York open. It pushed it higher, made a base. Tried to push lower, failed, made a small little wick below, and then I entered on the close of this candle, but I got what do you call it? Slipped a little bit, ever so slightly. So I'm currently sitting, according to this, 30 pips or so, which is halfway to my 1 to 1.5 R, so 0.75 R at the moment currently running. I do have two base areas, one that was already taken, a secondary one that was wicked above. I would love to see it break and close above this point. Another 3 minutes on the 5-minute chart. That is the highs of Tokyo session. So we've wicked above, we haven't broken above. And then we have the previous day high where we had a structure shift. So I would like to see it come and test up over here. But I am happy to close it out at a 1 to 1.5. Because why not? It's in line with my strategy. So right now looking good.
We have a question from someone, a certain viewer, a very valuable viewer, Jose David, asking, do you recommend Oanda for the trades done in the 5 phrase? What would you respond to that? I know what I would say, Richard. Do you use Oanda? Do you use other price feeds on TradingView or not?
So for NASDAQ, for US Tech, I use IC Markets. I've come to the pricing is not that different from the Fivers or the information that I get on the MetaTraders platform. So for US Tech, for NASDAQ, I use IC Markets information. It's pretty accurate, or at least near enough accurate that I'm happy with the information. So right now the price is 25,738, and if I go to here, it's 25,704. And this is the Fivers, or this is a Fivers account. So 25,704 versus 25,739.9. So it's near enough. For AUD, USD, for EU, for GU, I use Oanda. The same thing. So let's just look at EU at the moment. EU is 116,774. Go to EU on this one. It's 116,766. So 1765. Go back to this one. 1764. So it's near enough.
3 pipettes. Yeah.
Give or take. And that also takes that I have latency with my my terminal. So if you go down, you'll probably not see it all that well, but if I hovered all the way down here at the bottom right, you will see that I have 172 milliseconds of latency. So
that's not bad.
Yes, but it's not great either. But the point still stands that the deviation is 3 to 4 pipettes with a 180 millisecond or 175 millisecond latency. It's as close to the actual price as what you're going to get. So do I recommend using Oanda for some of the Forex charts? Yes, I do. Because for me, it is the nearest price to what I've seen the Fivers have on their platforms. So it's not for everything. Like I said, for a US tech, I use the IC Markets information on TradingView to see if there's correlation.
Yes, that makes a lot of sense to me as well. I've seen that Pepperstone or IC Markets, those very sharp brokers, they're very sharp in spread. I mean, brokers have great feeds. And if I would be scalping and every pipette, it would be important. I actually want to have those above a Oanda. But the issue is probably because of where these brokers are based, they start their trading session slightly at a different time than Oanda, and that makes that the H4 order blocks on the first of the week and sometimes the first of the month, there is a slight difference between the price free from IC Markets or Pepperstone compared to the Fivers and actually all the other venues that I trade from as well. So for that reason, I use Oanda for my TA, meaning my breakdown, my overlaps, my order blocks on the hourlies. And since it doesn't really matter too much, any difference on the lower time frames, a few pipettes here and there to me as well, as if you're trading manually, those differences are not as important. So I stick to Oanda, but I would, if I were to be, going very precise and every pipette would matter, then I would rather switch then to Pepperstone. But I don't do that. I don't need that. And 116 milliseconds, if you're trading manually, I think that's acceptable. If you're an EA, and if you're scalping as well, and not necessarily an EA, but if you're scalping, then that could be because you have to calculate. That's only one way, back and forth plus the precession and execution time. It can be up to half a second, which is still not catastrophic, but you could be starting some of your execution, see slight differences. But as I said, if you're manually trading and especially if you're not scalping, then it doesn't really matter. That's perfectly fine. On the VPSs, I get a 1 millisecond, but I don't see any difference with 8 milliseconds I get at home from the servers, or 100 when I have VPSs, in other parts of the world. So I've measured the differences in execution, the edge. It doesn't really erode, even if you go to 90, 100 milliseconds. So I from at least from my strategy, it does not really hurt. I can use all of them.
It's more to do with the execution itself. There is a slight delay that and I've only ever had ping, and when I look at, for argument's sake, doing backtesting, the backtesting information varies from where I've actually taken the trade. As an example, I've had an EA that I calculate, or that my brother made for me, that I used to test something, and then I actually took a trade based on that. The moment I saw the information, I took the trade, and there was a relative difference between the information that I got manually putting that or entering that trade versus what the bot got from entering itself, and also with the back test as well. So the latency does play a role, at least that I've come to notice. But does it impact my trading? No, not really all that much. I think I give it enough room to breathe, so it doesn't really impact all that much. But Victor,
we have come to the end. Yes, we have certainly come to the end of our stream. I thank you for pointing that out, Richard, reminding us, even though we love staying with our viewers as long as possible, and that's what we do. We do everything in our power to be, present on these streams. Let's thank them, everyone who's watching. Let's double check how much likes we got today. I'm checking that as we speak. It's gonna take a second or so. Checking here the number of likes, 288, according to the tab that I just looked at. Thank you. We passed the 200 likes today with colors, and that's thanks to everyone who made that marvelous click that I keep hearing in my dreams. No, I'm just kidding. There is a workshop today on the Discord community. All of you, including your neighbors and the neighbors of your neighbors, are welcome and invited to come and join us. It's going to be on the Discord of the Fivers, the best prop firm in the industry. That's not my words. That's actually reality.
It's my words.
I beg your pardon?
I say that's my words. It's the best.
Oh, how to get in on the website. You go to where you can see your accounts, left upper corner. You should see a little Discord icon there. And if you don't have an account, then you know what to do. That's it. It's free and it's the best Discord server out there for a reason. That's it for us for today. Thank you, Richard, and everyone before me for doing such a great, lovely work. And I enjoy working with you, Richard. I appreciate you.
Thank you so very much. I really appreciate you as well. I just want to, for full clarity, I just wanted to say that I closed this trade at 25,724.668. Come on. 24.68. Anyway, I closed it at 24.68 because of the fact that we were having this 2-wick rejection and we were just not breaking above this. So I have closed the trade for roughly, what was this, half. So no, this is a little bit more, slightly less than half R.
0.4 perhaps, 0.4 R, something like that. Yeah. All right. That's it for us for today. See you tomorrow. Bye-bye.
Cheers, guys.